So
you can see the ripple effect.
All right, good morning.
One of Jensen's theories that he laid out on that is that you can financialize their.
This is Rocket Labs down a little bit this morning. CoreWeave reported last night. CoreWeave is up. CoreWeave is up a lot. CoreWeave is trading 108.13.
Their GPUs, I think it's 6 years now. So they'll talk about, I think they mentioned this in their last earnings report, but not 100% positive, how Hopper is still doing incredibly well. Hopper is their prior generation chip. So, their response has been, our chips continue to do well. They continue to be in high demand. Even the older ones that are supposed to be kind of, on the way out. So yeah, I mean, there is that obsolescence at a certain point, but that kind of, I think, applies to everything when it comes to.
Okay, let me get everybody on here.
In general.
Yeah, I mean, that's something Burry has been talking about. I mean, and speaking of like the spread out risk, he has a graphic, Michael Burry, that he posted this morning on X that I'm probably gonna have to read another 10 times to fully but it speaks to, but on the one side of it is the U.S. retiree who's buying what they consider to be a safe annuity that is invested in all of this stuff. And so, what ends up happening with it in the end, he is less optimistic on, but there's a lot of optimism.
Do you want your 2065 target fund holding some of this? Maybe not.
Maybe you do. I don't know.
Maybe you do. Maybe you do.
or maybe you want to own one of the IPOs coming out. It's not SpaceX. Maybe you want to own Anthropic or OpenAI. And there's stories on that front. This morning that the Wall Street Journal has a story that the Anthropic folks have been going around trying to, kind of shore up confidence ahead of its IPO. And then there's some more talk about more, sort of executive changes at OpenAI. So obviously they are going to have some work to do here as well.
Yeah, I mean, Anthropic, they have obviously done better than OpenAI as far as messaging and appearing as though everything is kind of on the up and up.
Also valuation.
Good morning.
Valuation, yes, they have the higher valuation. That's a result of Claude Code. They kind of took the code in.
Morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprince.com. It is Wednesday.
It's just that they have all these public issues, whether that's the Elon Musk lawsuit.
CPI was benign this morning. Futures are up, as you can see. It is August 12th. We got about 7 minutes to go. Let me get this running.
They're going out and saying they've kind of become a pariah almost in Silicon Valley because of the way that they talk about AI, where in Silicon Valley it's AI, it's awesome. But Anthropic is saying it's awesome, but we should also proceed with some sense of caution. And so, we've seen these
6 minutes, 30 seconds to go. CPI came in at basically even, 0.1%, 0.1%. Forecast was for 0.1%. Previous was minus 0.4%. So markets like it so far. SK Hynix is up quite a bit. SKHY is up quite a bit this morning. Turning back up. It's right here now. SK Hynix, almost 150. What is SpaceX doing? SpaceX inside day. Top stocks on the NASDAQ 100, CoreWeave.
But it's true that they're waiting certain things to find out. So we'll see. All right. Thanks a lot. Appreciate it.
All right, let's get ready.
Ryan opens his fidelity app, sees his opportunity, takes it. And that's his investment to on that. That was easier than I thought. It's a good shirt. Well, it's like flowers, but also a cat. Sure helps.
Start investing with no accountants. Talk about easier investing.
My name is Noah. I am 11 years old. I'm a St. Jude patient.
Every minute matters for the children at St. Jude.
All right, 5 minutes to go. 5 minutes to go. Get ready. I'm going to post a few things here. That should be helpful. Okay. Top 10 NASDAQ. Top 10 NASDAQ posted. Okay, so let's look at these. CoreWeave. CoreWeave is up quite a bit. Pre-market high is going to be up here near 110. We'll look for some profit taking. Nebius and by NBIS, that's been active lately. Jumping above the 50-day. Nebius above the 50-day. Gap up. All right, Lumentum, LITE, LITE, wow. ALAB, AHAB, the ALAB. Astera Labs up as well. Nebius, NBIS, CoreWeave. Marvell, let's see what Marvell looks like. Marvell, we've got 2 minutes to go. Marvell, let me get CNBC going here. What's going on? Okay. Marvell. Okay, that's in the, that gapped up too. I just didn't see this little hammer down here. That's looking pretty good. 228, maybe that follows through and pushes to the 50-day. We're looking for the New York Fangs to be up. They are looking better than yesterday. Broadcom is up again. For Nick, I have a position as well. I believe Dollar might have a position. I'm not sure who else has a position in Broadcom, AVGO. AVGO up again this morning after being down yesterday, shaking the tree, looking for a move into this gap overhead. Okay, we got 40 seconds to go. 40 seconds to go. Oh, come on. There we go. All right, Broadcom on the move. There goes SoFi is on the move. SoFi. Seen a lot of advertising on SoFi lately. SoFi is trying to break back up towards these levels. Okay. Broadcom. Let's see. Let me put SoFi up here. SoFi. Okay, a little profit taking first thing. Okay, Broadcom. We put Broadcom over there. SK Hynix on the move. SK Hynix. Big move for SK. Jump in on the daily. All right, so we got these pivots right there to deal with now. SK Hynix. SK Hynix, gap and go. All right, futures pulling back a bit. Check your profits. You might want to take a few things off here. Okay, so SK Hynix is up a lot. I got the March 170, 175. Okay. Futures starting to fade a bit more. Let's see what hedge flows are looking like. If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. Got a little down bar here. I guess they're looking for PPI tomorrow. CPI was benign today. It came in at 0.1%. Forecast was for 0.1%. So it was flat. NVIDIA's on the move. SK Hynix. The chips seem to be on the move right now. So check out your favorite chip stock. AMD had a bounce yesterday. That's gapping up. AMD, NVIDIA. NVIDIA's looking good. Let me see what I want to do with my NVIDIA position. Do I want to take some of that off? SoFi is up a bit. Okay, App 11 saw some advertising for App 11 this morning. So everybody's advertising. App 11 is still down here at the lows. Trade Desk, what's Trade Desk doing? Trade Desk trying to push a bit off the low. Still down there basing. Probably stays down there for another 3 to 4 days. Okay, Micron, looking for a bounce in Micron. Micron turning the corner for Brother Bill. Cup forming. Right side. Let's see. STX, Seagate Technologies. All right, just to be clear, I'm watching the pre-market highs, how we handle this open, and the opening range breakouts, looking for those breakouts. S&P, nice little move back up to yesterday's opening range high and seeing some sellers coming in. Okay, we want to stay above VWAP. Want to stay above VWAP. Otherwise, we could get a fade like yesterday. All right, so be prepared. If we start to fade below VWAP, we'll have a short on the S&P 500. Let's see. Let's boost this a little bit. Okay, there's still a lot of negative gamma down here. We're right in the middle of, this is telling you, the red is telling you look for fast moves in either direction. So this little dip could get bought and jump back up to the highs. We could also start to accelerate lower. We got these levels down below. Okay. Let's see, 99 percentiles. No, 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 no. All right, let's look at non-zero day, 99%, 99%, 99%. All right, these are all 99% levels. Okay, I'll mark those up for you. All right, so this is 7750. Okay, that's the closest, 7750. Okay. Give it a little time for the market to settle down. What is that? That is, so 7810. 7810. We are looking for a bounce back towards 7810. This might be an opportunity on this bounce. $77.25. Okay, so you got support and resistance. S&P early. The significance of non-zero day versus 0 day. 0 day tends to run the show. So my son got an eagle yesterday on a par 5 over at Legends Golf Course. He's all excited. I think he's going to go hit golf balls now. I think I hear him open the garage. So good for him. All right, SpaceX on the move. SpaceX popping. No, that's my wife. Oh yeah, that's Antoine. Okay.
Yeah. Oh God. Okay, that's messing up. Hello.
Which course are you going to?
Hello.
Which course are you going to? You going to ours?
Hello. Okay, there we go.
Which one you going to?
Hours.
Okay.
Okay.
Take care.
That's it.
Okay, so all right, this is looking good. SpaceX on the move here, looking pretty good. S&P is holding up. SPCX, SpaceX with a nice pop. We're looking for a follow through. We're above the pre-market high. We want to see this continue. We're starting to sell back into this, so we'll see how this holds up or not. NVIDIA is looking okay. Okay, Snowflake is up. All right, all the other New York banks sold off on the open. People taking profits, not taking any chances. Hey,
Hello?
listen, if there's a course, ask them if there's a course, a professional there that can give you a quick tip, like a half an hour lesson or something like that. I'll reimburse you.
Okay.
All right?
Okay.
All right, bud. Okay. My apologies. Kind of a little sidetracked there. S&P is still fading. S&P looks like we're going to have a fade day, unfortunately. Right where we were yesterday. Okay, we hit that high. We're going to hold. We got to get back above VWAP. Otherwise, this could turn out to be a fade back down to those lower levels I just posted at 77.50, potentially. Okay, let's see, 70. Let me just bring this down here. 77.50. We already hit 77.50 so far. Okay. So far, we hit 77.50 and starting to show signs of a bounce. Okay, let me go here. See what Trace is doing. Okay. All right, so we want to see the hedge flow line turn back up. We're at 77.50 right now. Okay, New York Fangs still look kind of ugly at the moment. Rocket Labs pushing off. Okay, that looks pretty good. Rocket Labs. SoFi. Rocket Labs.
Slash momentum on the side that says figure it out, because you've got the current governor of California and you've got the Democratic nominee, I believe, is he the nominee, Becerra, for governor as well, both saying figure this out. You've got Macon Del Rahim, the company's general counsel, in a public forum yesterday talking openly about moving to another state for Paramount if things don't go their way. And so, will that be enough to pressure the AG of California? And then there's some of the other states that are a part of this. How strong is their desire to actually go to trial? By the way, trial for which is not till March. So you're talking about many, many months between now and then, which is one reason why we talked about this last week. Why they're really
Rocket Labs.
Significant need on the part of the Paramount side to try and figure something out. But Bonta's still talking. The same conference Macon was at yesterday. Bonta was, I think, there as well, talking about structural remedies. And that may just, that's hard for Paramount to imagine. But what would it be? How would you go about doing it? Continues to be a question, but we are at least seeing some belief, Jim, that there's pressure being brought to bear to at least get both sides in a room to try to figure this out. And then where do you end up? Certainly there is a plan on Paramount. I don't know exactly what it is to offer something. Right. But the question has been whether the AG, feeling very good and strong right now, given the fact that he's being taken so seriously with this case, would even be willing to do that.
But doesn't Paramount have something in mind that you say an AG who's been
You would imagine that, not to mention the real threat, perhaps, that they will take some of their jobs in the state of California. Oracle has moved to Tennessee, and so there was a belief that perhaps that would be a home.
Rocket Labs looks good.
The lot.
That's
Real estate. But you can't take the jobs associated with HQ.
Rocket Labs, thinking about adding to a long on Rocket Labs. Already have some October calls. Rocket Labs looks good. We're at the pre-market high right now. Rocket Labs. So we'd like to see a volume move through the pre-market high. S&P is still holding here. Okay, let me keep an eye on the S&P for now. That's going to affect everything. The tempo, the momentum. Okay, you're looking at non-zero day right now. Let's look at 0 day, see if there's anything building. 7775, 90%, 92%. There's no 99s on here except for negative gamma, I guess. Negative gamma. No 99 percentiles yet. Let's keep an eye on. All right, we're starting to fade a bit more. S&P.
First 9 days of August, we've already matched almost all of last August, 95%.
How much of that is the Odyssey? A lot? Of
course.
Yeah.
And
Spider-Man. Oh, yeah.
Okay, S&P, we're up here at the high. The probability of a fade, pretty decent. We are looking for higher. Unfortunately, we are pulling back. We're looking higher because CPI was benign. Mic check, everything cool. All right, so that looks good. Okay, looking at the New York Fangs. Okay, so we're holding at this double top. RSI is moving a bit lower. So we need these stocks to perform to help us out. All right, this is fading a little bit. We're still green though. Okay, this is sideways. Momentum is still bullish. It's the bulls to lose at this point. So this is neutral to bullish. All right, let's look at junk bonds. Junk bonds gapping up. High yield corporate. High yield corporate's leading the way. High yield corporate less risky. High yield corporate is trending. The 10-year yield. Okay, that looks okay. And core 1M is at 833. So core 1M is hanging out right near 8. Okay, there goes NVIDIA. NVIDIA going. NVIDIA going.
Over 5 years, but Chile 71%. 71%.
NVIDIA looks good here. All right, let's look at the pre-market high. We want to see a close above the pre-market high on volume. That's a buy right there. Okay. Let's see. Let's buy some NVIDIA. I think I have some NVIDIA already, right? NVIDIA. NVDA. See if we can't get a trend going today. No, I don't have any NVIDIA. I sold my NVIDIA. All right, so let me buy some NVIDIA. All right, NVIDIA earnings. Let me look at the watch list here. Off the top of my head, I forget NVIDIA earnings are August 26. August 26. Okay, so that's 2 weeks from today. 2 weeks from today is August 26. That's NVIDIA earnings. Maybe we get a earnings run here. August 26th. All right, that's a monthly. August 26th. Okay, maybe a 225, 230 by vertical. 225, 230. All right, I bought some 225s. I'll sell some spreads once we get up a little higher. I've been doing that lately. Instead of doing a spread right from the go, I'll buy some calls. As the stock starts to push up, I'll sell some calls as well. In this case, I'd like to be selling the 230s. Got to stop underneath that previous candle. I'll give it about 50 cents for now. Google. Still looking for a bounce on Google. Google. We're watching NVIDIA for now. Google. Okay, right at the 21 day. Let me change this to NVIDIA so I can see what's going on with the implied vol. Okay, NVIDIA. Okay, implied vol is starting to turn up on NVIDIA. Going to earnings. Implied vol will rise into earnings 2 weeks from now as dealers will start to crank up the implied volatility that they're willing to sell. As we approach earnings, the trick is finding underpriced options going into an earnings event like NVIDIA. Let's see, SK Hynix still going here. SK Hynix looking good. SK Hynix. Okay, watch SK Hynix. The chips are doing well today.
Dow stock of the year. Tomorrow morning, exclusive with CEO Chuck Robbins at 9 a.m. Eastern.
NVIDIA still pushing.
They keep flipping between that and Cap. Cisco. Yeah, Cisco's a big player. And that's his quote. But I got to tell you, Chuck he comes on when it's bad too. Let's not forget that. Always great color from Chuck. Yeah. Dow up 66. Stock trading with Jim is next.
All right, I sold at 227.50. I'll make this a quick scalp here. NVIDIA looking good. Okay, SK Hynix, NVIDIA. I have March calls for SK Hynix. NVIDIA. Give myself some time. Okay, NVIDIA watching. Come on, keep going. Watch for the opening range high. Watching the S&P. The S&P turns down, I might close this. I'm very edgy. Okay, what's that doing? Riot. Okay, CoreWeave and Nebius keep jockeying for number one position. CoreWeave, some profit taking, not surprising. Nebius gapped up as well. Can't believe my son got an eagle on a par 5. Legends is a pretty good course here in Myrtle Beach. All right, watching NVIDIA here. Okay, what's Amazon doing? Amazon down at the moment. Datadog trying to follow through on what started the week. Datadog started the week. All right, we pushed a bit lower, looking for a follow through. All of these security stocks are doing well. Zscaler was outperforming. It's off a little bit today. CrowdStrike. Okay, still looking for these to follow through. I can't imagine that the business would fall off at all. And if anything, it's going to increase exponentially with AI.
Let's get to Jim and stop trading.
Okay, so listen, Micron has been kept down. Micron actually doesn't trade with the complex here. Macro it actually trades with Korea. And Korea hasn't been up because the problems with Leopold. It looks like those been digested, and it's time for Micron to fly, and that's exactly what's happening with SK Hynix and Samsung, not with Intel, and not with Corby. So that with the video.
Honhai was another positive story.
Intel gapping up today. Intel looking for a follow through.
The buy windows open again.
I know. I feel bad for the Bears. I mean, they feel like teddy bears today. Like boo-boo. Hey, boo-boo. The best way to stop is never to start.
You mentioned Leopold. We should explain. You talked about Leopold after Brenner. They
You don't
went
need
through.
to. You don't need to explain. Leopold's like, sure.
People don't know who that is. By the way, they're lining up to give him money again. It's going to go into privates largely.
Great.
But that's amazing.
PT Barnum got me. That's just,
Well, he already. I mean, yeah. So
Are you comparing him to Barnum?
well, I think when you lose that much money, I don't know what, but look, this business is a strange business. You always get. That's what the nature of the business.
There's a lot sloshing around, that's for
Oh
sure.
my God! Or else you wouldn't have these stocks. So, look, I think that they should just put it in space.
Tonight,
I have Coherent, which is a version of Momentum.
Okay, Rocket Labs.
Or, this Novo Nordisk is just not hanging.
Nike just fallen off. Nike's gone into the toilet.
they were expected. They were the leader for a while.
What we should be talking about that? That's BURY. Is up for
2 hours.
Nike, terrible looking chart. Nike.
We'll see you tonight.
Look at Nike.
As we mentioned earlier, shares of Momentum
Wow, that just looks awful. Somebody bought the 4250 calls, I believe, yesterday. Pretty big trade, or it was the day before, I forget which. Intel's trying to bounce. Chips seem to be in play. Watching NVIDIA here. Okay, NVIDIA needs to get moving. Okay. NVIDIA.
Schwab coaching is concept.
Okay, here we go. NVIDIA looking a little better.
Schwab coaching is learning constantly. It's relatable, it's practical, clear.
Okay, with a pre-market high break and a move above on volume. So the criteria is mark your pre-market high. So in the case of NVIDIA, I have a script that does it automatically. That purple line is a pre-market high. You can see over here, right there. Right there was a pre-market high. Okay, pre-market high was right there. So that line gets, actually it was right there before the open. Okay, so a move above the pre-market high, check, 1. On volume, 2. A close above, 3. Once you get those 3 ingredients, you want to sell into around 10:30 or so. Why? Because a lot of these prop firms use this particular strategy, especially SMB Capital. We know who we're trading against or with in this case. They appear to be long. I'm watching level 2 as well. Make sure that there's no overhead big trades coming in. If I start to see big trades, 10,000, 20,000 lots, then I'll sell into that. All right, NVIDIA is working. NVIDIA is working. So keep an eye on it.
But you can tap into 30-some hours worth of it each and every week. How incredible is that? And it's free.
Okay, so looking good, NVIDIA.
Data and market moving analysis. Schwab Network connects the headlines to the why.
Okay, SK Hynix is still going. That's a big plus. Okay, we got the opening range high right here. Opening range high.
morning, everybody. Happy Hump Day Wednesday. Welcome to morning.
Okay, opening range high is right here. We want to go through that level on volume, which is going to be kind of difficult because we had good volume already today. NVIDIA. Rocket Labs. SpaceX. Intel. Okay, Intel opening range high is just overhead. Intel looks like chips are in play today. Okay, we're a pre-market high. So we want to see a move through this pre-market high. Opening range, you can see the opening range overhead, that wick right there, starting to build the opening range. So it's going to take a lot for us to take out the opening range high at this point. NVIDIA is still going. SK Hynix looks good. So we got a lot of chips on the move this morning. Okay, I got the 170 strike. So I need prices to get up to here. Okay, that's where I need prices to get. Need SK Hynix to go right there. I have March call, so I have plenty of time. All right, what's SoFi doing? SoFi, a little selling there. Okay, SoFi's got to get above 20. 21, really. I have 2028 calls on SoFi, so plenty of time on that. Rocket Labs, SK Hynix, NVIDIA. Okay, NVIDIA is having a problem with the opening range high.
A little bit later, but we also had a nice night for CXMT over in China and Kioxia. So a big nice rally for some of our chip stocks out in Asia. Futures products looking like this.
All right, so 50,000 lots. All right, we're starting to see some selling on NVIDIA. All right, that's my son's STEM school calling to confirm.
Right now, we do have a 10-year note auction out at 1 p.m. Eastern, I believe. So all eyes peeled on that as far as appetite. We've got the US dollar index coming off a bit. So obviously that comes from the cooler inflation print. What that could mean for the Fed. Gold is higher. Crude oil backing off too. A lot of conflicting reports out this morning. More attacks. The Houthis hitting a cargo ship. The US striking a container ship. The IEA cutting its 2026 oil supply forecast. So we'll talk about all of that. Bitcoin is rallying though. We are up at 63,000 and change right now.
Year over year, 3.5% down to 3.4%.
All right, NVIDIA fading a little bit more. Don't let this go red on you.
Remember, it was unchanged a month ago. 2.5% is the year over year core CPI. That's a 10th lower.
All right, let's see. SK Hynix at the highs, looking good. Rocket Labs, SpaceX.
That moved a bit higher.
SpaceX, nice. So we're at opening range highs. SpaceX is opening range high. Okay, dealing with that. S&P is pulling back. So as I was saying before, if we see the S&P start to pull back, it's probably going to drag a lot of stocks with it. We're fading right now. S&P is fading. Okay.
So you got that airline fares, of course, with travel being so popular, up 2.2%. Motor vehicle insurance down 0.3% again after being down.
Okay, so it looks like we're going to fade here. All right, I'll take NVIDIA off, unfortunately. Unfortunately. We'll try this again later. NVIDIA, I'm out.
It was 466 when the number came out. It's still sitting right at 467 now. So slightly higher than when the number came out, even though it is
Rocket Labs.
Yeah, you wonder.
SpaceX. SpaceX looking a little better.
Yields, obviously, to these elevated levels right now. I mean, particularly when you look at the international picture as far as global yields are concerned. But we do have a 10-year note auction, I believe, out later today. Let's see what demand is like right now. But yeah, you make some really interesting points about the category breakdown here. You wonder how much, the fears around lettuce in recent weeks had impacted fruit and vegetables. But then obviously when you look at the food away from...
All right, NVIDIA. Now it'll probably go.
People are still going out. They're still going out. They're still going out for food and cleaning out. So let's see.
SK Hynix looking good. SKHY looking good. Needed to hit 170 before March of next year. Okay, I got to take a 2-minute break. I'll be right back.
Well, but even with that, a nice pop today off the back of what they've said here. So yeah, interesting move. Bullish trend of earnings season rolls on. Morning trade line is
Rocket Labs looking good. Rocket Labs. Okay, SK Hynix. SK Hynix looks good. Intel fading a bit. NVIDIA, I'll try the NVIDIA again. I need to see more volume. There's no conviction here. We had a pre-market breakout. I did sell. We're back right to where I was selling. So flat. We need to see a break above the opening range on volume. I don't see it just yet. So I took it off. Let's see if we can't get some kind of follow through.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
All right, S&P is trying to turn. Cerberus on the move. Cerberus earnings tonight.
You can bet on this and win. Bet on this and lose. This and lose. This and win. This and lose. This and lose. This.
All right, Cerberus looks really good, right?
Even this, lose.
Or did it already report? Did it already report?
It often rewards patience and discipline over shots in the dark. The long run belongs to those who invest in it. Own your future. Don't bet on it.
No politics, no spin, just the
No,
market.
it didn't report. It gapped up. That's crazy. So somebody knows ahead of time.
At schwabnetwork.com.
We're back to morning trade line. Momentum shares are soaring today after beating earnings and revenue estimates for yesterday's earnings report. Company revenue jumped to 109%.
Did they pre-release or something?
600% year over year. So we've got shares in momentum rallying 7.5% right now. We're currently trading at $883. All right, let's take a look at some of the stocks on the move right now. We do have Supermicro off the back of its earnings report up 14%.
All right, CBRS is like kicking ass here, taking names.
We do have memory rallying off the back of a strong night out in Asia. Let's flip the board and take a look at some of the laggards though on the session, because we have seen a big rotation back into technologies, particularly hardware today. No doubt at the cost of other parts of the market here. Builders first off down almost 5. Chart Communications down 4.3.
Okay, looks pretty good. Cerberus looks good.
We are seeing some weakness continuing to play out in software once again today, as we do hand the baton over to hardware, it seems. So those
Okay, I did close NVIDIA. I'll try it again in a few minutes if we can get a breakout on above average volume.
Nancy, it's always nice to talk to you. You say this is one of the best tapes you've seen in your career. Yeah. Is it driven mostly by the earnings?
It is, but also by the productivity improvement.
All right, looks good.
Continue to drive earnings growth, margins, and then
Okay, NVIDIA looks like it wants to go again. NVIDIA. Need to see some volume.
I think you're going to continue to see broadening out shifts, like you're pointing out today, software versus hardware. We're really focused on the infrastructure build, and so we've been expanding our commitments to those names. So things like
What's Poet doing? Poet. Who mentioned that? I think it was Grover. Poet trying to do something here.
So sort of more ways to kind of play the AI theme as well with the data center build out. I'm wondering, let's focus on productivity. What metrics you're looking at, what you're hearing from the corporate earnings, as to what gives you the conviction that ultimately productivity is going to save the day here, even as we do see jobs coming in slightly weaker. We've had companies obviously having to scale back
Yes.
Their workforce, Oracle's in the headlines today.
Yeah.
About that right now. Airbnb was a really interesting example as to what they're managing to do. Great earnings, great response with their AI agents as well. So they're obviously seeing some productivity there. But what companies do you look at? What metrics do you give an eye on?
Yeah, so think about this as a economy in transition. So it's industrial revolution, technological revolution, however you want to characterize it. You begin to see shifts. So there'll be some jobs dislocation, but effectively this is very similar to the 90s in that the technologies are changing the way we live and work. And so what we're doing or hearing from management, we sit on all the
Okay, NVIDIA is looking a lot better. NVIDIA is starting to look better.
25% less on CapEx to produce the same amount of oil. Or Goldman saying, you know, we're seeing improvements, productivity improvements.
Just don't see the volume. That's the only problem. SK Hynix, SKHY.
Industrials where they're automating.
That looks good. MACD is turning down.
Physical AI as well as general AI. So there are a lot of ways to look at
SpaceX.
This is really impacting.
I got an opening range breakout on SpaceX. See if we can't get the follow through that we're looking for.
Where does that leave the Fed then? I mean, does the Fed matter in all of this? If we ask
Okay, I'd like to see SpaceX take out this high now.
I would say it matters not as
You people, so annoying. Benny, you're getting so cranky in your old age. Yep, that is true. My son said, Papa, you're too cranky. You're turning into an old, grumpy old man. What are you going to do?
Also, we're flashing this thing about the older
All right,
generation.
SPCH, looking good. SPCX, SPCH, SPCU, I believe, is another one. SPCU.
Yeah, it's not insignificant, of course. Is that? I mean, you did the opposite on this yesterday, didn't you? About data center, all the
I
things.
did the economic boost, yeah, basically, because there was just so much negativity around. And look, I think they're valid concerns.
Let's see.
Electricity costs and noise, but I showed that basically job growth comes with it, and housing units come with it, and housing values rise, at least according to some of the data that Wells Fargo put out there, and that we've gotten from some of these counties in Virginia where tax revenues are also skyrocketing, and that is able to lower their property taxes.
Intel looking like it wants to turn back up. Intel. Can the chips hang in there today? Can the chips hang in? We get the top 10 on the NASDAQ 100. CoreWeave, Nebius, NBIS, SanDisk, SNDK, Seagate Technologies, STX, Teradyne, TER, Micron, MU, Astera Labs, ALAB, Lumentum, LITE, Western Digital, WDC, Marvell, and Lam Research, LRCX. Applied Materials, rounding out the top 10, AMAT. Applied Materials. Okay, that's off the opening range high. So the good thing about the opening range high and the pre-market high, it tells you very quickly whether you should even consider trading a stock. If it's below it, maybe it's sitting on top of VWAP, like in this case, Applied Materials is. The fact that it's not breaking higher, I'm not interested. You can see a doji on the right. So I'll go on to the next position. I'll look at like STX. Okay, it's below its pre-market high. Not interested. CoreWeave, below its open range high, but it's starting to turn back up. So that might be an opportunity here. SanDisk, SNDK, in between the pre-market and opening range highs. So if this does break out, this might be an interesting play. SanDisk. Seagate, nope. Teradyne. Okay, it's above its opening range high. So you can automatically see this one's got some momentum in it, and it's probably in play. Whereas, look at NVIDIA. I took NVIDIA, and I'm already out of it. It's not able to get above its opening range high. It's above its pre-market high, but it's just kind of fading. It looks like it's going to fade back to VWAP. to get back to the VWAP, we might have a better opportunity on a pullback. I bought this a little bit high anyway. Rocket Labs. Okay, Rocket Labs is hanging out above the 200-day.
Company, and they are looking to deploy more and more photonics because they're building ever faster compute. And in that context, the demand for these with high power lasers that drive connected traffic has gone up substantially over the last couple of quarters. We fabricate these, we have to manufacture them. So our lead time is relatively long. And so we're having trouble just keeping up with the NVIDIA and other customers are currently putting on us.
Okay, so back to sort of demand as well. How much visibility do you have? I mean, how long, in your opinion, Michael, does this continue?
Yeah, we have.
All right, Seagate Technologies looks okay. Okay, continuing on here. Let's see. Micron, let's see what Micron's doing. Micron off the opening range high. So you can see these are quickly reverting back. Supermicro sitting at the VWAP above its pre-market high, below its opening range high. So I'll pass on this one. Sienna. Nope. SanDisk. It has to take out the opening range high to show that it's in play. You want to see that volume indicating that other people are trading it as well. So you have some momentum. All right, you can see right here, opening range high on Akamai. Let's see what the earnings were the other day. Earnings, surprise, 8.39 million. They beat by 4 cents. Oh, they beat by 1 penny. Okay. Let's look at Akamai. Akamai. Okay, this is Akamai. They beat. They report again in November, so that's out of the way. You got 44% earnings growth. When all four of these are green, those are generally a good signal for higher prices if you're going to swing or start a position. Okay, so this company is in the business of providing, optimizing, and securing online content and business applications. So cloud services, another security stock. So we want to look at the security stocks like Zscaler. That was hot yesterday. Over the last few weeks, Zscaler has been very good to us. Zscaler, CrowdStrike, okay, Palo Alto Networks, and Datadog. Okay, Datadog's trying to get back above the 50, but below its opening range high. So I'll pass on this for now. I want to see the follow through. I want to get into it on a day when momentum is clearly bullish. Watch NVIDIA here. NVIDIA is trying to turn back up. If it gets above the opening range high and we get an opening range breakout on volume, that would be an indication that we can get back in. Took one trade on it already, got out flat. I think it was $1 per contract loss on the vertical. Okay, futures are trying to turn back up. Let's see what futures are doing. Okay, S&P, let's go non-zero day. This 77.50 level is holding.
But I am curious, is there one thing, one major sort of concern that you might have that would derail the overall story? And if so, what is it?
Yeah, we're kind of unique. We have there's a major shift going on in these data centers. The data centers, generally speaking, today, David, and again, you spoke to it in your preamble. A lot of the connectivity is copper. You have electrical connections that are inside these data centers. And if the data center build out slowed to a crawl, we'd still be just fine because you have the second effect where those copper connections are shifting to optics. Light is coming in more and more in the data center, just given the speed and bandwidth our customers require. So even if this thing, as Sarah asked in her question, just slowed way down, we'd be in fine shape.
Michael, appreciate the update.
All right, where is that?
Investors over the last year are also quite happy, I would imagine. Thank you. Thank you, David.
All right, up next, the president could call for a cut to capital gains taxes ahead of the midterms. We'll have more on that. Plus, the AI boom came with promises of disinflation, but so far, we haven't seen that materialize. Look at how costly the AI build out is, complicating the Fed's overall inflation fight. And speaking of inflation, we'll talk with former Treasury Secretary Jack Lew about the big read on today's data. Stay with us.
Okay, NVIDIA is starting to go. Watch NVIDIA here. All right, so we can get back into NVIDIA. Looks like we're going to go. NVIDIA is going to go. NVIDIA going now. Opening range breakout. Let's make sure this isn't a liquidity grab. Okay. Okay, looks like NVIDIA wants to go, right? All right, I'll take that trade again. Let's see. Ooh, where are you? NVIDIA buy. All right, back in NVIDIA. Back into NVIDIA. SpaceX. SPCH, looking good. Okay, we're going to get a move. SPCU. All right, there goes NVIDIA. Good. Back into NVIDIA. Oh, and that takes off now. Okay, thank you. Let's see if we can't get a follow through. Over there on the right, you can see that we're about to take out the pivot high from Friday. NVIDIA Friday pivot high. Okay, let's go, NVIDIA.
Welcome back. President Trump reportedly considering a push for a capital gains tax cut in hopes of gaining a boost
Okay, NVIDIA breaking out.
with the story. Couldn't be going in a bigger, different direction than the socialists here, Megan. That's right, Sarah. So this comes according to current National Economic Council Director Kevin Hampton and former Director Larry Pebble. They were discussing various ways of cutting capital gains taxes on Fox Business on Tuesday. Hampton said that President Trump is looking for promises to make to voters on what the administration will do if Republicans have power in the future. So he said, quote, "You could expect a lot more policy between now and midterm." Pablo then replied that he had spoken to the president, and he says the president likes the idea of indexing capital gains taxes to inflation and the idea of a bigger exemption. We asked the White House about this, and a spokesman told me this morning that President Trump is always exploring new ideas to make America wealthy again, but that any policy announcements will come from the administration directly. Now, a couple of things to note on all of this. This is very preliminary, something that the president is considering asking Congress to do. The odds that Congress would tackle something like this ahead of midterms are very slim. There has been some bipartisan support for pieces of it. There was a Senate bill introduced late last year that would index capital gains taxes, specifically on home sales, to inflation, but the counter is not on Congress's side. Lawmakers are here for about 3 weeks in September, but otherwise, they're mostly campaigning in their districts between now and November. Now, some conservative senators and analysts have argued in the past Said the Treasury Department possibly could take action on that.
Okay. 1, 2, 3.
That would be shaky legal grounds, though, and very quickly end up in guys.
Yeah, I was just thinking of all of the other promised or at least hoped for legislation, Clarity Act.
Okay, NVIDIA, come on. Stop this shit. Okay. Intel looking for the follow through. SK Hynix.
Not Democrats. The finish line, there could be some Republican pushback. The cost of this specifically, Yale Budget Lab had estimated that indexing capital gains to inflation would cost $1 trillion over 10 years, but not something that they can easily attach to something that does have to pass, like the NDAA or funding. The government, those things still have to get done between now and November, but you're likely not going to see a lot of things like this.
Megan, thanks. Megan Casella, watching the possibility of further tax.
All right, S&P just dropped. Oh, man. Just stop me out again. All right, the S&P just dropped off there.
The provision falls on stage 5 lists of eligible voters for the USDN.
10-year yield is still fading a bit. 10-year yield fading a bit. Junk bonds. Junk bonds higher. Okay, I don't know what that was. We just got a little shake out there. S&P 500. Okay, was there news there or something? Fidelity taking a sharp take on stock market. Okay, so it's Fidelity. All right, so
the tickets started selling so fast they bumped up the order to
I've been saying this forever. Okay, he's saying the difference between .com and now is corporate earnings are doing the heavy lifting. All right, so we know that. We know that. SPX though, SPX is not able to follow through. We just bounced off of the underside of VWAP. Okay, hedge flows are turning back down. Looks like it might be a bearish day again today. NVIDIA. Very choppy day. Trying to break out. SpaceX. SpaceX trying to break out. We got an opening range breakout so far. No follow through. Akamai. Opening range breakout. Fading already. So a lot of stocks are hitting the high end. Fading. So be careful here. New York Stock Exchange. Okay, notice the candles are getting smaller and smaller as we hit the highs. We're still trending, but the probability of pulling back to the 9 EMA is increasing. New York FANG. Okay, that's in the lower half of today's range so far. New York FANG.
Mark Walter, also the owner of the Los Angeles Dodgers, the Chelsea Football Club, purchased the Lakers for $10 billion. So you're talking about a franchise that will have changed hands in the space of a year at a 20% increase over the last price, which, by the way, was a record when it was sold. This is a new record. It would certainly seem if the $12 billion is
okay. We need the New York FANG. Need the New York FANG to bounce.
It is also interesting to note that this
Okay.
Walter was the subject of a recent story in the
Western Digital trying to hold on here. NVIDIA. You're looking for a follow through. Looking for that breakout. The volume isn't there yet. Volume is not there yet. We're almost a third of yesterday's volume. S&P, don't like the fact that the S&P is pulling back here. S&P is pulling back. We're below VWAP. This could turn out to be a bearish day. Sell into strength again.
Called related party transactions. And there was a probe into whether they were mischaracterized.
All right, Trump.
And that should have been perhaps
Talking tough.
disclosed to insurance.
Straits of Hormuz, S&P 500.
Conflict of interest, as you might imagine. That gets taken care of. Those loans get paid back when you're getting paid 12 billion for a team you just bought for 10 billion. So kind of another part of this, not clear that it has a lot to do with it or anything, but certainly did want to note it given it is tied into.
I mean, it's also interesting given Josh Kushner just in the last few weeks tried to make a bid to basically buy.
All right, 0-day, non-zero day.
Which failed spectacularly after there was a revolt. It was very controversial by most of the soccer federations, including the European League.
Okay, we're below 77.50. That is a support level. We got this level right here at 77.30.
Staying in a private enterprise that would be attached to.
Sarah, I obviously know Iger quite well. He's certainly a wealthy man as a result of many years at Disney. You know Kushner.
SpaceX looks like it wants to break out. SpaceX, can we go already? SpaceX?
So I don't know if this is being done. Again, we don't have any details as to where the money is all.
Where's the next one? Next one is at 77.25. 77.25.
I don't know. Is that a possibility that it is also coming in part of its own fund?
I mean, look, I just looked, Forbes gives him a net worth of $5.2 billion. He's had a number of home runs, both in terms of fundraising and investments on some of the most successful startups, notably OpenAI has been a big bet for him. SpaceX was a big bet for him. Others include Instagram, Stripe,
No doubt.
Spotify. So he's been at the center of
But their
very
combined
key.
net worth to the extent they are, certainly you're not going to put up your entire net worth into buying a basketball team.
Also, Iger is an investor, I believe, in Thrive.
Yes, he is.
and
He
then
works
there was a
there, works
portion,
with them as well.
and also when he
Intel turning back up. All right, this is a chop session so far.
But I certainly hope to get a little more information around the financing of the actual $12 billion, Carl, which is just a stunning number.
It is stunning. Thanks to Vital Knowledge, Bus buys the Lakers, the Forum, and the Kings in '79 for $67 billion. But that only works out to about 11-12% annual.
that all?
Yeah. Would have been,
Not bad.
stocks.
Not bad.
Yeah,
I don't think the S&P is in 79.
Yeah.
That's interesting.
sports teams, I mean, like,
Chop.
where's the ceiling?
There doesn't appear to be one, even though they really, on a return on invested capital basis, they don't return a lot in any given year. Certainly many of them don't. But they do when it comes to asset value, that's for sure. They just keep going higher and higher.
25 billion in assets under management. Right. That's what I was looking at. That's as of this year.
Yeah, just wonder if he has the leeway to actually invest in sports franchises. Maybe he does. I don't know. It's not necessarily under the venture.
I think we should also note, not necessarily tied to the financing, but he's the brother of Josh Kushner, of course, advisor to the president and son-in-law to the president and son of the ambassador to France.
When we come back, the AI boom came with promises of disinflationary effects. So far, they've yet to materialize at scale. We're going to look at how that costly build-out may be complicating the Fed's inflation fight. CEO of Honeywell Quantum spinoff Quantinuum, its first earnings report since going public in June. Stay with us.
Grover, really like this GEX chart that you've been posting occasionally. Very nice. This is excellent. All right, NVIDIA looks like it wants to keep going. S&P, we could be just stay in the upper half of yesterday's range. If we start to make new lows, then all bets are off. We could be seeing lower price. So we could see it tested at 77.25. We need to get back above 77.50 VWAP and start to show some momentum, some volume, some green volume. NVIDIA is trying to go. Okay, SpaceX. There goes SpaceX, opening range breakout. SpaceX breaking out on volume. All right, looking good here. SpaceX breaking out.
Welcome back. Inflation was in line with expectations in the July CPI report as the Federal Reserve weighs its next move on interest rates. Let's bring in David Miracle, Chief U.S. Economist at Goldman Sachs. Welcome back. Good to have you. Anything surprise you about today's inflation data?
No, for the most part.
SK Hynix.
The big picture takeaway is this is the second consecutive month of better inflation news. We came in a few basis points above our expectation, but we actually think we're going to come in a few basis points lower than we had thought on core PCE inflation, the Fed's preferred measure at 23. That would include a large impact from the stock market. So we actually think the news is even better than that. This is what the Fed wanted to see. Of course, there's one more round in early September, the August data. But I would say so far, we think we're on track for the Fed to hold at the September.
Nothing in here makes you think they need to hike.
No, I don't think so. I think generally over the course of the last several months, our take has been the reasons that we are above 3% are the combined effects of the war, tariffs, and some statistical mismeasurement that amplifies the impact of AI demand. And all of those things are fading so that we're on a better trajectory.
That's a very rosy view.
Rocket Lab's looking for a break higher. SpaceX trying to break out.
Average hourly earnings negative on this print, right?
So on the consumer, I would say the last few months have been surprisingly okay, given the increase in gasoline prices. We think the explanation of that is that the gas price increases coincided with the tax refunds. At this point, the impact of the tax refunds on consumer cash flow should be over. So in the back half of the year, you're looking at mediocre real income growth, a saving rate that's already quite low. And we think that translates to below potential consumption growth, call it something like 1.5%.
What do you think is supporting that retail spend on the consumer's behalf? Is it wealth effect? I mean, household debt went down in the quarter, did it not?
Yeah, so I would say a handful of things. One of those absolutely is the wealth effect. We think that's been worth maybe a few tenths boost to annualized consumption growth, led basically entirely by the stock market rather than housing prices. The other is the tax refunds. And then the third is real income growth is mediocre, but not quite zero. We've also seen a pullback in the saving rate. That's a volatile number. But so far, that's been also a contributor over the last.
But it hasn't been a credit story or a leverage story on the household front.
We've seen a small decline in the saving rate, but that's normal. Suddenly you get hit with higher gasoline expenses. You cushion the blow a little bit by saving and have less.
Labor market weakening?
I would say there was a meaningful change in our perception of trend job growth after last month's number, because we got both a decline last month, but also negative back revisions. It's hard to get too worked up about weaker jobs numbers when the unemployment rate is falling rather than rising. It's also hard.
It's falling because participation is also.
That's right. And I think there is a bit of a puzzle on why the participation rate has fallen quite so much this year. It should be falling a little bit just because of population aging, but it's fallen more than a little bit. And I don't know that we have all the answers to why.
There's a great debate, speaking of wealth effects, on whether or not people are retiring earlier. I've seen some age-adjusted.
All right, S&P. All right, watching for SpaceX to continue. What's Cerebras doing? CBRS into earnings. Okay, we are breaking above some key pivot levels. Cerebras with earnings tonight. 21-day is crossing up.
It's possible that wealth effects make people willing to retire a little earlier, but the decline in participation is not just a story about older.
Right. Interesting week in that you have ADP down 7 straight weeks at a sub 10K. print today on the week, and yet NFIB hiring plans were really strong. How do we square those?
So I like to look at a measure that we call our SLAT tracker that brings together many different survey-based and hard data-based indicators of labor market strength. The message has generally been that things are a little bit worse than the unemployment rate alone implies. Most of the surveys have been more downbeat. Workers say it's hard to find a job. Employers say, for the most part, they're not struggling as much to find workers. I wouldn't say it's a hugely different message, but a little bit worse than the 4.1% unemployment rate suggests.
I mean, so add it all up in this economy, and there's a lot.
That looks good.
For instance, on the
Cerebras earnings tonight.
Cutting into wages, making cost of living harder, affordability. How would you characterize where we are right now on that?
Yeah, I think that's right. The fact that inflation has stayed high for another year means that real income, inflation-adjusted income growth this year is going to be mediocre. Now, we think the things that have surprised
Cerebras
on inflation, namely
looks good.
Of AI demand amplified by statistical mismeasurement are retreating at this point. So going forward, if wage growth stabilizes, as it appears to have been stabilized,
S&P back.
Inflation is down, as we expect, then real wage growth would look better next year than it looks at the moment.
And I was just going to say, how much is AI driving the economy at this point?
Yeah, I think less than is widely thought. I mean, it is for one technology. This is an enormous contribution to the overall economy. So if you kind of look at it realistically, it's just that there are claims out there that this is the majority of US GDP growth. And that's a bit exaggerated because a lot of the production of equipment used for that AI investment is actually done abroad.
Yeah, you did some work this week looking at it's crowding out some things, but maybe not crowding out as dramatically as some fear.
I think that's right. It just so happens that this big data center construction surge, for example, coincided with a kind of lukewarm and best housing market and a big decline in manufacturing facilities investment from a high point where subsidies under the Inflation Reduction Act and the CHIPS Act had led people to want to build a lot of extra factories. So that went up or offset a little bit the pressure from suddenly building all of these new data centers.
All right, David, thank you for joining us.
Thank you.
With all the hot topics in the economy, David Miracle from Goldman Sachs. After the break, a different angle on the inflation story. We'll look at the big promises from Silicon Valley about AI's disinflationary powers and why we have yet to see them materialize. Be right back.
All right, S&P still hovering. All right, Cerebras looks like it wants to go. Cerebras looking good. CBRS. That's helping out some of the chips, I'm sure. All right, NVIDIA. What are you doing, NVIDIA? NVIDIA. Opening range breakout volume was well above average selling volume there. Let's see if that holds or not. Looks like somebody's could be trying to get out here. All right, starting to fade from the high. Somebody trying to short here, it looks like. All right, NVIDIA, I'm out again. Been scalping. Hit it pretty large, so Look for a follow through here. Opening range breakout on NVIDIA. Okay, that looks all right. NVIDIA. Okay, Rocket Labs. Okay, I got to take a 2-minute break.
Very, very nice run. An all-time high today at 200.
Be right back. I'm going to take a 2-minute break.
You mentioned the chili cops. I'm just wondering, what is it about? Is it about the consumer or what they're managing to do to sort of mitigate some of the challenges right now with, higher input prices and, getting people through the door?
Yeah, well, you got to eat, and if you've ever been stuck in an airport and had your flight delayed a few hours, chili sometimes is the only option in a lot of cases. But it's also a popular spot for those business lunches in sort of the metro areas around the country, office parks. You see them a lot there, and their price point is not at the $35 range per person. It's more closer to the $25 range, just a step up from a Chipotle. If you're thinking about a sandwich or burger and a soda at lunch, so it is not reasonable for a lot of consumers, especially for business travelers as well. So they're resilient there as well. Good family restaurant. And the turnaround story is really what's brought the stock price back over the last couple of years. So this company, Brinker's, sort of taking control of it and taking more control of its locations, but also it's a real estate play as well. There's Chili's all over this country.
Yeah, understood. All right. So obviously getting in the right spots there and trying to capture some of that, obviously, consumer demand. I'm just wondering, now that we've heard from a few names here, Caleb, what are the key metrics you're looking out for as far as fast casual is concerned, particularly given the current macro environment?
Restaurant margins, you just look at each, how much margin they're squeezing from each restaurant and then aggregate that for a company like a Brinker's that has a lot of locations. Think about the fact that it's really hard to make any money in a restaurant, period, but these companies have found a way to do it at scale. And that scale is allowing them to open and acquire new restaurants. The more you open and the more margin you're able to squeeze out of them, the better it looks on both the top and the bottom line here. So they're able to squeeze out good margins, relatively stable margins, even though we've had higher oil prices, higher import prices, higher tariffs. They've been able to do it, and some of that is because they've been able to raise their prices just enough to where they're able to squeeze out that margin without sort of turning their customers away. So there is a breaking point in there somewhere. They say the cure for higher prices is higher prices. These companies have not seen it yet. We'll see how much longer they can hold in there and how long the consumer holds in. I want to watch these margins closely.
They're hanging in there for now. As you say, Caleb, you've got to eat. Thanks so much for all of that. Really appreciate your breakdown. Caleb Silver, editor-in-chief over at Investopedia. Let's trade Brinker International now with Tom White, host of Fast Market. Good morning, Tom. Having a great day, as I mentioned, having a great year, and the last 5 years up quite considerably as well. Just walk us through an example.
Okay, NVIDIA is trying to break above this level.
Gains as far as comparable.
Cerebra is trying to take out the opening range high.
It's parabolic to the upside.
CoreWeave with earnings yesterday. Let's see what CoreWeave reported. CoreWeave, that's right. They beat by a penny. No, 17 cents. Okay. 20 million. That's good. Money is flowing in the right direction for CoreWeave.
The September monthly option series, so giving myself about 37 days to expiration. They don't have the options listed.
Wow, they're really low. Going right down Carolina Forest Boulevard. Okay, so SK Hynix looks good.
About a $3 credit, that's what you can make. $300 with about $700 in risk, but it takes your break even all the way up to $253 to the upside. That's nearly 9% above the current share.
Intel looks good.
You can be wrong on a trade like this and still be profitable.
those probabilities come into play. There's a probability of over 70% that EAT will be below the 250 level or the 253 level into expiration basically over the next 5 weeks. So look at the technicals on it. Yeah, earnings have been good. Margins have been decent. They raised expectations, but maybe this time.
Okay, up volume leading on the Qs. The Qs have been off. The Qs have been off lately. Currently looking at 2 to 1, more than 2 to 1 up volume. New York Stock Exchange 1 to 1 down. NASDAQ Composite is almost 2 to 1 up. S&P is 1 to 1 up volume. So generally looks pretty decent day.
This morning hitting an all-time high today. Thanks so much for that example trade for us today, Tom. And we are looking at stocks actually looking pretty range bound, as you can see here on the S&P 500.
And we got support down here at 77.25. Looks like that's where we're heading right now. NVIDIA back, pulling back again.
In line, so not rocking the boat too much. We've got the Dow.
No follow through. Core 1M is at 839. Only 165 stocks advancing. That's pitiful compared to last couple of days have been like over 300 to start. 47 on the Qs, 47 out of 100. All right, so there's not much going on here. CoreWeave. All right, NVIDIA fading. NVIDIA fading. Okay. Sienna, C-I-E-N, Sienna. Okay, so you can see a lot of stocks are struggling to stay above their opening range high, which is telling you to sit tight. Whenever this happens, okay, there we go. Opening range. Lumentum looks like it wants to go. Buyers at the low of the day. That's a good sign. Lumentum. I have some AAOI. I don't have any LITE.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moves is available in seconds. That means you can stop waiting and start investing in stocks, bonds,
Citigroup.
and more. Get more.
Citigroup above the 50 days, so the bank's looking okay. Opening range breakout on Citi, looking for a follow through. It does trade on the floor of the New York Stock Exchange, so I have this thing where I'm skeptical of market makers on the floor, what they do. JP Morgan, same thing. Breaking higher. JP Morgan looks good. Bank of America, both of these on the watch list. Okay, watch list.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
All right, no, these stocks are not holding their morning gains. I don't like it. The banks look good. What's Morgan Stanley look like? Morgan Stanley. Citigroup. Goldman Sachs.
morning. Welcome to Trading 360. I'm Marley Caden coming to you live from our Chicago headquarters. We have a great show in store for you today.
What about Wells Fargo?
Holdings will be joining us today to take
Wells Fargo, WFC.
we're seeing. We'll break down the numbers live with him. Then in our disruptors, we're going to take a look at Cerebras here with Alex. They have their earnings coming out this afternoon. And then in our panel,
Cerebras looking good.
We take a look at the market reaction there and also dive into the analyst perspective on the numbers that we got. I do want to check in with markets though before we get to all of that and more here. See how things are faring on the trading session here as we take a look. We are up about 0.2% on the S&P 500 at 77.45. On the NASDAQ, we are up 0.8% here. We are at 29,764. On the Dow Jones, we are just fractionally low.
SpaceX.
About 11 points so far today, 53,770.
Looking for a bounce on SpaceX.
3,030.59 right now. That is up about 0.1%. As we take a
Nice little bounce right now, SpaceX.
We are looking at the 10-year, which is just fractionally lower at 466. The dollar hovering below 100 unchanged. Gold is at 44.79. That's 0.8% higher. Crude oil falling on the session so far. We're at
SoFi, what are you doing, SoFi? A-Lab, SoFi.
Same range that we have been trading at over the last several weeks, but very stuck between 60 and 65,000. I do want to take a look at some stocks that are moving markets this morning. Joining us, Jenny Horn, co-host of the next.
SoFi just cannot hold a bid.
A lot of infrastructure reports so far, but I want
All right, NVIDIA is starting to bounce again. Very choppy. These moves on the chips for now. Intel looks like it's going to turn back up. Intel.
So much volatility to the upside because of the fact that a lot of this was basically priced in. But I mean, hey, a welcome move for those that were a bit caught off guard. We got that preliminary guidance at July. So to run through some of these numbers, I mean, this was a massive earnings beat driven by
Rocket Labs. Okay.
Fiscal year 2027 guide, which outweighed the modest revenue miss and ongoing concerns about its cash flow, audits, and regulatory overhangs. And so we did see earnings beat estimates by roughly 78%, showing that profitability is recovering much faster than anticipated. Gross margins nearly doubled to 17.5%, reflecting really this richer enterprise customer mix and stronger AI solution adoption rate. Net income also climbed to $1.18 billion from nearly $195 million just a year ago.
Yeah, I don't trust Supermicro management.
Climbed significantly to $39 billion, roughly from around $22 billion just the prior year. Management did generate more than $60 billion in orders and entered fiscal 2027 with now a record backlog. And they did add several hundreds of new enterprise customers throughout the last year. That being said, revenue did miss expectations, and that was the figure that was really a huge concern. They, of course, updated their guidance to reduce it even further for top-line growth expectations. Now, I will say they have at the lower end of their target, so it wasn't like a huge miss by any means, but the same is volatile, and you can see that based on even just today's movement. Now, management did disclose the results also remain fairly preliminary. Those were unaudited. The board's also conducting this independent review related to certain export control matters, which could then remain an overhang for investors in at least the more midterm. That being said, gross margin guidance also is expecting to right now see more of this quarter as a margin win, maybe even a trend now expected to continue as we go forward. And analysts are getting more constructive on the overall revenue story. Multiple firms raised their price targets. Rosenblatt was the most bullish with a 51 target. Raymond James at 48. But the main reason that we're seeing confidence is really this customer diversification. This quarter was more about, than it seems like, the margin story, the earnings story than just revenue. Analysts right now that are bullish do see the share loss fading. Neutral analysts are saying that they're not quite ready to fully chase the stock. We did see that note from Rosenblatt that highlighted this beat and raise quarter should put some concerns to rest, but they're still now seeing overall more favorable customer mix. But those like Wedbush, Citi, Barclays, Mizuho did keep more of that neutral rating, showing their
S&P is still fading. I don't like the S&P fading back to.
Yeah, Jenny, it was very interesting too. The revenue was a slight miss, but you also
Okay, we got 77.25 down here. That's another 25 points or so. Looks like that's where we're headed, though.
Both the reaction in the markets, the numbers, viewers and the sell side reaction. That's Jenny Horn, co-host of Next Gen Investing.
Hedge flows continue to move lower.
Advisors Wealth Management. Eddie, great to talk to you. We got the inflation print this morning. Came in pretty much in line with the expectation of a.
That voice.
I saw you. We continue to be overweight small cap. We continue to be overweight. Yeah, continue to be overweight emerging market equities. You'll remember at the end of the second quarter, we went back to neutral on international developed, specifically Europe, because of their heavy reliance on oil. But I think we really need to focus on the price of oil because that impacts the election. Focus on the election is going to be affordability. Lower income households are tired of paying more at the pump, more at the grocery store. And the president wants to have a successful midterm election. So he's focused on no more military action in the Middle East, trying to impose economic sanctions. There's just a lot happening, and it can almost all filter back to the price of oil.
Yeah. I mean, you talk about volatility. The VIX is below 15 this morning, and there's all this like whole recipe of the leverage reset, passive buying's intact, the buyback window's open, right?
Yeah. I mean, we can see volatility at the end of August, but what we're seeing
What was that? What just sold? What did I just sell?
hit a high on August 7th. We will probably see it hit a high again. But as we enter the fall, as we get closer to the elections, and active managers are going to do some window dressing and lock in some returns as we near year end. So we do expect volatility, but it all gets back really to your asset allocation, and your portfolio needs to be able to weather the volatility. And when you look at the market, we think that there is still room to grow. The numbers do not suggest, we're not seeing any signs of an impending recession, downturn, anything like that. So we remain cautiously optimistic and believe that investors should stay the course and stay invested. And when the market goes down, I mean, it's going right back up. So our expectation is that that will continue.
What about, I mean, we just heard from Christina, just a normal day in Similand where we see 20% moves higher or lower off earnings. When your clients say, okay, how exposed do you need to be to the AI build out trade? Because, I mean, there's probably a lot of FOMO out there.
There's definitely FOMO. And look, by virtue of passive investing, you have a heavy reliance on that trade and the Mag 7, the top 10, whatever. But we are still continuing to.
By the way, I still have SPY put flies in case we do fall off. So I'm not adding anything on the put side.
Year over year actually was healthcare.
We're just kind of sticking up here. I want to go short, but I'm kind of hesitating. I don't like doing it at the low of the day anyway. So any bounce back here, if we get back to this area and we turn back down again, like we did here and here. Okay. If we do that, maybe I'll pick a quick short. Not really even worth my time. Because the markets look pretty good, actually. You know, New York Fang, that's a shooting star. We could see that pull back another day or two before they start to cooperate. Maybe Cerebrus is going to help tonight's earnings.
Buy jewelry. It's too expensive.
Diamonds are plummeting, but gold's up.
She's going to like that statement.
What's the most common question you're getting from your investors these days?
All right, let's take a look at XII. XII, the ARCA Institutional Index, is showing a bullish candle here. Okay, the S&P is one thing, but there's a lot more components than just the S&P. Let's look at the ARCA Institutional Index. Okay, so we're looking for a breakout here, actually.
Well, thank you for coming on. Zoe, been sharing some of the advice with the viewers.
Still consolidating, range bound, chopping people up. Whenever it gets like this, the best advice I can give you is that try to minimize your trading because you're going to get chopped up. I've already done NVIDIA twice today. Never followed through NVIDIA, so I'm out of NVIDIA. Out of NVIDIA with a small gain because I did sell up here. think it was like $2 net per contract. I mean, it was ridiculous, but basically flat. I bought over here on the opening range breakout, got stopped out or took it off flat, took it again, made a little bit of money and then pulled back again. So I don't like the way the markets are trading right now. With a chop session, let's see what VWAP brings us. Okay, NVIDIA fading. Okay, S&P 500. Let's go take a look at this again. S&P 500. I don't know if you recall, but over here, a few weeks back, we had the same kind of price action. Let me show you what I'm talking about here. Okay, a few weeks ago, had very, very similar price action. Okay, so a few weeks ago, we had this action right in here. I don't know if you recall, but it was very choppy. A lot of people got chopped up before the markets moved lower. Okay, we moved down. Doing the same thing right now. Chop session. Do we stay in this? Hard to say, but if you're trying to trade like last week was really good. I got that blast higher into Wednesday, the Wednesday high. And then we just started to chop since then. All right, so we had Monday, Tuesday into Wednesday was really strong. We finished the week higher. But now we're getting a chop session again. So try to curb your trades. Okay, 1 week up, and we love to see this kind of price action over here, where we had what is that? 1, 2, 3, 4, 5, 6, 7, 9 weeks up before consolidating. 1 week up, and now we're just sitting here trying to figure out what we want to do next. I'm hesitating putting any puts on. I already have SPY put flies to protect on the downside. I have mid-September VIX calls in case there's any spike in VIX. Core 1M is back above 8. So there's a lot of moving parts. We've got chips looking like they want to do something, but NVIDIA is pulling back. SK Hynix at the highs, SKHY. Okay, looks like that's going to continue. SK Hynix. Let's see what Korea looks like. EWY. EWY is looking a lot better.
Here. I want to talk about the quarter, but everybody wants to know about the Oracle deal, what they're getting, what it means for you. Can you describe it?
Sure. Thank you for having me here. It's wonderful to be able to speak to you as a public company. Now, the Oracle deal that you talked about is essentially part of what we described as the trends in quantum computing. Quantum computing is not going to be used in isolation. All the great use cases that we see across industries, drug discovery, pharma, chemicals, chemistry, optimization, is only going to happen when you put quantum computing and high-performance computing and AI together. The Oracle deal represents a wonderful opportunity of industry first to do that. What we do is we put the world's most accurate quantum computer called Helios into an Oracle data center, but it's not just the physical integration, it's the integration at the software levels as well, which makes that quantum computer a first-class citizen of data services, compute, network, storage, identity, security, and gives developers and customers the ability to use the quantum computer much more easily and extensively than they would have otherwise been able to do. It's kind of the way we stoke usage, demand, and adoption of quantum computing, partnering with one of the leaders in AI.
Yeah, no, we've been talking about it sort of in theory for so long. It's interesting to
SK Hynix watching.
how quickly can you follow on with other deals of similar size?
Well, this we see the tip of the iceberg and the tip of the flywheel getting going, particularly as we build out our roadmap to Sol and Apollo. I mean, these machines are each up to 1 trillion times more capable. The capability of the quantum computer goes up, and integrations like this and the cloud service providers gives us the ability to then reach that customer base, reach and deliver on these hybrid workflows in a much more, what I would say, accelerated fashion and a much deeper fashion. So watch this space, more to come.
Well, can you just give us some examples about some of the use cases that companies will be able to use with your new Sol computer, for instance?
Absolutely. Let's just take one, which is in pharma. In pharma, it is a complex process to discover new molecules, understand their behavior, test them. And today, AI is being used to intelligently look through multiple choices and get to the optimal choices faster and spending less money. Quantum computing is an essential way to actually make that discovery process go faster and be more accurate. So how do you understand which molecules to proceed with down into the wet lab and actually eventually into testing? Quantum simulations along with AI allow you to do that much more efficiently and most importantly, more accurately than just classical computing alone. And that's one of the many use cases where quantum simulation training AI gives rise to value creation that you couldn't do with either of them.
No, a game changer potentially, I guess, for drug discovery.
Absolutely.
What about other industries?
The other industries in, not just focusing on chemistry, but look at optimization, for instance. The tremendous parallel computational power of quantum computing, along with the very, very low energy usage, makes it an amazing tool to use it for very complex optimization problems, where today classical techniques have to look through a lot of data, and quantum can be used to restructure that data and make that search for patterns, whether it's a fraud detection or a portfolio optimization or a supply chain problem, much more efficient and eventually even more accurate.
Would you argue that you're in the middle of an investment cycle? And if so, when does revenue and margin start to ramp?
Yeah, we're investing to build what we call the world's most powerful, fully fault-tolerant quantum computers. We're investing in building the hardware. We're investing in building the supply chain. We're investing in building the ecosystem, the developer ecosystem that will take charge or create value from this. And we are investing in building these applications that I was describing. It is an investment cycle. But the reason we're doing that is because we see the tremendous potential through the work we're doing with customers. This isn't about a consultant's report or just a view of the industry. We see this on a daily basis as we work with companies who are looking to use this to accelerate their discovery journey and their businesses.
SK Hynix.
And just on the Oracle deal again, just thinking about how these hyperscalers are building data centers and then incorporating quantum. Are others doing this? Is Amazon doing this?
Yeah, there's examples of Amazon and other companies who will offer what's called a quantum backend, and that exists. And we participated in one of those in the past. The unique thing about the Oracle deal is the co-design and the co-development of that data center to actually not just use the quantum computer, but actually integrate the quantum computer into the workflow in a seamless manner. Look, customers do they like the computational power of diverse computational things? They hate managing that complexity. And that's what this deep integration allows. Just like you had CPUs, then you got GPUs, but all in one kind of environment. Now you get CPUs, GPUs, and QPUs in that environment using tools that you're familiar with. And that just keeps that software flywheel going faster.
Well, while we're on the parallel to AI, just a clarification, you've been talking about Helios and now you're moving to Sol, and then I guess Apollo as the platform. Is it like, how should we think about it? Is it like the new models? Every time they come up with an update, it's just faster, better technology, which becomes the standard?
Absolutely. Each of these machines represent fundamental increases in computational power, and they unlock different, use cases at different scales. So this is like, taking, for instance, on Helios, if we were doing molecular characterization, this takes Sol, and then Apollo takes you to much more complex molecules faster families of molecules. So these are game changing in each of the generations, not just evolution.
Raj, fascinating. Stock's obviously responding to what might be a new chapter here. Please come back.
I will be back, and thank you again for having me here.
Yeah, Raj Hazra over at Continue.
All right, still ahead, much more on this month's inflation data. Former Treasury Secretary Jack Lew joins us. What's his take on the recent Japanese yen intervention?
Jury selection begins today in a California case against Meta, alleging harm to children. We'll bring you details, so we'll come right back.
All right. NVIDIA. Okay, SK Hynix is hanging out at the highs, just off the highs. NVIDIA is trying to go. I'm not going to force anything else at this point. Not a very friendly morning, no follow through. Broadcom pulling back. Let's see what we got here. We only have 191. Okay, so it's improving. It was 170. It's now 190. We got 1, 2, let's see. 1, 2, 3, 4 sectors green out of 9, 11 out of 11. Okay, communications is off. Let's take a look at the sectors real quick. Thank you for that script, by the way, Corey. It looks pretty good. XLP, that's a 60-minute. Daily is bouncing off the 50-day. XLP, consumer staples, is bullish, up 0.1%. Industrials trying to bounce and take out the highs. So we'll look at Caterpillar, starting to bounce. John Deere, 3M, Danaher. Okay, Boeing got an upgrade. Aerospace, LMT, trending. Northrop Grumman, trending. General Dynamics, trending. Okay, so those look okay. XLI is all right, though. XLI is at highs. Industrials. So real estate, XLRE, real estate. It's below the 50-day, but generally an upward sloping pattern. Maybe this bounce brings us back above the 50-day, like Meta yesterday. Meta, it just keeps doing this. It moves above the 50-day and then drops back below the 50-day the next day. It's trading more like a Chinese stock, and I don't mean anything negative about it. It's just that that's what Chinese stocks do. They're very gappy. Baidu, okay, Alibaba. Okay, these are very gappy stocks. They're up 1 day, 2 days, and then they fall off. Baidu. All right. Where was I going with that? Oh, okay. So let's take a look at real estate, XLK, tech, gapping up. Notice the range though. Okay, so this is very choppy, very narrow range. If you look at the 60-minute, is it really worth your time? Okay, it's not trending like over here. The end of July, early August. It's not trending. Okay, yesterday we were looking at, what was it, Palantir. Okay, Palantir dropped below the 20 EMA. So now this is a stop. If you're not stopped out, watch Palantir, needs to see a bounce. Rocket Lab, RKLB. Okay, that's above the 20 EMA. Looking for this to lift off this level. Rocket Lab.
This federal trial beginning in Oakland with opening statements next Tuesday is the biggest test yet of youth safety allegations against Meta. California, Colorado, Kentucky, New Jersey allege that Meta designed its platforms to addict users and misled them about their safety. The trial is also addressing claims by 29 states that Meta violated the Children's Online Privacy Protection.
Someone in my family is very addicted to scrolling. It's not my son, it's not my daughter. You can guess. Very unproductive.
Just as potentially damaging. The states are asking for big changes to Meta's algorithm, including
All right, so that's why Meta's down so much today.
asking the court to make Meta prioritize content focused on well-being instead of engagement, to implement age restrictions and time limits for young users. Meta saying, quote, we strongly disagree with these allegations and are confident the evidence.
Nah, it's so true. It's not even funny. People, my kids, they're very against scrolling. They'd rather. My son was just got back from the golf course, so I hate to keep talking about them like they're so special, but they're against scrolling. It's like they always yell at me, Papa, what are you scrolling for? Even if I'm on just for a few seconds, watching a YouTube video or whatever.
Shares still deeply in the red.
Tesla, all the New York fangs are off right now, so this is telling you to just kind of chill right now. Okay, New York Fang is below the 20 EMA, so that's right there telling you to chill. SPY sitting on top, it's range bound. The Q's above, so that's good. IWM above. IWM actually looks pretty good.
On the East Wing Ballroom, saying only Congress could approve it. Charlene Graham, the sister of late Senator Lindsey Graham, who was appointed to serve out his term, advanced to a runoff last night in the South Carolina Senate primary. She will face Congressman Ralph Norman on August 25th. And Google announced its Gemini AI app is surging, topping 1 billion monthly active users and keeping pace with ChatGPT, which hit 1 billion users in June. Google says the milestone makes it the fastest growing product in Google history. Sarah, back to you. Okay, thank you. Evan Stevens, still ahead. Former Treasury Secretary Jack Lew joins us to take on the morning's inflation data, his reaction to the historic yen intervention, and much more.
Google launching some new Pixel phones today, although they're going to be a little more expensive. We'll talk about how that ramps up the competition with Apple over AI integration in consumer devices, and we're back in a minute.
All right, CoreWeave, CRWV. Okay, let's watch NVIDIA here. NVIDIA, just chop. The markets are chopping people up. I'll keep my cash close to the vest right now. NBIS.
Breaking news here on Truth Social. Megan Casella with the details. Megan. Sarah, the president, some of his top aides, and the White House are now being sued over the decision to sell Truth Social's API to Wall Street firms to allow Wall Street firms to get some information on Truth Social fractionally faster than the general public. So this is a new lawsuit filed by the Intercept Media, the Freedom of the
That's
Press
so silly.
filed in the Southern District of New York today. And
Some people getting access. Such a silly.
constitutional. They say it's profoundly corrupt because the president, who is the majority shareholder in Truth Social, says that he gains financially by giving market-moving government information to those who are willing and able to pay his personal company. They also argue that it's unconstitutional under both the First Amendment and the Fifth Amendment, and they're asking the judge to stop this sale. They say that the fact that public companies could gain this market-moving information fractionally faster, that's not fair under the Constitution. Now, Truth API has been asked about this. They were saying on earnings calls as recently as last week that they do so far have 10 paying customers. They've called criticism of this misinformed and said that the sale of commercial APIs is a well-established business practice, so they have the room to do this, guys. We'll see how the judge responds. For now, though, the White House getting sued over it.
Yeah, the shares have had a rough couple of days on the losses related to some of the losses on those digital assets. Megan, thank you, Megan Casella. Meantime, the LA Lakers getting sold to a group led by Josh Kushner and Bob Iger. Our David Faber brought us that a few moments ago. He's done a little more work on it.
Yeah, I want to provide a little more clarity around it as well, given our last conversation. It is valuing the LA Lakers franchise, of course, at some $12.5 billion. That is according to a source.
SK Hynix still hanging out at the highs. I do not like this chop.
Where the control stake in the Lakers traded only about a year ago when Mark Walter, also the owner of the Los Angeles Dodgers baseball team, the Chelsea football team as well, took control of the Lakers. In the latest change in control, it is Josh Kushner and Bob Iger, who will now, and through Kushner's Thrive as well, will now be the control stake holders. But the Buss family will continue, according to our reporting, own its 49%. They held it when Mr. Walter briefly had that control stake, and they will continue to hold that 49%. Obviously, they are beneficiaries of what is now a valuation some 20+% higher in less than a year for that same franchise. So, we were talking earlier, Sarah, about
Okay, NVIDIA, no follow through. I do not like the way this market is working right now. You hit the highs and you don't follow through.
That conceivably is being in part provided by funds overseen by Mr. Kushner, and still sort of trying to understand
Apple dropping off.
Money may be coming from for that. In addition, obviously, to what would be a contribution, I would assume personally, from both Kushner and Iger. Iger, obviously, a great face of ownership for the franchise, one would imagine, given his long history in Los Angeles, and obviously an incredibly articulate spokesman for Disney for so long as its longtime leader, not to mention, of course, a huge basketball fan, although I thought he was a Knicks fan. Certainly think he was for many years. I remember talking to him about it. He has not returned my
Pezzi breaking out. PESI, don't know anything about the company. PESI.
This probe into Mark Walter that is ongoing and has been reported by the Wall Street Journal, amongst others, involving related
Awful earnings.
What would appear to have been a failure to report what was a related party transaction.
Mixed waste disposal.
Controlled insurance companies to help support his.
This pop has to be, well, it's been trending, so. Pezzi, waste related.
Exactly how those were financed.
Reminds me of Back to the Future. Doc reusing waste to propel the vehicle. The DeLorean. Remember the DeLorean? I don't like the way the markets are trading right now. I'm just kind of sitting back and watching.
Extraordinary investment, true, given the return in a very short amount of time. He says he'll carry with him the community, the fans, and as well says he's grateful to Jimmy Buss and the Buss family. Again, they will continue to own 49% of the Lakers.
He also owns part of the Cadillac F1 team. I mean, he has so many, they have so many teams through this TWG Global, Walter.
Yes, he does.
Yeah.
Yes, he does. And again, that you know, we've referenced this program. I don't have reporting of my own on. I'm relying on others, obviously.
Okay, Rocket Lab, RKLB. Rocket Labs is sitting here. 50-day is cruising down towards the 200-day, looking for this to pop in the other direction. We might have to wait until like 11:30. It is 11:30. 11:30, 12 o'clock for any buyers to step up. The shorts have been having a little fun here. Dealer hedge flows continue to move lower.
For both of them, I'm told Bob will have more of a hands-on role here in the Lakers.
One would imagine that would be the case again with Iger, certainly.
Looking for an evening rally.
Not to mention, of course.
Probably looking for someone to.
If we hold these levels, looking for an evening rally.
It's not bad, and a huge basketball fan as well. So
He's right below 77.50.
in our semi-retirement.
Need to get back above these levels.
All right, David, thank you. Keep us posted on what else you learn. Meantime, other big story this morning, CPI inflation comes in line with expectations, though remaining above the Fed's 2% range. Let's bring in former Treasury Secretary Jack Lew with his reaction. He's also the former U.S. ambassador to Israel. We've got a lot to get to with you, Secretary Lew. Thank you for joining us. And any big concerns that you have about the direction of inflation from here now that we're starting to see the pressure come down?
Good to see you, Sarah. Today's CPI data was pretty much along the lines of what we expected internally. There were some things that were moving around. But I think, it paints a picture that's very challenging in terms of the future direction, because it shows that it's still going to take a little while to get down to the 2%. And just a few days ago, we saw a jobs report that showed a weakening economy. My expectation would be that this gives a lot of room to stand pat for a bit, but there's going to be a lot of attention on whether or not the Fed sticks to the importance of getting to the 2% target. The new Fed chair, I think, has tried very hard to make it clear that is a priority of his, but ultimately balancing the kind of trade-off between worrying about a weakening jobs market and worrying about inflation is going to be a hard decision. I wouldn't expect to move right away. I think that if I were there, I would be waiting for some more data, either tomorrow, the PPE data.
I was thinking of you and other former Treasury secretaries when we learned of the Japanese yen intervention that the U.S. participated in alongside Japan, because it was pretty unusual that we did that. I mean, it's happened before, but not in a really long time. Coordinated intervention to stop the yen from getting too weak. Look, it doesn't appear to be working that well. At least half of those, half of it has come back. What do you make of that? Was that the right move for the Treasury to do?
Well, it wasn't an unusual move. I think it was motivated in large part out of a concern that Japan would potentially be selling dollar-denominated securities and having treasury bonds flow into the market at a time when the federal government's borrowing a great deal was something that there was good reason to want to at least avoid. I think that the challenge, if we don't know the details, is the extent to which there were understandings about what the ongoing policy in Japan would be, and whether there were conversations with other governments, other treasuries, and other monetary authorities. When there was the Fukushima disaster, there was a coordinated global intervention to stabilize the yen. There have been cases where intervening with another country in a cooperative way actually can serve both interests. I think the fact that it's the benefit is pretty much half run off in a very short period of time suggests that without some action by Japan on some policy, any benefit would be short-lived. And it was interesting that the transaction was done in euros, not dollars, to try to keep it out of having an impact on.
All right, the markets just continue to fade here.
Complication, if you believe the FT, that the ECB was blindsided by that, and there might have been some erosion in, relations between our central bank, or at least our treasury and them? Jack, do you believe that?
So look, I think moves like this made the coordinated way tend to be more effective. I don't know the extent to which there was coordination here. I think there's been a pattern of intervention by Treasury that suggests a greater willingness to use the exchange stabilization fund. I think it raised a lot of questions when the intervention was done with Argentina. This is a very different case. The first in Argentina kind of had all kinds of issues about.
Yeah, I don't see anything to do right now.
This one, there were legitimate arguments that there were U.S.
Don't want to get sucked into puts at the low of the day. Earlier, we were talking about what happens if S&P can't get back above the VWAP, that it'd be a bearish day. It looks just like yesterday. Yesterday, very similar. We stayed below VWAP the entire day. This is yesterday's price action. We started to accelerate down towards the lows. Okay, we're below VWAP again. Looks like that's what's going to happen, unless we can get some sort of rally.
What is the risk? It's not, I mean, it's not using taxpayer funds directly, right? And the idea that, you know, that it would prevent, I think they're our largest foreign debt holder now, from potentially having to sell treasuries to do more feels very.
Let's see what the equal weight index looks like. S&P equal weight, RSP.
During the peso crisis. So there's the question of just conserving the resource. Secondly, there's a question of potential loss, and you say it doesn't affect the taxpayer, but if we were to have lost what we had at risk when we did a swap with Argentina, it would have shown up as a loss to the exchange stabilization fund. It turned out
Equal weight is fine. RSP. Okay, this is.
It was a very risky move. This one is a little different. Sympathetic to the desire.
Okay, the equal weight, S&P equal weight at the highs.
I think the question of coordination, the question of sustainability, they're also important.
Meantime, Jack, there's a lot of pieces being written about Besson 333 hopes. 3% deficit to GDP is clearly not happening. We're almost double.
All right, this is the S&P equal weight.
Doing 1.5, oil production missing on that count. And then he's getting a little more strident, criticizing journal reporters on social media posts. I just wonder what you make of the tone coming out of Treasury right now.
You know, the tone.
What is, there was some scuttlebutt about Bessett's comments about the yen. US dollar, Japanese yen. Okay, that is bouncing a little bit. US dollar relative to the yen.
Around the world. So I would be a little bit more constrained in my direction. I think that the language and policies with regard to Iran just don't add up. I mean, we're hearing Treasury talk about Iran.
Japanese yen. A couple of weeks ago, he was talking about going long the yen. How do you know Iran feels emboldened? That's your impression. So I hate these people that just.
I think the United States is in a vulnerable position right now.
So he knows that Iran feels emboldened. Okay. Okay. Just gonna have to disregard some of these people. The New York Fangs are not looking so special right now. NVIDIA is okay. Broadcom is off the highs. Snowflake looks okay. So we got 3 out of 10 that look okay, but that's not enough. Markets are fading. We're below VWAP exactly like yesterday. This was yesterday. We faded below VWAP and we never looked back. You can see we're in a range over on the right. We're in this tight little range. tightening up even more. Okay, tight little range here.
East side that went to a moderate. I think yesterday was another indication that there's division.
Tight range in the S&P. So you're getting chopped up if you're trying to trade this. I choose not to. I'll keep addressing stocks that look like they might follow through, but I'm keeping it conservative today. I mean, we broke out the new highs last week. Friday, we almost made a new high, but we're still in this tight range. Earnings are good, so there's no reason to like fret too much, but RSP, the equal weight index, doesn't look that bad. RSP.
Yesterday, the Wisconsin vote was as thin as a margin can be. It shows that this is not a decided question. And I think if Democrats are going to win in a national election, if they're going to win the Senate, it's going to require people who need to have some comfort that the central.
So supposedly Soros isn't funding the Democrat Party this year. Not sure why what's happening there. Don't really like politics.
We're going to have to do a whole other segment on this, some of the economic ideas that these guys are floating. But for now, it's
RSP, XII.
former Treasury Secretary, former President, Chief of Staff, former ambassador to Israel.
Take a look at some restaurant stocks, Kava and Brinker with some impressive comps. We'll talk about what's driving shares of both of those companies higher this morning.
So Kava is up. Okay, Kava. All right, gapped up, but it faded. Kava and Brinker. Brinker, that is EAT, right? EAT. Brinker looks better. Trending. Okay, so these were working like Cheesecake was a few weeks ago. Cheesecake still going. What was the other one? Cheesecake, Brinker. Oh, by the way, I need to leave about a half an hour early today. My son's orientation for his junior and senior years is tonight. He's going to a STEM school about 15 minutes away. And I need to go with him just to show support. So I need to leave around 3:30 today. I'll leave the stream on if that works out. Cheesecake. Brinker. Okay, Cheesecake still going. Looks good. Okay, Cheesecake looks good. Brinker, EAT. Wow, these look good, huh? Ooh, can't chase them up here though. We mentioned cheesecake several weeks ago. Let me see when I took it off the watch list. It was like at least a month ago, I would think. Cheesecake, yeah, cake was on the back in July, still going. Okay. Cheesecake. Holy smokes. 80 was where we were looking at it for support. 80, 84.
Hey, good morning, Carl. Kava reported a Q2 beat. Top takeaway.
Kava, that was the other one. Kava.
Sales. Second straight quarter of 9% growth. Now, CEO Brett Schulman on the call last night saying exiting Q2, the company saw sales dip from cyclospora's industry-wide impact. But that started to rebound recently, giving the company confidence to maintain its annual guidance. Now, the stock really popped last night when the CFO said there is nothing in today's trends to indicate that the company would land at the lower end of their guidance range. She also said the company is seeing
38%.
The lower median household income markets, and that they're actually outperforming better than all of the company's other channels. And then you have Brinker International this morning higher. The Chili's parent reported in line
Kava.
1.54 billion, slight miss.
See.
Yes. Biggest driver once again was Chili's with same-store sales jumping 5.
Chili's? What's Chili's?
Consecutive year of same-store sales growth. Maggiano's came in weaker with comp sales.
Oh, hate that. Hate that interruption.
2027 guidance, adjusted EPS between
Breaker looks good.
1340,
Breaker International.
between 6.15 and 6.27 billion. The company also increased repurchase authorization to aggregate of 750 million. Now, I also know you talked about Wendy's earlier this morning as well. Reports of a take private bid from Nelson Peltz and Trian, which hold a significant stake in the company. Still awaiting a response from Wendy's. I did reach out, but Trian did respond saying that they declined to comment on the FT's reporting. We know the company trying to do a turnaround there, so I'll keep up with you as I get them, guys. Sarah.
Okay, that was a lot. Thank you, Brandon. Brandon Gomez. Still ahead. Google launching a new Pixel lineup today, showcasing AI capabilities. How that sets the bar for Apple's hardware refresh in September.
EAT. Eat going here. Looks good. All right. EATE. Kava also looking good. Kava. Turning up. Okay, what's Chili's doing? Chili's. Who are they part of? Chili's, are they part of a chain? Brinker, they're part of Brinker, right? Yeah. Chili's is part of Brinker. Bloomin' Brands, BLMN. Bloomin' Brands.
CoreWeave has a challenge ahead of them, right? They are heavily reliant on debt financing. And they even said on their call that basically, I think there were 640 million of interest charges that they had during that period, and they're estimating 860 to 940 million going forward. They have to continue to raise debt. And when you mention a lot of those other names in there, the reality is they're cash flow positive. These are profitable companies that can fund operations based on cash flow. So I think the challenge is that while CoreWeave is a leader in this space, they're battling against some heavy hitters who don't have to rely on the debt financing markets quite the way CoreWeave has had to. And that challenge becomes even more difficult if we see credit spread expansions or we see interest rates go up. Look at CoreWeave's cost of financing, right? You have high single digits to low double digits across the board. If you have a Microsoft or Google and companies that don't have to rely on that same source of capital, who's going to be more competitive in this market and who has more resilience?
Really appreciate you both being with us today to take a closer look at CoreWeave's numbers and the reaction we're seeing, up 18.6% right now for CoreWeave at 107.14. Mark Gibbons, CIO of Gibbons Capital Management, and Todd Stankiewicz, CIO at Sycon Capital. I also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download our free Schwab Network app available in the Apple App Store, and you can tune in 24/7 on schwabnetwork.com. I hope you have a great rest of your day.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Looking good. Cheesecake still pushing here.
Schwab coaching is concepts brought to life in the real world.
Schwab coaching is learning constantly. It's relatable, it's practical, clear, understandable, and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry, around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see. We have different formats.
Okay, we're coming into the 12 o'clock hour.
Somebody's a real
A lot of stocks hit the highs, but faded and could not get back above the opening range high. So that's a clear signal that there's no momentum.
Ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step, along with the education that we provide them as well.
We're going to be able to help you
Okay,
regardless.
Cheesecake looks good. What a beautiful move, Cheesecake.
Not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
All right. NVIDIA is still fading from the high. Snowflake sideways. Tesla looks like it might turn. A lot of these stocks are at the lows. Maybe a trade there. Amazon and Apple at the lows, along with Google and Meta. Microsoft also taking a break. Much needed consolidation on Microsoft. If you were expecting Microsoft to keep going, it's kind of tough in the tech arena. Here we go. We're starting to pull back now. I did sell Microsoft last week, right? Microsoft.
Let's get into a check of your scorecard. As we hit the lunch hour on Wall Street, you are looking at the S&P 500. It's got a gain.
Hey, Joe Terranova, Shannon Sakosha, Brian Belsky, Brent talking to check the markets here. Green across the board today, so a little bit of relief, obviously, after the CPI print. Certainly, the AI bulls getting a nice lift from super.
Okay, Intel turning back up.
etc. And Ed Yardeni goes to 8,400 now.
What does Intel look like? Intel.
250 was the prior target, which at the time he said could be a little conservative. All right, so the words, then the action. So he raises it. Says, quote, we've never seen consensus earnings expectations rise so quickly for the current and coming years as they have since mid-2025.
Intel implied volatility is in the toilet, just kept dropping. So Intel calls are cheap.
There's no reason to think that that's going to change as long as the earnings picture remains what it is.
No, and congratulations to Ed on calling the 20s for exactly what it is. It is the roaring 20s, specifically attributable to the earnings growth. Now, Ed is the highest on the street. If you look at the S&P targets, the actual consensus price is 78.45. But we're looking now at taking profit margins towards 17%, which is absolutely staggering if you think about where they were just 5-6 years ago, kind of wallowing around 10%. Of the earnings growth is the driving force. And right now is the
Okay, let's see what Intel looks like. Yeah, Intel calls are cheap. Talk is cheap. Calls are cheap on Intel. Let's see where this is. Intel. Intel's right there. Buying put spreads could move a little bit lower. All right, we'll wait for this to get on the left side of the screen. Intel. S&P turning back up. Okay, so more chop. If you bought puts at the low of the day, you're probably regretting it right now. Okay, we got to get back above VWAP. So if you're thinking about going short, you need to do it up here, not down here at the low. In a range.
That being said, Ed's been doing this for decades. He has a very good track record. And so I think directionally what he's saying makes so much sense, because you also have to think about how the construct of the S&P and the NASDAQ with the S&P for earnings has changed so much. So yes, NVIDIA is still the #1 holding in the S&P, but now Broadcom and Micron are also in the top 10. Obviously, Broadcom's been there for a minute, but Micron's now broken to, I think it's like number 7 or 8 position. And those 3 companies are going to continue just to be monster. And so I think if you are looking at earnings from these specific companies, especially the Micron and NVIDIA, you could map out very easily why his number.
Okay, Rocket Lab, RKLB, looking for more upside. Just sitting here on a doji.
The constitution of the S&P and the NASDAQ has changed, which is going to continue to push those earnings growth numbers higher.
Shan, what do we think about this market?
Well, I mean, the crazy thing, right, is that the S&P 500 is actually underperforming other global equity markets. And so I think if you look at the tech PE ratio, we've seen that compress pretty markedly. We're seeing the opportunity for this pivot, if you will.
CBRS has earnings tonight, looking good. All right, CBRS, sorry, I haven't focused too much on it. All right, oh man, this is looking good. CBRS is breaking out.
The reality is too, you also have the news from NVIDIA.
Uh-oh, looks like they got news ahead of time.
That there is going to be a wider participation. We've seen it in the credit markets already in terms of funding, investment, this issuance, increase in investment grade issuance. You're seeing it now utilizing the alternative private equity managers, private credit managers to also fund this growth. The bottom line is that all of this is underlying the economic momentum that we have globally. We're no longer, especially here in the US, Scott, our economy is not based on what's happening with the consumer. And so all of these concerns about the labor market and inflation.
Okay, we're going to have a bull cross.
Economic growth has changed in the United States, and the companies that are performing well from an earnings perspective are benefiting from that and are likely to continue to benefit from that, even if there are pockets of weakness in parts of the consumer market.
Big week for the AI bulls, undoubtedly, right? The NVIDIA financing news, no money to be seen yet, obviously, but the announcement enough speaks to the environment and the expected demand that's going to be there. CoreWeave blows it out, stocks ripping. Super Micro,
wow,
good guy, stocks higher. So this has been a week of AI trade validation. many respects.
It's been about validation. It's been about the messaging and how they're doing it. Remember, people were worried about how and why companies like Oracle and Microsoft going out into the private sector and gaining debt. This consortium, even though it's still not completely tied together, this consortium in terms of how NVIDIA put this together, number one, and number two, how they communicated, Scott. We need information in the market, and they did a great job talking about how that's good. That's number one. Number two, in terms of the tech trade, we've said for 10 years that tech is becoming the consumer staples of the U.S., period. And so earnings have become excessively stable, but Ed nailed it. And we talked about this on the show yesterday. In the second quarter, we've never seen in the history of watching earnings revisions for well over 30 years, we've never seen a revision of earnings like that. And you see that, that is real. That is real.
Woo, there goes, man, it's going now.
These types of revisions over the next 4
Holy
years.
smokes.
And 8400 is clearly in the way.
Because folks today talks about the beat rate for tech, the highest 85.1%. One of every 100 tech stocks that have reported, 85 of them have beaten expectations. You have had, according to Bank of America, who watches the flows of what their institutional clients are doing, tech's second biggest inflow ever. So driven by hedge fund clients. Remember, we've been talking a lot about the degrossing from hedge funds. There's been a lot of deleveraging. The positioning environment, the field, if you will, is cleaner now. Tech saw the second biggest inflow week of all time. Money's going where they think they can get a nice reward. There's no doubt about that. This trade seems to be back in a big way. If it wasn't gone, it was parts of it at least were just taking a rest. Now the chips and the momentum trade, they were taking a rest. They had to puke up a little bit before they felt good enough to get back in the party.
So we had this 19% move from the end of March to June.
I think it might have been, actually, I think it might have been,
76.20, an all-time high, and then
I think it might have been,
trade
what's his name?
through the month of June.
Jonathan?
We're now repositioning
No, what's his name?
the early earnings, and I think, Scott, we're getting in front of NVIDIA earnings. I think
Exactly 2 weeks from today.
exactly 2 weeks from today. So if I can, let me just walk you through why I think we're getting in front of it. First of all, analyst community, 96% buy rating, 303 price target. Here's what happens with the revenue growth. The revenue growth reaccelerates. Remember, we were hearing about revenue growth moderating. You're coming in, the consensus number is 96%. That's the best figure in nearly 12 months.
What's that dude's name? Comes on occasionally on CNBC. Option dude.
Next quarter, they're going to guide to $100 billion in revenue. Think about how staggering that ultimately is. So I think the market is getting in front of what I think universally people believe.
Yeah, what's his name? What's his name? Options action. Oliver Rennick. Oh, I think it was Oliver. I think it was Oliver. Yeah.
That previous high at 236 for sure. That we had in May.
Goldman says it's going to 285. They reiterate their NVIDIA buy, but Joe makes, I think, a really great point that we just came off one of the best weeks that this stock has had in an awfully long time. It's been on a nice run here, okay? You can look at it over, that's month to date. Thank you, guys. That's a good chart. That shows exactly what I'm talking about. Therein lies one of the problems, okay? So expectations are elevated too. Watch out on the other side of earnings in a couple of weeks.
I mean, the growth of this company, though, is so ginormous that I think it's been a huge laggard with the growth, which tells you it's like people just still don't believe this growth is going to continue. Which Joe walking through those revenue and earnings numbers, they are, and to do 100 billion next year is amazing. And so the stock continues to get cheaper. I think it's just been consolidating, right? What do we have, a $5 trillion market cap? But this stock is cheap. It should be at 280. It's 220 is at 223 is inexpensive. So we'll see if it can break through that technical ceiling around 230s. When it does, I do think it will. I think it's off to the races, but that 230 definitely is a ceiling that it needs to pierce through. But it's been an underperformer relative to the Microns, a bunch of different stocks year to date. And so I do think there's an opportunity for catch up, especially with Elon saying with SpaceX, they're pushing all of their chips in. It's a huge, huge new customer that was not underwritten a month ago.
You make a good reminder to people too about the valuation. Let's show that again, if we could, because the stock, we've been saying for the last few weeks, the stock is the cheapest that it's been. I don't know, what was that since 08? 7 or 7 years? 7 years. I was thinking 2007, 2008, but it's 7 years. So therein tells a story, right? Of a stock that earnings expectations continue to go up and the stock continues to get cheaper. There's other news today as well. So Morgan.
All right, CBRS, that was a nice little rip there.
Re-entering the open weight game.
5,200-day cross coming.
So that's a story that we continue to follow. Google getting its first crack today at the iPhone. That's interesting. A new Pixel lineup. We're following that. There's the SpaceX news today of the target getting cut. The stock has been teetering right around the 135 level that it had gone out at. It got below that. Now it's back. At least
Hertz pushing higher, looking good. Hertz.
About the stock that reports earnings tonight. We don't talk about it all that often. It is Cisco. Brian Belsky, you want it?
Yeah, we do. We've owned it for about 10 years, Scott. And this is a company that has really benefited from the Russell 1000 value technology sector being a place with respect to where momentum has been, especially when micro is in the sector. So this is also a name that value investors have been able to buy, not only for the cash flow and the consistent earnings, but this stock throws off a dividend. So now that they've talked more and more the last couple, 3 quarters about their AI development, the stock has a lot of...
I've been sitting on some CBRX shares. I took some of those off for a nice gain. I'll hold on to the CBRS options. I have January 300s. I wanted to add some January 270s. Let's see what those are going for. CBRS for earnings. CBRS.
Coherence on 59% so far month to date. Applied Opto, if we could show that, that's on 84% year to date. So Cisco
CBRS
participating
options.
in that optical component, which is critically important because years ago everyone was saying in AI infrastructure, what do you need? A copper. It's an old copper. Well, now optical
40 deltas are 270.
because the light is actually moving the data faster and more efficiently. Copper's been ripping too. Well, no. But it's optical is absolutely the trade. And if you don't believe that optical is the trade, NVIDIA earlier in the year announced $2 billion deals with Lumentum and with Coherent because they understand that's where you have to be. Last point is also keep in mind, and this is not confirmed as of yet, but the FCC could.
All right, took a little bit more of CBRX off shares into strength.
US optical that plays right into the names like Cisco, like Corning, and the others I mentioned.
CBRX sold.
The cyber trade, Brian, has been really where it's at in terms of software. It had that momentary blip months ago and then had just a strong rebound. CrowdStrike taking to 230 today from 195 also at Citizens. So they're sort of reevaluating the whole group. They take Palo Alto to 415. What do you think?
Stock's up 100%. But remember the blip? The blip came at a great time for this company because it was in the process of folding in CyberArk and everything that was happening in terms of their operations. And now Palo Alto to us is the creme de la creme in terms of that type of space with respect to cybersecurity. So we like the company. We've been adding to the company over the last few months, and it's our core holding in that space.
You have some CrowdStrike, Fortinet, Palo Alto, cybersecurity. That was the dominant theme as software was entering this corrective phase. And even as we've now witnessed other parts of software come back and have the mean reversion.
I'll keep the CBRS calls.
The strength, and it's attributable to the fundamentals and also the fact that if you are a CTO, you are not cutting the budget as it relates to security.
Starting to get more conversation that software has legs, that this rebound is not punk.
No, I was just going to say that. I mean, we heard so much about both software and business services, this AI disintermediation, and what I think was overlooked or under-acknowledged by the market is that the companies that are outside of the technology sector that are going to be integrating and implementing AI. Greater efficiency by introducing AI into that their entire stack, especially large.
Okay, CBRX, I just took some off into shrink.
So they're going to
Just collecting cash. Fuel cell, thanks. Fuel cell, FCEL.
How about this space?
Okay, squeezing.
I think that Microsoft, a week and a half ago when their earnings was a game changer. And so I think that gets a ton of support.
Fuel cell, when do they report? FCEL. They have earnings coming up. Earnings September 8th.
Is that ultimately these LLMs become commodities and you do need a trusted application layer, which is where the margins are. So I think that you're going to continue to see IGB specifically make these higher lows, which is great for the chart. And I think it creeps, up there for the remainder of the year. But I think that I was frustrated with Microsoft. I think it was a game changer to say this, software application layer is here to stay, and there'll be winners and losers. But I do think IGV, because you have a little bit of everything, is a decent way to play.
Okay, SpaceX turning back up now.
Risk of one.
The problems exist in Salesforce. At the end of the month, we get Salesforce, I think August 26th.
All right.
Somewhere around there is Oracle, and the following day is Adobe. Let's hear what each one of those reports are all about before we get this enthusiasm that return to software in totality for it.
Do you think those are equally important? Because I would think about Adobe in maybe a different context of that, just given the narrowness and the creative aspects of that company that might be.
IWM. Yeah, looking a lot better, Mondo. There you go.
I was going to say, sir, I thought you were going to say ServiceNow. No, I actually think ServiceNow of those four is probably the best position. And
You're not as concerned about
The stock doesn't reflect. I mean, the stock has bounced nicely over the last month, but that's about the only green you're going to find if you look at it, at least on my fact set.
Yes.
Quite literally.
Yeah.
Week to date, it's down in the course of what's been a decent bounce. Over the last 1 month, yes, it's up 15.5%. Year to date, red. 12 months, red.
I feel as though the trouble has been, and ServiceNow is challenged for sure, but I feel as though the real trouble is specifically related, and it all began 1 year ago with Oracle, and then it trickled down and it went to Adobe and it went to Salesforce. So I'm maintaining this disbelief.
So is Oracle the number one problem child? And
I think so.
So is that the one that needs to provide clarity in terms of getting out of
candidly, Brian, I'd like to go 3 for 3. I'd like to hear something really good from all three of them universally, and that will shift my sentiment.
Okay. Let's talk about financials for a moment, because you put out a note today. The good folks at Cumulus were working all night on this note, and they said today that they're buying into the rebound in financials.
We are.
Why?
Well, we wrote the report because we knew that you would really appreciate that today. So
I appreciate that. I do.
It is.
I do.
Really all about Walker today. And this is a sector that we think, you talk about earnings, the next great earnings win aside from tech is going to be financials. And we're going to see rates moderate. We're going to see spreads continue to increase, but more from a thematic perspective, you see the really big banks and the really small banks doing well. But the broker dealers are a great business. And that's why we highlighted Bank of America and Goldman Sachs in terms of the two stocks of focus with respect to where and why we own those names. We think there's a long runway here in financials.
And if I remember correctly, didn't you either sold or you trimmed
your brand depends more on the strength of your community than your ability to chase any individual trend.
For those leaders that are watching this and they're interested in the book and what you have done at PacSun, what's the one step that you can take today to start turning around the company that's not operating at the level they would like to see?
I would say two things really. The first is the power of co-creation, which means no longer treating your customer like an audience, but treating them as a partner to build with. And that fundamental shift will shift internally all of your processes. And it will also shift your marketing and how you go to market with your product. The second I would say is insatiable curiosity of really continuing to dig as the customer continues to evolve. As there are so much advancements with technology and AI, I think curiosity around your consumer, really having and building relationships with them is more important than any data dashboard that you could see.
Around February of last year, I said there's more.
IWM looks good.
I had this theme also of investing in the receivers of the CapEx versus the spenders of the CapEx. I have this kind of like overarching view, not trying to be political, but companies themselves have probably not paid enough in their fair share of taxes, right? Like, and obviously that's going to make us more globally competitive. And this is almost the way of like the largest companies, like paying their taxes, but they're doing it and building out infrastructure and building out like the future for us. Right. And I think right, like that's where the money is going, not where it's, and that's one of the reasons why. But that's Apple.
But they're not the hyperspenders or hyperscalers, right? Hopefully they don't go bankrupt doing it, right? That's the thing we really hope. But no, I think it's a really good point. But
Yeah, 60-minute on IWM looks really good. Looks like it wants to break out.
Yeah.
Every quarter, saying we're good on spending this quarter.
Yeah. Okay. So that's the question: is the AI trade dead in your mind? Certainly not. For me, it isn't.
No.
I don't think it's dead, but I think there's a lot of risk there where I can just say, hey, I can buy the banks here, which trade for like a 40% discount to the S&P. We know the economy is starting to pick up, loan growth is going up, capital markets are opening up. I'm getting like a 2-3% dividend. So I think there's a lot of places you can put your money in the market that are predicated on AI. And I think it's important because when I look at those portfolios, they're so dependent on that AI trade where they're just owning.
Okay, looks like we're going to turn the corner. We're going to hold this 77.50 level. Looks like we might actually get something going here.
I think having positions in your portfolio, if the AI trade does not, if all the spending doesn't come,
S&P looks like it wants to go.
We started doing.
No, somebody was on TV this morning. I don't know if it was on Maria or on Barnes, saying that you can't really get away from AI because every industry is now impacted by it. Right? So when you think you're not getting involved in AI, when you buy JP Morgan, you're buying their exposure to AI.
I mean, right. I think that's a great. I think it's a great topic.
When you buy, right?
And that's when I started saying like we started moving away from the semis,
right?
And you. And just other things that we.
S&P looks like it might want to go here.
These
It's lunchtime.
Financial infrastructure with stablecoin is an interesting part of AI.
Right.
Growth of AI.
Well, what's happened to Caterpillar this year? Caterpillar, it's a great company. Sure. There was nothing really sexy about it. It was up 80% or something because it was drawn into the AI ecosystem.
Yeah,
right?
there's
turbines, not only the construction equipment, but the turbines that they manufacture that are used in the AI trade. The Caterpillar's been massively up this next while. Yeah, but I also think there's other stories there, right? We just talked about
IWM looking good. IWM, Mondo trading IWM earlier.
There you go. Interesting. Yeah, well, it's a great point. And the defense budget's going up around the world as well. So I think about like mining stocks. You think about like the emerging markets. So I think all these trades are actually dependent on just AI. Let's face it, J&J is up like 50% plus over the 12 months. That's not dependent on artificial intelligence. That's not. No, yeah.
All right, NVIDIA looking like you might want to do something. Snowflake. We're starting to see more short covering. Maybe the evening session's a little bit more impressive.
I sent him the first check for now, sir. And I was lucky enough.
We added healthcare. Healthcare is adding now.
Pre-seed round or whatever we call it today.
Qs look a little better.
From Peter Thiel and Reid Hoffman and me. And he came
S&P looks like it might want to go.
Those Lion flip-flops and the basketball shorts. And he had his feet up on my conference table. and handed me a card that said, I'm CEO, bitch. He was just having fun, did not care, and was not looking to impress me in any way, and I was really impressed. I was like,
All right, S&P looking like it might push through this area back to the highs, perhaps.
They were getting right, which was trust. Because it was .edu, they had preppy kids from.
All right, I gotta take a couple of minute break. I'll be right back.
Low numbers, and I was having trouble like keeping mainstream people, and they at the time they were 3 or 4 schools, and they just nonchalantly said, yeah, we have a wait list of schools, and when we turn on a new school, we get 80% of the students in the first week, and the other 20% the next week, and then 60% sign on every single day. And what's amazing is that metric of 60% of your daily users, of your monthly users signing on every day. Every time I see that metric, it's what I saw with Raya. That is just invest with your eyes closed. That is the #1 metric I've seen for sustained key. And in terms of Zuckerberg, he developed so fast.
I am absolutely and he looks so cute in them. Are you looking for quality brands at great prices? If you haven't heard of Benign, let me fill you in. They carry overstock from some of the world's most sustainable brands. Who's gonna keep grabbing because it's quality stuff.
4 days only, the Great American RV Show, presented by Campers Inn RV, August 13th through the 16th at Myrtle Beach Mall next to Bass Pro Shops. Show pricing on Grand Design, Brinkley, and more. When it's over, it's over. 4 days, then we're gone.
People always ask if I cook the same way at home as I do at my restaurants. The answer, yes. I'm Michelin-starred chef Nancy Silverton. To make truly delicious food, you need the right tools. With Hex Class Hybrid unbeatable searing power, easy cleanup, and equipment durable enough for both of my kitchens. People think I'm cooking for the crowd, but I'm just cooking for one person, the one taking the next bite. Performance, no matter the kitchen.
You know what's inside your kids' gummies? Those vitamin gummies can be full of sugars, fillers, dyes, and they're overformulated. In the last 50 years, almost 50% of the nutrients out of our food has disappeared. The hunger that kids have in America today is not because they don't have enough calories. It's because they don't have enough nutrients. First Aid, it's a blend of 21 superfoods and 9 key vitamins. As an exclusive TV offer, you can get it for 49% off, plus free shipping if you get it today.
With Vistaprint, you can turn your ideas into custom apparel you can't wait to wear and share. So you can introduce your brand before you even say hi. Give your whole team a glow up in professional polos and outerwear. And upload your logo and poof, you've got apparel with print so clear, your brand jumps right off the fabric. Just think it, click it, and print it with Vistaprint. Because with all the colors, sizes, and styles you need, anything's possible. Print your possible with 20% off your first order at Vistaprint.com.
At Ferguson Home, we understand that home is a feeling. It's where everything that matters unfolds. Warmth of shared moments. The simple joy of everyday tasks. These are the memories that define your life moment. Celebrate home in your style. Visit FergusonHome.com. These things it's valuable. Things every day. I don't feel it. But I don't think it is. Especially for the success. This one's valuable. Welcome to a new episode of Power Players. Really excited for my next guest in large part because I've been drinking the products he created out of his basement for years. It's Ben Weiss, my founder. I'm so good to see you in London. It's a new company that we made the leap over into beer. Yeah. Okay. You do that. No, if you do that, like, for those not familiar with the story, Ranger film So we're out of Princeton, New Jersey, so fairly locally. I came out of the coffee industry. I was a coffee geek. And I just discovered the fruit of the coffee bean was packed with antioxidants and polyphenols, and I just wanted to make a drink that tasted good that used this really unique ingredient. So I created it. And it was powered by coffee fruit. And I think that was a really cool, novel idea. I think I might have been the only person that thought that was a cool novel.
Okay, S&P, no follow through.
It's not why I became but it is why Ben was created. So it was my starting point, jumping off point. It was my connectivity to the brain. But ultimately, it was also a confusing and alienating message to put on average. People had to unpack that. And it was really getting in the way with what was really true innovation, which is how do you deliver low calorie with great taste and nothing rich? And where did it? Honestly, it came from a couch with me, my wife, and my 2 kids who were 10 and 6 at the time, trying to come up with names. I mean, it is the story that you hear so often. We spent an afternoon just coming up with cool names for a drink that we used coffee fruit. And what bi means is it means pure and white. But it also became an acronym, botanical interaction infusion. And I like that it's a triple entendre because it's the byproduct of the coffee. So, I felt we nailed the name. Now, when I say that, and I think the name was a challenge all along, because I don't think anybody knows how to pronounce it. Even to this day, when people ask, what do you do? You don't get that connection. I'm just like, this, I'm not sure. If you should buy it. Oh, I drink that all the time. Okay, it's my favorite drink. I still drink.
What's SpaceX doing? SpaceX at the highs.
So people didn't understand this. They used to call it I used to play it. Right? Sorry. So as a result, I spent a lot of money doing Super Bowl commercials for Justin Timberlake. And I borrowed his song as a way to just drill home. This is how it's pronounced. But I recently had a advertise. So I recently had a good podcast with founder of Taser Rick Smith. 1993, he basically created the taser out of his house. We went door to door to sell these tasers and drive awareness. How did you get out of that the townhouse and get these operations? So nothing really exists. I mean, they didn't even have this business before. No. I didn't have time. I grew up having a son. So the first 10 years. So to go into a town, that was major.
SpaceX is pushing to new highs.
Which was a studio that became a one-bedroom.
SpaceX.
So we moved out to the suburbs and we got this townhouse. And in that townhouse, was able to conceive this idea of a beverage called Bomb. And literally, I would be a mad scientist. I would come out and, when kids would get off the bus and all their friends were around and taste them. It doesn't sound very appropriate, but I give them a little taste of it. Let's try it. That's how it started. Very humble beginnings in the basement. I wrote a book called Basement Mentality. And really, that's about not just starting in a humble environment, but what's the mentality to take it? And you bring it with you throughout the day. We call that a base mentality. It's not being distracted, being tenacious. Maintain the fact that you're tethered to a big idea, and very starting point, a big idea, and you're going to be challenged with it. So that's important, staying tethered to it. Managing the dilution along the way, I think, is very important. I do a lot of entrepreneurs. So, okay, I'm going to take this journey, but it's a journey of dilution. At one point, I owned 100%. It's never going to be the case, especially if you give a piece away to raise the money. So how do you do that? Still have enough foresight to know that I want to go here. When I get there, what do I want to do? Right? Because I'm 39 years old here, and I'm not making it. I'm sacrificing. I'm living a small little town. I was like, so if you're going to take on the responsibility of dreaming big, but willing to act small in order to get there, going door to door, that's very much what we did. You better be tough. Right? At least that's my experience. For you, where does that scrappiness come from? I think it's just my personality. People ask, can you make, is an entrepreneur made or born? I think there is a part of the entrepreneur's mindset that we just have. being able to withstand that mindset in light of all the constantly being told, oh, no, this is not going to work. Can't do it. Go do something else. So how do you shepherd this idea as an entrepreneur? How do you maintain that mindset? How are you scrappy? How do you maintain a motivation for what you're doing? Tenacious in light of all. And I think that's where the entrepreneurs are really born. I think a lot of people have the mindset, but when they get tested, it's like the endurance. Like, how long can you maintain that mindset, even though everybody's telling you, go do it?
How did you know you had something hit worthy in your hands? Was it handing out those samples and the kids loved it, or that first person who gave you money?
No, I had checkpoints along the way. Like, if this doesn't work, I probably should rethink things. But nothing that said, this is going to be a $2 billion exit. Oh, yeah, I got it. At a certain point in the journey, and it's usually tied to distribution, when you're starting to get some distribution equity and you realize that this thing's getting bigger than me, then the job of the CEO and the entrepreneur and the founder is just to screw it up. You know, there was a point in time where I'm like, my job became not to screw this. And you want to get there. Like, you want to be conscious of that, and you want to get there, and you want to be challenged by that. You want to be fearful that you are going to screw it up. But that's when you know you're going to win. Doesn't mean you're going to go, ultimately, to sell for $1.7 billion requires a lot of luck too, and a lot of timing, and a lot of circumstances. So you dream big. And if you're not dreaming that, then what are you doing? But a lot has to happen.
Did you create this business thinking you were going to sell it at some point?
Yeah. I designed it so that it should be sold. I'm not driven by selling it. I'm not driven by the money. But I'm driven to create something that somebody else will want, meaning I have to build it the right way. Like in this initiative with Cricket Pop, I've spent a lot of time and a lot of money creating an alcohol that lives as a ferment, regulated as a beer, even though beer, you don't want to go near it in terms of its decline. And everyone's looking at vodka-based RTDs and THC drinks, or we're not drinking at all. And I'm the guy that says the white space lives as a ferment. You can create a premium experience there that consumers can trust. The whole session of build kind of low ABV game is built for fermentation, not for distillation. So, you got to build it right. And I know that if I build this right, it's going to be highly valuable. It's hard. That's the name Crooked, by the way. Crooked is all about the path that movement takes. It's the straight line. Right? So everything we do is hard. Like we made it organic. It's hard. We make it with ancient grains. That's hard. Right? We do it with zero sugar. Everything is hard. But you do hard in order to achieve different. Right? So that keeps you off the straight and narrow for a while. You're like, where is this right? It's over there trying to do it right. Because when it re-enters, you want to have something that's truly different, well-timed, and answers a dilemma. And that's where I think I'm so excited about Cricket Pop. Because Cricket Pop has put in the effort to be different. It lives in a part of the industry where it should live, where nobody else is trying to win. And I think the timing is great because, the whole modern soda movement exists in non-alc. It doesn't exist in alcohol. So we have first mover status here. So I transitioned to Cricket Pop just for a reason, because it's really like, this is the part of the journey when you talk about pivots, when you talk about, maintaining a vision tethered to a big idea. That's costly, that's timely, that takes a lot of endurance, it takes a lot of belief in what you're doing. But when you get there, like, I truly feel I'm driving a unique vehicle today in a sea of sameness. I mean, the beverage industry is brutal. And it's a sea of sameness. There's a lot of just fancy different packaging. But the ones that truly make something different are the ones that break through.
That day you officially sold by, how surreal was that for you?
Lost my best friend, right? Bob was my best friend. So giving it up was hard. My kids, my family, my wife grew up with my parents. It was a part of all of our lives. So it was more than a business. It was more than a brand. Very prepared to sell. It had to be sold.
Why is that?
Because I was challenging the industry too much. And, the person who bought it needed to love it enough to grow it. And I can only grow it so much. Right? As an entrepreneur, I'm never going to 10x what I was able to do. You gotta hand it to one of the humans, and you gotta hope that they love it as much as you do. And that's a big, it's a big goal. So it was a sad day. It was a surreal day. Obviously a life-changing day. It's never about the money. Never made a lot of money, and now I'm about to live a different life. And I remember the day we sold the four of us. We had since moved out of the town. But we built the house. So we built this beautiful house first, and we specifically drove first, which was almost amazing. And it was on our way to the office to let everybody know that somebody just bought us, and we couldn't even tell. I couldn't tell people. So I told them for adoption and something adoption. And right in front of us, all along, was the person who I wanted to adopt their baby, which is Dr. Specifically their CEO. And I was very proud. I was proud, sad but proud of where it was headed. But that was a surreal day.
Oh, I am absolutely loving this. That was genuine. And he looks so cute in them. Are you looking for quality brands at great prices? If you haven't heard of Benign.com, let me fill you in. They carry overstock from some of the world's most sustainable brands. Because it's quality stuff.
The purpose of engineering is to unlock performance. This is a hex lamp with hybrid technology, perfectly balancing durability, steering power, and non-stick cooking performance. Its purpose is to help F1 driver Yuki Tsunoda pursue his dream, cooking a steak for me, right here.
Thanks for letting me borrow your car.
Thanks for letting me borrow your car. Wait, what?
I needed groceries, but my bank account was empty. So I used super.com cash to get $100 fast. I just request the cash and it's in my account by a week. Sometimes you can't wait till payday. Download super.com to get your cash today. This is where your ideas become cute mix signage that makes people stop, look, and shop. With micro scanners, outdoor signs, and more. Just think it, click it, and print it with Vistaprint. Print your possible with 20% off your first order at Vistaprint.com.
SpaceX.
Candy Crush. Cowboy.
You see is perfect.
Say it as many as you can.
When you walk down the supermarket and see that product, what do you think?
I think all the crooked decisions I made that brand truly different. Because it's now in culture. Could it always be bigger? I think they could have done more with it. I think they could go into it. Yeah.
From the outside looking in or looking through the place, it's like,
But they don't have it much. And I only mean that, I outlove my products. Like when I talk to anybody about my product, I love it more than you. And that was always the case to the last step, right? That's my job. And it's not shtick. It's the truth. I truly have a vision for it. You don't have it. And that always keeps the brand pushing. And when you remove that, you remove the life force of the brand. And it doesn't mean it can't work, and it doesn't mean that it needs me, but it needs a life force. At a certain point, it takes on a life of its own, right? And that's a sign that you did a good job. It's like raising kids. Like you want it to not depend upon you. But if you just rip it out and it's still growing and it's still maturing, you're gonna stunt it. So I think that's stopping the brand a little bit. But and then listen, to pick one on and sold there. So that also didn't. If I ever if it ever came up for sale, would you buy it? Yes, because see the challenges that hotels have with audio. I've seen them write down to PepsiCo's take on some brands, things like if you're interested. Well, first off, I've now started enjoying it. Right? So are we going to assume that didn't happen? If I didn't have a new business, would I do it? I would say probably. Because you have to take a collective breath and start over. Right? And I know there's still a business there, but it requires a lot of yourself. To build these things, you got to give up yourself. And that's a lot to pass.
It's not a Monticello beer, but close enough.
Miss you, Lee Star. Thank you, Mondo, for the reminder.
When you started this business, you weren't thinking, I'm doing this. I created this kick-ass brand already. I've sold the company. I'm here to do business. This is going to be huge businesses. You run that playbook. Actually.
RKLB.
So the expectation. I actually thought the exact. I feel like, well, we're starting on new people. We're going to find new people. We're going to find those, people that dream alongside me. They're not going somewhat, which I would fortunate. But no, we start over. We know it's going to be hard. Beverage industry, there are no shortcuts. There are no shortcuts. You got to be willing to do it. It's expensive. So, if I had that perspective, I think I would do that. And I did fail a lot even along this 5-year journey on the outdoor side. But that's part of the process. It's failure. Failure is every day. Success. Because what happens is you fail, and then you succeed along the way. So you got to be conscious of what success is. I expect it. I don't feel it. But I don't think it's the same issue. So I'm very conscious. I learn from my mistakes, and I'm very good at understanding success. I can look at a brand that sits here in my IRI data and believe it should sit there. And I can chart a path to that, and nobody else sees. They want to say no. Yeah. But to me, I can see the path there, and I'm really good at articulating that and getting somebody in the other seat to kind of believe it. Not maybe fully believe it, but enough to get you to do something that I need you to do that you wouldn't normally be willing to do. If I had to summarize your product, what would it be? And who are the competitors in this space? So Cricket Pop is a modern soda for the alcohol consumer. It is designed to deliver zero sugar USDA. Those are the two big pillars that check every box. There's no other brand that does zero sugar. On top of that, we are less than 1 carb, gluten-free, vegan. I mean, it checks all the boxes. So I think it's truly, a better for you version. Right?
including the alcohol that we made. It's called Osaba. We spent a lot of time and money for alcohol to live in that white space that I was talking about. No, we wouldn't. But I love it. And I'm going to tell everybody about it until you love it. But I also never heard of coffee fruit until I buy it. And I was smart enough to know that that wasn't going to get people to buy it. So I actually took coffee fruit and I kind of hit it in the back of the bottle. It's not new. It's one of the pivots. You're like, okay, maybe that's not as important to you. Maybe Osaba's not going to be as important. But Osaba is a big part of why you should trust it. And my goal is not so much for you to fall in love with Osaba, but for you to trust my. And if you trust it, you'll drink it. Because it's absolutely.
Where does this product sit in the retail stores next to hard seltzer, but also like next to beer?
So it's a great question. So when I look at the alcohol set, right, it starts with beer, which is malt hops, and then you got flavored malt beverage, right? So malt is, in my opinion, an alcohol for previous change, right? Flavored malt beverages is an alcohol for previous change. This consumes that. If you keep going, then you kind of have hard seltzers. Hard seltzer is regulated as a beer. It's a sugar drink. And they, for the first time, did something, and that's what they was going to by not being a sugar base. What they did is they are no longer governed by TTB, they're governed by. And as a result, there's now a nutritional panel on White Claw or Truly. And I thought that was the best thing for consumers because, and you saw it in the numbers, but now the consumer can turn a bottle or a can and say, okay, what's in this? Well, the problem with seltzer is that they abort it. And what we are is to the right of that is this white space. How to create the alcohol, which was Osama. How to create the delivery system, which is hard syrup, which is with fresh movies. That lives between seltzer, a consumer who might want to trade up, and maybe a vodka RTD, call it a high noon. A consumer who now is drinking at a premium because, quite frankly, when you put spirit in a can at 4%, you're diluting down a high ABV, you're bringing all those excise taxes with it. So you're forcing the consumer now to pay for a spirit as opposed to a beer.
I don't know if that's a pioneer drinker. I don't know why I'm drinking that when I hear what you're. And I'm not saying
I really want to try it. You're drinking that because there's no other choice for me. Well, you're drinking it because vodka is better.
We go SpaceX.
I will tell you about it. Picture me fruit. There's fruit. Okay, but there's on my plate, yeah. But there's vodka is better than mine. It's just clean. The reason it's cleaner is because they quite frankly, and it becomes very astringent. They're not fit. What we do is we stay on the other side of the fence, which is as a beer, you don't have excise taxes. So you're paying a premium because of taxes. I'm like, why burden the consumer with that? So, but you needed to have a premium clean
Rocket Lab's looking good.
That doesn't make
Rocket Lab.
I know it's weeds a little bit, but it's a very important part of fascinating law I'm talking about. I'm just enjoying it. This is good. Like this is like a little bit about throwing me for someone who's I just followed my customer. The reason I'm in this business is because my customer, which is the 80 million millennials that gave birth to not just other great brands, they just aged into alcohol. They're not drinking alcohol. Well, the Gen Zs, but that's the thing we read everywhere. Well, they're not drinking anymore. I go to the restaurants around that. I see 25-year-olds still drinking. Maybe not as much as I did, drinking out martinis at age 21 when they were hot. You're right. So here's what's happening. They're sober curious, which means they are not drinking, but they are willing to drink alcohol if you give them something.
Rocket Lab looks good.
Drink one less, whatever. It's not that they don't want.
Rocket Lab looking good.
I think you can trust.
Let's see, RKLB pushing off of the 200-day 86 next, probably.
I'm thinking back to what it was recently. ABM what was it, balls or something? Is that the exit you guys to an alcohol company?
I think if we do our job right, are going to redefine refreshment in alcohol. Whoever sees value in that, I think there's high value.
How long do you want to be at this game?
I don't put a time frame on it. This is unfortunate. My kids are a part of it. a fan of this environment. I have great, long-standing friendships in this business. I go to work, I'm sure like you do in this environment.
SpaceX continuation.
Right? Like,
added some more SPCH shares a few minutes ago.
What? How are you preparing kids to, let's assume, take over this business?
I'm not. I'm just saying, go fight. Go fight. It's a fight. I don't know if they'll win their fights. Like, they gotta just pick up, a can and go fight, and see how they do. That's what I do every day. Like, I fight the
SK Hynix trying to turn up again. Looks good.
There's a big chip on my shoulder. I want that chip to be on their shoulders too, right? Like, prove that we belong. Right? Until then, everybody wants you gone. I don't care what you've done. So
SpaceX looks good.
It's fun watching. It's kind of fun throwing them in the fire and seeing how they handle it. But it's
Well, I wish you much success. I don't know why we haven't spoken before, but I'm looking forward to staying in touch.
like, I want to try this product. What do you give a pilot? Something? Seriously, I'm gonna need something. I appreciate it.
All right, that's it for the latest episode of Power Players. Appreciate the love. Give me those likes.
The purpose of engineering is to unlock performance. This is a head type with hybrid technology that perfectly balances durability.
SpaceX looking really strong here.
Its purpose is to help F1
Launched the Falcon 9,
cooking a steak.
carrying, was it 20 plus,
Thanks for letting me borrow your car.
20 plus satellites? They're Starlink satellites.
This August, your RV life
CBRS turning back up again.
Campers in RV get a new Forest River Westbrook travel trailer for just $109 a month. The price is only the beginning. You'll also get transparent pricing, expert guidance, inside access ownership benefits with qualifying purchase, and support that continues long after the sale. Visit us today to find the RV that fits your life and your budget. Campers in RV, the right price, right by you.
With Vistaprint, you can turn your ideas into custom apparel you can't wait to wear and share. So you can introduce your brand before you even say hi. Give your whole team a glow up in professional polos and outerwear. And upload your logo and boom, you've got apparel with prints so clear, your brand jumps right off the fabric. Just think it, click it, and print it with Vistaprint. Because with all the colors, sizes, and styles you need, anything's possible. Print your possible with 20% off your first order at Vistaprint.com.
SpaceX, SPCX, SpaceX looks good. SPCX.
Si quieren un show, demos un show. Todas las emociones en un solo canal. Bien hecho. 24 horas de películas. Lifetime Cine Selecto. Disponible ya.
Good morning for Daily Show. I'm Neil Fryman. I'm Toby Howell. Today, White Bumble is letting guys make the first move.
Then the University of Michigan is ditching grades for stressed out freshmen. It's Wednesday, August 12th. Let's ride.
Santa's got competition. Christmas is going to be a feast for sports fans and a nightmare for anyone else related to one if you want to stack their attention. The NBA just released its schedule of 5 juicy matchups slated for Christmas Day. joining a triple header of NFL games also slated for that day. That means there's going to be football and basketball games running from the Spurs versus Knicks at noon Eastern until whenever the Nuggets at Warriors ends with a 10:30 p.m. start. Toss in Packers, Bears, Heat, Celtics, Bills, Broncos, Sixers, Lakers, Thunder, Timberwolves, and Rams, Seahawks in between. And opening gifts might be the only reason to get off your couch that day. This is the real war on Christmas, for better or worse.
Okay, here's my hot take. Too many sports on Christmas. It's trying too hard to be Thanksgiving. Thanksgiving, perfect holiday. You run a turkey trot, you eat a ton of food, then you crash on the couch for football and a nap. Christmas is just doing it too much. Too many games. The nap doesn't hit the same. A ham-induced food coma doesn't hit as hard as a turkey-induced one. Christmas thought it could take them. Clearly, the NFL wanted to move on the turf and say, hey, this is our day too, but it's just trying too hard, Neil. That's my take on that. And now a word from our sponsor, Rubric. Neil, it's been a murder.
Oh my God. Is everyone okay?
Oh yeah, not like a real murder, but cybersecurity as we know it is dead. The truth is, the old model was built on protection, safety nets, recovery plans, systems designed to withstand the last era and maintain the status quo.
The AI era demands confidence that you can secure and accelerate your business operations so nothing stops your momentum. Rubric can give you that confidence.
Their platform helps you keep going by securing your data, controlling your AI, your identity built on one architecture that sticks together after that.
To learn more about how Rubric rewrote the industry rulebook, head to rubric.com/MB. That's RUBRIK.com/MB. If you're already struggling to get in touch with your European colleagues this summer, just give up today. For the first time this century, a total solar eclipse will be visible from continental Europe. The path of totality, in which the moon blocks out the sun completely, will slice through areas of Spain, Iceland, Greenland, and a sliver of Portugal, delivering an awe-inspiring spectacle to some regions that haven't seen a total eclipse for over 120 years. And just like the eclipse in the US 2 years ago, hordes of people are on the move to be a part of history, boosting a European tourism industry that's been battered by devastating wildfires earlier this summer. In response to insane demand, hotels are charging like they're in Oxford when Ole Miss has a home game. According to the Financial Times, rooms in Reykjavik, Iceland cost more than $1,000 on average the night of the eclipse on Wednesday, up 140% from last year. In the northern Spanish city of A Coruña, hotel prices have also more than doubled, and they're up 59% in Bilbao and 31% in Santiago de Compostela. One small Spanish village in the path of totality, named Somosierra, is expecting up to 2,000 visitors today. It has a normal population of 93 people. Toby, love an eclipse, love the logistics around an eclipse. Basically, you have these places that are not tourist hotspots at all. No one ever visits, but because of this random astronomical path, they have to prepare for a deluge of people.
That is my favorite part too, because obviously Spain gets a ton of visitors to tourist hotspots along the coast, but they are being pulled into rarely visited areas called empty Spain, which are literally just the interior of Spain. And yeah, you look at these local anecdotes. You mentioned the Somosierra. They're trying to figure out how to feed these people because, again, it is a remote village. Their population is going to explode. And so you have one hotel operator who has a plan right now. It's lamb stew sandwiches in enormous batches of paella that they're going to haul up to the mountain. And they basically ask her, Financial Times asked her, what do you do if they run out of food? She goes, we can't leave people stuck halfway up the mountain. We'll bring up another batch of paella. So you're seeing all of these funny logistical operations and, yeah, a lot of money coming into these areas as well. There's still some question marks about weather is like the main thing, especially when it comes to places like Iceland. But you're seeing these benefits concentrated in places that normally don't get them. It's like a World Cup for only 5 minutes in very remote places of the world.
Yeah, this empty Spain is actually, as a name, it's called La España Vaciada. And it's just a rural stretch of the country that no one ever visits, but it's expected to get 2 million visitors just today. Similar thing is playing out in Iceland too. So whoever's been to Iceland, you know there's a main tourist. I have not been to Iceland, but I know that there's this loop that everyone goes on. There's certain places that you go to. Of course, the
Rocket Lab's pulling back a little bit.
It's not going in those main tourist paths. It's going along.
SpaceX still going.
It goes to a region called the West Fjords region, and Iceland officials are saying this is a nightmare because Iceland weather is very variable. You don't know exactly what it's going to be, cloudy or sunny 1 hour to the next. So they're worried not by international visitors, but by 400,000 people in Iceland because they haven't decided where they're going to go to watch the eclipse. So they have to wait to the last second to prepare all these things. You have porta potty rental companies saying we've been sold out for months. We have 250 porta potties that are just completely gone. And this area of the Westfords in Iceland just doesn't have roads that are paved. It's dirt roads. So it's going to be a bit of a logistical headache, not from the international tourists, but from all those Icelanders that are saying, yeah, we'll just wait till like 9 a.m. until we decide where we're going to go to watch the eclipse. And then we're going to bring a ton of cars and traffic for those places.
No, the West Fjords are literally preparing like it's a disaster zone. They've been repairing gravel roads. They have been adding more fidelity to their mobile networks. They're staffing up hospitals and fire departments. They have emergency crews on standby. They literally set up a Reykjavik Beach convenience center as well, similar to what they would do in another crisis like a volcano. All for people just going to watch the eclipse. The stories are so funny. One person who operates Iceland's westernmost hotel received her first eclipse reservation 14 years ago. That's the thing about eclipses, is that you know that they're coming many years in advance. And she thought it was a joke initially, but this is how much people take this seriously. They want to be in the path.
The solar eclipse economy is absolutely booming. We saw this 2 years ago in the United States, where people were traveling up to northern Vermont or the Midwest places like Champaign, Illinois, that just saw tons of visitors because you do know that this is coming, and you can book Airbnbs and hotels far in advance. And this is only going to increase the eclipse economy because we are in a golden age of solar eclipses. So we have one today in Europe. Next year, on August 2nd, 2027, this one is called the
S&P breaking out. Okay, this looks pretty good. S&P continues. All right, we got the hedge flows turning up.
2114. So
all right, S&P is turning up. Looks like we're going to keep going here.
In 23 seconds, I Google like Airbnbs in Luxor, Egypt, hotels in Luxor, Egypt. People were on Reddit threads years old saying we're already going to be near Egypt for this eclipse. And then we have the capstone of this trilogy of eclipse, the golden age of eclipse, which concludes July 22nd, 2028. Totality is sweeping across Australia and New Zealand. So I know a bunch of people in Europe for this. I probably know a bunch of people heading to Egypt, and maybe I'll think about Australia and New Zealand because it's just a good opportunity to go.
Let's move on. Bumble is completely changing what made it Bumble. Struggling dating app is ditching its defining feature. Women no longer have to initiate the conversation. As of yesterday, either person could kick things off, meaning guys, we're once again going to have to come up with something better than hey. Bumble birth.
All right, looks pretty good. S&P rising.
Tinder co-founder Whitney Wolford. The app was designed to improve the dating experience for women after seeing men send aggressive opening lines and follow-ups. The problem with that approach is that women eventually came to resent it. Bumble said that 2/3 of women it surveyed, particularly Gen Z users, actually prefer men to send the first message, with many saying that they felt less pressured when they had a choice over how the conversation begins. Bumble also
S&P 500 back above 7750.
losing 21%.
Hedge flows turning, moving back above resistance levels. Okay, next level here is 7765.
Honestly, this is a pretty drastic departure from Bumble.
Non-zero day.
Doesn't see it that way. But we are introducing
7765 0 day.
She describes it instead as a progressive evolution.
Hedge flows turning up.
Dating has changed in the past decade. Neil, good move, bad move. Are you ready to make the first move?
However she wants to frame it. Of course, this is a drastic move. It's like Costco changing at $1.50 pizza and soda combos. The DNA of the company from the very beginning was the value prop, but clearly this model is not working. I think they've identified the right problem, which is what they say the reality of modern dating is that everyone is super busy. It's not for lack of interest, it's for lack of timing. So they're not only allowing more people to make the first move or make the first message and to increase engagement, it's also increasing the message response window to 72 hours. Currently, or previously, it was 24 hours. So if you're just not at your phone, you're busy, you have a meeting, you're traveling, which is just what modern young professionals do.
Let me call Corey.
So I do think dating companies, Bumble included, identify that there is a problem and they're throwing a bunch of things at the wall to fix it to increase users on their platform.
Bumble is also doing something that seems sacrilegious to the old era of dating companies, which is killing the swipe. This is something that's been on their product roadmap for a while now. Swiping was the thing that created modern dating. That's what Tinder popularized. That's what Bumble came after it, and lots of apps adopted it as well. But Hinge never had swiping. It was mostly you go to a profile, you interact with the prompts first, and then you like it. So it's ditching the swipe, it's ditching its fundamental premise of when you're making the first move. Where is it going then? What's the future of Bumble? And unfortunately, it has a lot to do with two letters. AI, they're experimenting with tools for matching and profile feedback. Whitney Wolf Herd got a lot of pushback to this, but she floated a future where personal AI agents could interact with other people's AI agents on the user's behalf before the humans ever meet. So that created a lot of Black Mirror sort of conversation around the idea that my AI is dating your AI, and they will tell us if it's actually good for us to meet in person. That's the future that Whitney Wolf Herd thinks that we're going towards. Not sure if it's the right one, but they had to do something different.
The future of dating apps is not just AI, but it's another 3 letters, which is IRL. Bumble
keeps on.
Just keeps on. Bumble and Tinder and Hinge and all these other dating apps are leaning into in real life experiences because that's what they think their users want to meet in low pressure, low stakes situations in real life. Tinder has actually had a very successful rollout of its events tab. So they rolled this out in Los Angeles and said, okay, we're going to host meetups for you to just hang out with people in a low pressure situation. And now they are expanding that pilot program in Los Angeles to a bunch of other cities. And I've seen subway ads for Tinder events all over New York City. So they're certainly here. And again, these are defensive actions. They are not aggressive actions. They don't come from a place of offense or success because Tinder has not reported positive user growth in more than 3 years. It just reported its recent in its recent quarter, monthly active users are down 7%, and then that was actually an improvement from the previous quarter before that had an 8% decline. So these dating apps, the business models kind of falling apart. They're looking to a bunch of letters like AI and IRL to turn things around. Moving on, these days, it's not easy to tell whether a post you're reading or a song you're listening to was made by AI. But yesterday, Anthropic and Spotify made moves to clear up the confusion, part of an ongoing movement by companies to distinguish AI from human creations. Anthropic said it would soon begin to slap a watermark on Claude-generated text and images in order to comply with the new AI transparency law in the EU. That doesn't mean you will visibly see a tag like written by Claude on every LinkedIn post, but it'll be embedded in the metadata for back-end detection. Anthropic stressed that this watermark will stick with the content wherever it travels on the internet and will be present no matter which Claude product you're using, whether it's Claude Code, Claude Cowork, whatever. Meanwhile, Spotify also made moves.
All right, S&P not following through yet.
Over its platform. The audio streaming service said it would start labeling AI-generated artists with robots.
S&P, just S&P. Just a reminder, I'm going to leave at 3:30 today. I'll leave the stream running, but my son has his first orientation day. I want to go with him today, just for support. Let him hang out with his friends. I'll be there just in case. So I'll leave at 3:30. Leave the stream running. Looks like the S&P wants to turn back up.
Is made by a person or a machine. And I was reading this Twitter thread. It is very corrosive for society to have that happening. You need trust to function. And lots of AI is built on, like plagiarism and the like. So we've talked a lot about the toll when it comes to the workplace, when you get fed work slop by one of your coworkers, and it just like creates more work for you. It reduces trust within the organization. You extrapolate that across society as a whole, and a lot of us have been feeling duped, or you just feel on edge because you don't know if the LinkedIn post you're reading is by a human or not. If the song you're listening to is by a human,
All right, no follow through on the S&P yet.
towards Anthropic's
Hertz at the high of the day. Hertz.
to install Spotify doing a similar thing. They need to figure this question out because the fundamental thing that AI is built on, it seems like it's bad for society, seems very anti-human. They need to figure out a way to get around that.
We're already seeing chaos in industries like publishing. There have been a number of scandals, controversies, whatever you want to call it, about books highly there was a hot crime novel called Call Me, I'll Hide. The agent pulled support for that book after the author was accused of using AI or leveraging AI to help the book. And then we've also seen this in the music industry as well. We saw Spotify make this move toward labeling AI artists because a number of artists have come to the fore recently where people are like, they sound AI, it looks like AI, we aren't sure. There was that lack of trust. Thinking about Velvet Sundown, which was this rock band that had a lot of popular songs, and 117,000 monthly listeners on Spotify. People question whether Velvet Sundown was AI or a real band. Turns out they were AI. And then there was Sienna Rose, another artist. They were into Spotify's viral top 50 in January. Did not appear to be real. So this doubt, this lack of trust is creeping into publishing, books, music, and work as well. And looks like platforms, again, as we talked about from the dating app story, just from a defensive posture, trying to get ahead of this because they can't have their users not knowing what to trust or what to believe in.
All right, we're going to take a quick break and come back with a story about braids right after this.
Slow roasted chicken at Taco Bell. It's inside the new Cantina chicken rolled quesadilla. Yeah, it's in there. He gets it. The new Cantina chicken rolled quesadilla, only at Taco Bell.
The purpose of engineering is to unlock performance. This is a hex lab pen with hybrid technology that perfectly balances durability, steering power, and non-stick cooking performance. Its purpose is to help F1 driver Yuki Tsunoda pursue his dream, cooking a steak for me. Great sear.
Thanks for letting me borrow your pan.
Thanks for letting me borrow your car.
Wait, what?
NetCredit is here to say yes, even when other lenders won't. Apply online in minutes and get funds deposited the next business day or sooner. NetCredit. Credit to the people.
You have no idea what you're going to encounter.
Alaska State Truckers.
The University of Michigan is getting rid of
SpaceX at highs.
freshman. Sounds like a fever dream you might cook up after your alarm goes off for your first 8 a.m. class after a night out, but it's a real pilot program rolling out in fall of 2027 that will apply to about half of Michigan's 8,000 incoming freshmen. The school says it's meant to curb the mental health crisis unfolding among college-age individuals and let intrinsic motivations guide personally meaningful academic journeys. In other words, the prospect of gunning after A's can get in the way of learning. But it is not a true free-for-all. Professors will still assign grades internally for things like scholarship and award purposes, but students won't see them on transcripts or on Bob's refrigerator. While MIT and Caltech have tested similar grade covering programs, Michigan is jumping on the bandwagon when most of higher ed is headed in other directions. Grade inflation seems to be a bigger issue. 74% of Michigan undergrad grades in 2022 were A's, up from 58% a decade earlier. And Harvard just capped A's at 20% per course. One thing it did get right, freshmen are coming into college pretty unprepared. UC San Diego saw remedial math placements jump 17-fold in 5 years. So the freshmen coming in probably are stressed out if they see the bad grades piling up. You know, I can't tell if Michigan is solving a problem here or creating an even bigger one.
Well, students were big fans. The student body president, Summit Lutz, said, yeah, like we love this. They cite data that said there actually is a mental health crisis among freshmen that is closely, college students broadly, that is closely tied to academic stress. And 18% of college students reported severe depression symptoms, according to a 2024-25 Healthy Mind study. Look, when you mentioned that 75% of all undergrad grades were A's at the University of Michigan or some derivative of an A. So it doesn't really matter to a person's transcript broadly about whether they want to go to grad school or anything else, but it is just a way to reduce stress. So
SpaceX.
See a big generational divide area of the older folks saying, wow, these are coddled youth, the coddled students, they need everything handed them on a silver platter. And when you guys were college students, we need just to take the pressure off a little bit. We're 18 years old coming into college, so they are very happy with us.
Yeah, history professor at Michigan, Derek Peterson, said the idea
SpaceX looking really strong here. Successful launch of a Falcon 9 with about, I think they said 20 satellites. 24 Starlink satellites added.
Professors who are advocating to bring the SAT and ACT back. More than 1,100 Cal math science professors are urging the UC regents to reinstate college entrance exams because they say that too many students are arriving unprepared for college level STEM work. So they are saying that it is not good that these kids are coming in necessarily unprepared. That is leading to more stress. It's leading to worse outcomes for teachers as well, because they're spending all this time supposedly teaching them college STEM, but actually just going back and building years of missing foundational math. So is it better to paper over those things, or is it better to just prepare kids better before they reach college so then they can make A's without having to cover up the A's? So you're seeing kind of two camps forming in higher ed right now, with both sides just wanting the best outcome for the students. Let's finish the finish with some final headlines. Amazon's army of New York City delivery drivers may soon discover who their real boss is. A New York City bill backed by Mayor Zoran Mamdani would force Amazon to directly employ roughly 5,000 contract workers who deliver its packages across the city. Right now, those drivers technically work for more than 40 small delivery contractors, even though they wear Amazon vests, drive Amazon-branded vehicles, and deliver Amazon packages. Supporters say that setup lets Amazon outsource the deliveries, but also the responsibility.
All right, Cerebrus about to go, CBRS.
Amazon says forcing those workers onto its payroll would blow up its delivery model and potentially make your purchases go slower.
Cerebrus is going.
This showdown is happening in New York, but the stakes could easily go nationwide. The Teamsters Union, who represents delivery workers, say that if it passes, they'll push similar legislation in cities across the country.
You're not surprised that Amazon has spent a lot of money fighting against this particular bill. They have forked over $5 million on a big opposition campaign with a couple of TV ads. It also comes at a time when Mamdani's fight against big business and the wealthy, which is a core pillar of his platform, has hit some stumbles. Recently, a judge paused that new tax on luxury second homes, pied a terre, saying it was a semi-botched pullout, and then the city has appealed that. So there's an ongoing legal fight there. There's an ongoing legal fight when it comes here to Amazon and FedEx and other big companies are also included. Reminds me of the fight back in 2019. I was early writer at Morning Brew. California lawmakers passed this bill that had all these gig working companies classify their drivers as employees rather than independent contractors. We're seeing that play out, at least in New York City here in 2026. It is a symptom of just this growing gig economy. We see these people every day in New York City, delivery workers. This will decide who exactly they work for, a subcontractor or Amazon itself. All right, that is all the time we have. Thanks so much for starting your morning with us, and have a wonderful Wednesday. So you're up to your wedding venue. I'll see you up there tomorrow. And Morning Brew Daily listeners will catch you back behind the desk later next week. To share your thoughts on the episode or anything else, send an email to morningbrewdaily@morningbrew.com or DM us on Instagram @MBDailyShow. Let's roll the credits. Emily Milliron is our supervising producer. Raymond Liu is our senior producer. Our producer is Olivia Graham, and our associate producer is Olivia Lake. Technical direction by Nina Miller. Hair and makeup is in the West Fjords to see the eclipse. Devin Emery is our president, and our show's production of Morning Brew.
So Daniel, let's run it back tomorrow.
The purpose of engineering is to unlock performance. This is a hex lab power with hybrid technology that perfectly balances durability, serial power, and non-stick cooking performance. Its purpose is to help airborne driver Yuki Tsunoda pursue his dream of cooking a steak for me. Great, sir. Thanks for letting me borrow your pen. Thanks for letting me borrow your car. Wait,
what?
SpaceX is going. I think this is bullish.
We believe what you sleep on matters. So we keep it real. Real materials.
Holy smokes.
Done right.
NASDAQ size bull risk reversal bought 11,322 calls while selling 725 puts.
No shortcuts. Just real comfort, real support, and real healthy sleep. Because real is better. Shop certified organic mattresses at avocadomattress.com.
I'm here at the scene of the crime, and we can confirm the suspect in the house behind me has lied about their Candy Crush level.
If you're gonna brag, you better back it up. You've got over 20,000 levels to beat. No Wi-Fi? No problem. Play anywhere, anytime, and let your progress do the talking. Best of all, it's free to download. So just go for it and see how far you can really go. Download Candy Crush Saga today.
Te quieren un show de evolution. Todas las emociones en un solo canal. Bienestar. 24 películas. Seleccionadas para ti o en público. Lifetime Cine Selecto. Disponible ya.
I know you want me to serve up something on this morning's CPI report, and I will in just a few minutes. It was a bad report, but I want to begin with a fireworks evening yesterday for tech that is blowing over into today. AI cloud powerhouse CoreWeave smashed profit estimates with a massive revenue surge and a jaw-dropping $100 billion plus backlog, which to me is a lot more exciting than CPI. Just saying, stock is up double-digit percentages out of the gate, and the company's ticker page is red hot for the platform. Meanwhile, Super Microcomputer put on a masterclass of its own, crushing profit estimates with huge gross margin expansion. Geeky point, but it's an important point nonetheless. Its shares are rocking today as well. I can't say I am surprised by the results here, as Super Micro pre-announced bullet results a few weeks ago. You all just had to pay attention. You probably did. Both of these result reports should squash concerns of demand for all things AI. I mean, totally stomp them out. AI infrastructure spending is roaring ahead, and Wall Street is buying every single bit of it. And last but not least, you had SpaceX CEO Elon Musk in his usual Super Bowl self last night in address to employees. Here's where it stuck to me from Big Elon.
They have revenue will exceed SpaceX revenue probably in September, like next month. And will significantly
SpaceX will outdo.
SpaceX revenue in the fourth quarter.
Wow.
About that.
That's pretty cool.
Probably in 4 or 5 years, AI will be 99% of the value of SpaceX.
Who wears the black leather jacket better, is it Elon or NVIDIA CEO Jensen Huang? Get at me on X. I want to know. I'm going with Jensen all day. Sorry, Elon. Here on the opening bid roundtable, Adrian Helfer, Westwood CIO of Alternative and Multi-Asset Investments, alongside Yalfan Palma and Jennifer Schaumburger. Good to see you all. Adrian, let me start with you here. Big morning for technology, tech stocks, CoreWeave, Super Micro. Is it time to just put to bed that AI demand is slowing down?
Oh gosh, no. I think the message we got this morning was certainly that AI demand is, if anything, is speeding up and was constrained this time. We saw from Super Micro telling us directly that they would have had more demand had it not been for the constraints. The constraints are in power, in cooling, and energy. And so start to look for areas where you can actually buy into rising prices and constraints as well. Super Micro, we saw their margins increase much ahead of what their expectations were, in part because they see rising prices and rising capabilities to charge customers for what they're doing, because the constraints are keeping them from getting more orders than they otherwise could have.
Andrea, I'm feeling it. Those are points well taken, and I agree with you. Do you take these two reports then, and you tie them together, and you think, wow, when NVIDIA reports August 26th, this is going to be another big quarter, and it could really move the market?
I mean, when NVIDIA reports it'll be a certain notable, but they've already come in and told us that they're going to be financing a dramatic amount of increase in infrastructure themselves. They're trying to take some of the pressure off of the concern around circular financing, around financing their customers and directly financing their own capacity. That'll be a big watch point for investors. And it was the same with CoreWeave. CoreWeave was not only that $100 billion in backlog that they announced, but they also said that $25 billion after the quarter came in customer orders as well. But they're financing that 9 5/8 on their last bond issuance. So that's something that NVIDIA is going to be a watch point for. How much can they take the watch point off of financing for the infrastructure?
Brooke, you've been pulling apart these numbers out of CoreWeave and Super Micro. What stood out to me on CoreWeave really is that $100+ billion backlog.
Yeah, that was up about 50% from the prior quarter. And so investors certainly optimistic about that. Something else that really stood out to me was just the view from Wedbush that payback for bills is extremely rapid. They've under 3 years with high infrastructure pricing is just another sign of these strong customer requirements. You can see that stock popping nearly 20% at the open this morning. And I was also reading a note from Deutsche Bank, just sort of speaking to the volume or the momentum of this moment.
Okay, I got to mute the audio here, guys. Got to make a phone call.
So you're seeing a lot of record production ramp up in our factory to meet that demand. It's the demand is not the problem.
Rocket Lab look like it wants to go some more. There goes Hurt.
And we're getting a lot of strong interest from existing customers and new customers that need more launch capacity. And so that bodes well for our alpha ramp up of production, as well as getting to the first launch on Eclipse as well.
I encourage everyone watching or listening to this, go read Jason's earnings call on Yahoo Finance. You want to get smarter real quick, listen to everything Jason was talking about, some of which he's talking about here, right in this interview. All those capacity constraints, Jason. What is driving that? When you go out to sites and you're watching these rockets being built, is it access to skilled labor? Is it parts? Or are you just also literally developing new processes in real time?
Well, certainly when I came to the company 2 years ago, we've made exceptional strides. The workforce is moving out. We've expanded the workforce. We've hired a lot of engineers and manufacturing engineers and technicians, a lot of skilled workforce. There's a lot of talent here in the Texas area. They are getting a lot of reps. And so that's, resulting in just record production. And then you go into our 25-mile radius of everything co-located, all the vertical integration that we do here, of building our own carbon composites. We had an automated fiber placement machine that is just moving out, and we're simultaneously building multiple structures and tanks for our alpha rocket on one single barrel. And so those are best practices that we're putting into place with our workforce, getting developed. And then that's resulting in, between May and August, just record production of our tanks, our machine shop, and we just continue to improve. So it is a combination of people, processes, supply chain, all the above. And I'm just proud of the progress that the team's making.
James, you're going up against a behemoth that recently became public in SpaceX. There's a giant balance sheet, giant numbers, and it's Elon Musk leading this thing in addition to Tesla. Is there a talent war between your company and SpaceX and then Rocket Lab? And how are you attracting and retaining the talent you need to get these rockets up into the sky?
Well, we have bold missions here at Firefly, and that's what gets everyone inspired. And, it's a thrill to come to work every day because we have a lot of responsibility, accountability, ownership in everything we're building. Safety, quality, reliability is very important to me and our company. And so we're very proud of the systems that we're building and making sure that they are successful, just like our lunar lander landing on the moon last year. And we've got several more. We just won our 5th and 6th moon missions. And we want to continue to increase the probability of mission success for NASA for each of those landings and orbiters. And the same thing on the launch side. We want to make sure that we ensure that we deliver that payload on orbit to the right orbit for our customers. At the end of the day, that's what matters. And so we're focused heads down on execution with our production ramp up, with our launch operations as well. So it's an exciting place to, cut your teeth and do exciting missions, bold missions. Really, it's, getting a lot of recruits. We're getting a lot of talent here in Texas, but also across the nation as well. And so having these bold, challenging missions, it really makes a difference.
You mentioned the moon. What's next on the moon for Firefly, and what is being achieved going to the moon at this point?
Well, you saw what NASA Administrator Jared Isaacman said in March, and then every month he's been giving updates. And in the first month, he awarded Firefly a couple of moon-based missions. He awarded the Moonfall mission, which is a flagship program for the NASA moon-based program, where we're going to take the JPL drones to the South Pole and deploy them using our electric spacecraft. That's a $75 million program. And we also won a $144 million program to accelerate the near built-to-print lander of our Blue Ghost mission 1, so that we can get those payloads to the moon as well as soon as possible. That's phase 1. Phase 1 is just the science of survival and learning as much as you can about the moon. Phase 2 is putting boots on the moon. Phase 3 is having that moon base where we'll have a permanent human presence So it's ramping up on the demand side for the moon-based infrastructure. And not only are we supporting the Eclipse 1.0, we also put a bid in for Eclipse 2.0 for larger landers. So we're taking everything that worked for our nominal landers and growing it in scale and size so that we can take more mass, more volume to the moon to support the moon initiative.
Lastly, Jason, real quick before I let you go, does the Eclipse launch in 2027?
You know, that's our target. We are just heads down, making progress. We just crossed 150. It was 220.
The CEO of Firefly talking.
The full mission duty cycle, 260.
Looking for this to turn back up.
Great data from that, and that's a lot.
Come a long way from the last time we looked at it was over here back in April. It dipped, broke out, and then faded, dropped back down to the 20s. Don't like it as much as I like Rocket Lab. Hertz, cheap stock. Been playing with this one. Looking pretty good. Hertz, I have the $2 call. Hertz looking good. Got the December $3 call now. We rolled out to the 3, sold the 2, bought the 3. More time.
Space Boom. You can watch the episode of Power Players on Yahoo Finance, our app, YouTube, and Samsung TV, or listen on Apple Music, Spotify, and Amazon. Be sure to leave me a review.
Hertz, nice follow through right now.
Love hearing from y'all.
Rocket Lab's looking for a move back up to the opening range high. Okay, Netflix is turning the corner. Maybe Netflix can do something. Microsoft at the lows. Rocket Lab looks good. Broadcom, AVGO. Okay, S&P pulling back. Okay, looks good. Netflix turning up. Netflix looked like it was going to do something late last week into Monday. Netflix, we're back below the 50-day moving average. So I want to see some higher lows, print, and then a higher high, get above the 50-day. 200 days overhead. Netflix looking pretty good here. Netflix looking good.
To have gold as a hedge against inflation. I know that this is the only thing that represents real money. I've had a portfolio of course stocks.
Netflix looks good. Netflix on the move.
Gold part of your portfolio.
Okay, SpaceX. SpaceX is still pushing here, looking really good. SpaceX, Netflix looking good. Netflix.
Physical goal is that I'm in control of my money. No one else has its hands on it, but I can put my hands right on it right now. If I need it right away, it's there.
If you'd like to learn more about why physical gold should be an important part of your portfolio, call to receive the complete guide to buying gold. This is important and valuable information, including facts you should know about purchasing gold.
So leave here around 3:30, okay?
Yeah, I need call now, and you'll also receive the Global Gold Forecast special report. Inside, you'll find the real issue.
All right, looking good. Netflix still going here. Netflix.
This is Mark Catlin, 30 minutes into the US trading day. So let's see what stocks are doing. We had, of course, the consumer price inflation report this morning that came out in line with estimates and showed that while inflation didn't outright drop month over month like it did in June, we are still seeing sort of a moderation in the pace of inflation. It seems like that's largely what the market expected. So we have not seen a huge reaction here this morning, either in stocks, which are mixed right now. We've got the Dow, little change, the S&P 500 up about 0.25%, the NASDAQ up a little more than 0.5%. And let's also see what's happening in the Treasury market here in reaction to that CPI number. There on the 10-year, we have very little change, a little bit of a back off in yields, a little bit of a decrease in expectations being priced in that the Fed will raise rates in September. We've got more data between now and that meeting. We also, of course, have Kevin Warsh's comments coming in Jackson Hole later this month. So the 10-year little change, the 30-year little changed as well. And of course, crude oil, we continue to watch as one of the big inputs to inflation. Energy prices moderated last month, and we're seeing them, even though they're higher than they were, backing off a little bit today. Individual stocks that are watching today, we continue to watch what's going on with big tech. NVIDIA showing further strength at 3%. Microsoft, though, is lower. SpaceX continuing a little bit of its comeback here. So, but largely a mixed picture when you look at large cap tech. When you look at the sectors within the S&P 500 today, tech is the outperformer writ large, mostly hardware, some software in there, up 1.6%. On the downside, we've got communication services stocks that are falling along with consumer discretionary in today's session. So not a lot of theme that is sort of driving stocks overall here. We're getting to the end of earnings season, so there's less of that sort of big earnings to pull the market or push the market one way or another. So something to keep in mind here as we head into sort of the doldrums of August. There's one company that we'll be reporting later this month that's pretty important. That's NVIDIA. So we'll be watching that closely to see what happens. In the meantime, NVIDIA this week unveiled new plans to finance the AI build-out. The chip giant announcing strategic partnerships with 6 financial powerhouses to line up $500 billion in funding. And NVIDIA CEO Jensen Huang took to X, saying access to capital is uneven while discussing the financial needs for AI firms. Joining us for more on this is Ali Melli, managing partner and CIO for Monticello Capital Partners. Alan, thank you so much for being here. You're in the credit space, which is very interesting for both positive and negative reasons, perhaps right now. So thank you for being here. I want to get your take on NVIDIA, not just NVIDIA, but this whole AI build out and the increasing pace of sort of off balance sheet financing that we are seeing for these projects. How should investors be thinking about this?
Sure. So I'll start with some of the market mechanics and market dynamics. If you look at the size of the AI build-out, the CapEx expenditure for next year is going to be projected to be north of $1 trillion. And that's just the hyperscalers. And then if you add other components like the fact that there is going to be power and energy and real estate associated with that, it is going to be much larger than that. On the other side, we are getting to a point where the go-to-market for financing this CapEx would have been initially the cash flow from operations of the hyperscalers, and then for companies that did not have access to those kind of cash flows would have been the IG market. But right now, this size of the CapEx is so big that the cash flow from operations is not sufficient. So they started tapping the investment grade bond market over the past 2 years, and especially this year. And now it's starting to overpower the investment grade bond market. So like you have issuance that are running at the pace of $250 billion so far this year. And it may possibly cause issues because it's not just about credit quality, it's about supply and demand. So even if you take it at face value that hyperscalers are going to do good credits, and I have no reason to doubt that, there is just not enough capacity in the IG market to capture and finance that kind of CapEx. So
Netflix at the high.
It doesn't seem like these companies, and certainly not the biggest companies, are having trouble yet tapping that market. They might be, in some cases, like in the case of SpaceX,
Hertz at the highs.
paying a little bit more to borrow that money. But in other cases, but it doesn't seem like there's been lack of access.
there is no lack of access per se, but it's just because they purposefully have been keeping the size of issuance limited. We are seeing, especially if you look at across the curve, as in 30-year point, 15-year point, 20-year point, every time there is a new issue, the market moves a little bit wider, the spreads moves a little bit wider. And then for NVIDIA in
All right, CBRS looking good for earnings tonight. I sold my CBRH shares. CBRX, I sold shares to profits. I got all of those shares are gone now. All right, CBRX. CBRX. Okay, that looks good. Almost at the high of the day. CBRS.
You don't want too much of your portfolio to be a single issuer. You want into essentially risk limits against single issuers. And you're getting to a point where tech essentially is becoming more than 10. It's starting to get to a point where it can overtake financials as the biggest component of IG market.
Wow. Okay. So I think the question, this is something I talked about earlier in the show, is so then who holds the risk, right? And this is something that Michael Burry, who has been a sort of critic of, and someone who's called out what he sees as an AI. He put out a graphic this morning where he basically said, it's a sort of a complicated graphic. It's on there. I'll let people look on it themselves and try to decipher it. But effectively, what he's saying is we all hold the risk. The risk is more widely held now because I'm, say, someone who owns an annuity through Athene, which is owned by Apollo, is then probably holding, some of this debt in various instruments. Is that something we need to be worried about?
All right, SpaceX looks good.
One would need to have about systemic risk, but again, there is no evidence that one particular company is holding more of share of the risk.
SK Hynix back up to the opening range high. There goes CBRS. SKHY.
There is more direct issuance.
Looking for 170 on these.
Project finance, structured credit.
Is the indirect finance inherently riskier than the direct finance?
Not inherently, but also it's not inherently less risky.
Right.
Like the fact that actually in and of itself is where the risk is created, because again, coming back to NVIDIA's balance sheet, NVIDIA is reporting true sale of their GPUs. They recognize their GPUs as sold, if you look at their accounting.
Right.
But then they are taking the residual of that. It has, two implications. One of them is accounting, the other one is legal. If you sell something to someone, but you take the residual risk, have you really sold it or not? If you sell a car, if you are Ford or GM, and sell your vehicle to your customers, but tell your customers that, don't worry, if your vehicle depreciates in value, I will buy back your vehicle 3 years, 4 years down the line, so you don't worry about depreciation. Is that a sale or is that a lease? And is NVIDIA getting into a world where what they're actually doing is financing their own customers? And that's where one would say it is not necessarily it's more risky or less risky. The risk will always be, will the GPU retain its value? It is how that risk is being reported. Is that going to be, is the financial statements transparently reporting that risk or not?
And is that risk being priced appropriately? I guess is the other question. Some of it we don't know, right? Because we don't know exactly how this new financing facility is going to be structured.
Rocket Lab, I'm looking for a follow through on Rocket Lab. Intel closing in on the high of the day. Intel.
That is going to be sold to insurance companies, and that's probably not what the risk that Mr. Gore is talking about. And then the 25% that NVIDIA.
Okay, what's Palantir doing? Palantir.
Is the residual. So one of the biggest questions when you use a structured financing is, if I buy a GPU today and start leasing it out to maybe some of these companies that are not hyperscalers, they might be weaker credits. They might be high yield companies that might be leasing the GPUs.
Broadcom not participating today. Broadcom. Looks like 2 days of profit taking.
You know, look at the inference for
Broadcom looks like 2 days of profit taking. Actually, 3 days at the highs. Monday, Tuesday, Wednesday.
beneficial, but still has some. There are two counters.
Okay, NVIDIA inking partnerships to fund AI build out. So that should be good for NVIDIA.
It has depreciated a lot.
Netflix turning back up. Netflix.
Scarcity value, so they go for $40,000, $50,000 per GPU, and now they can be sold in the secondary market at $8,000. So significant depreciation. That is the risk that NVIDIA is saying 500. The other component is, who is the end user on these GPUs? Are they being essentially financed? Essentially, is the end user a startup that is burning their capital, or is it people that are actually paying for GPUs? Who is the end user? Is it being subsidized by
Netflix?
By capital? Is it being
okay, Doji spinning top needs to get back above the 50-day. Looking a little better though. S&P going here. S&P popping.
So put all this together, you invest in these kinds of assets. Is this something that you think is worth those risks that you outlined? Are you?
All right, looking good. S&P is popping here.
Not at this price. To me, there is always a question of size and price of this.
Looks good.
I mean, there is one thing if this was a $5 or $10 billion, we do project financing all the time. Then we export LNG, we just use contracts and sort of more complex structured financing. Then we finance power plants, but those are $5, $10 billion, even if they are large complex. The full question is the size, if something is not trillions of dollars, is that size the right size? And but if something goes wrong, who will essentially be holding the bag? At that size, to me, it just becomes the sizing is too big and it may need to be repriced. So I would rather, for example, take depreciation risk on autos and get paid a lot more for that risk than take depreciation risk on GPU, where there is so much capital chasing GPUs.
Yes. Thank you so much for coming. Really appreciate it. Obviously, this conversation is ongoing, not the last we'll hear of this. Thank you. Coming up, we'll be talking about how earnings with the CEO of the company. That's next.
The hard part used to be earning the paycheck. Now it's making it last. So you do more with less. And still, it's not enough. At National Debt Relief, we've helped over 1 million customers break free from debt. We'll put together a plan to get you back on track. So when life happens, you'll be there for it. Your story is just getting started. And the best parts are still being written. Call or visit nationaldebtrelief.com to get started.
They say there are no ideas, just ways to combine. The genius is in the mix. So what happens if we bring these two together?
Sipping gin juice. Yay, back. No, no, I don't have my mind. Money on my mind. The next place I'm still shaking.
Still cheap.
Stick it with me. Ready? Please.
Tired of the endless storage shuffle? Free yourself with WD Elements. 20 terabytes of expandable storage means room for everything. No more choosing what to keep or delete. Just plug it in and breathe easy. Fast USB 3.0 speeds keep your workflow smooth, while rock-solid reliability keeps your data safe. Finally, storage that works as hard as you do. WD Elements.
Candy Crush. Download now. Just makes it worse getting up early in the morning. Just not sleep I want.
Getting this piece will be like icing on the cake.
You should be scared. Excited. This is like the nonstop roller coaster that you want. It's reaching out.
SK Hynix trying to break higher now. SK Hynix, let's see if that can go. Nvidia's turning up. Nvidia turning back up. SK Hynix trying to take the high road. SK Hynix. Looking for more upside.
Shares are surging this morning following a strong second quarter earnings report, strong customer traffic, and same restaurant sales helping maintain growth momentum, even as the company navigated industry-wide food safety concerns and macro uncertainty. Rick Schulman is with me here in the studio, and CEO. And the other one is who covers everything food and consumer products. It's also here with me in the studio.
Good to be back.
So now we have these strong numbers against the backdrop of the cyclospora outbreak that was affecting a lot of chains that serve greens. You talked on the call that you don't directly source the greens that seem to have been affected. But talk to me about if it had any effect in the quarter because of the sort of concerns generally.
We noted that as we exited the second quarter, we did see the broader concerns around leafy green and produce consumption start to impact the trajectory of our same restaurant sales, which we have since seen begin to rebound.
And when you think about sourcing from Taylor Farms, you don't source directly from where this outbreak had happened, and you don't source these ingredients or anywhere near that. But at the same time, you do source some ingredients from Taylor Farms based on what I heard you say in another report or another interview. So are you reconsidering your relationship with Taylor Farms right now?
We're always looking at our relationships with our suppliers, with third-party audits. We visit them on site to make sure they're adhering to our food safety standards. And we always review those decisions on an annual basis to understand, are they the right partner moving forward? And we will look at fact-based and data-driven decision-making on whether it's Taylor Farms or one of our other over 100 suppliers that we source from.
And you guys do have an outside food safety advisory board, right? So you said you look at it annually, but was there anything in particular about this particular outbreak, because it was so severe and fairly widespread, that made you look at any of your other processes and say, maybe we need to tweak some things?
So the industry is always learning from every outbreak, what we can do better, what as technology evolves, we have food tracing software that helps us identify these much more quickly than we used to be able to identify. And our industry advisory council of industry experts, Dr. Dave Batchison, Dr. James Marsden, Scott Brooks, they help us as we grow what else we can be putting in place to ensure proactively that we are doing everything we can to make sure.
Okay, IWM turning back up. IWM looking good there, Mondo.
So that's our commitment.
IWM.
Our suppliers and our governmental agency partners. I think in this situation, there was a lot of incomplete and inconsistent communication up front that exacerbated some of the consumer confusion as to what was the root cause and what was exactly happening.
So what do you think that's from the food safety agencies, the federal agencies you're saying?
I think in general, the communication, in a world where we have 24/7 news and social media, that there wasn't a clear understanding for consumers exactly what was happening versus the more recent outbreak where there was a very quick understanding and tracing and clear communication on what the issue was. And that
the more recent salmonella.
At the same time, you did reiterate your guidance for this year, and you are still expecting somewhat of an increase in same-store sales growth. And what was interesting was that you actually saw growth from lower income consumers. So walk us through that dynamic.
Yeah, I think it's a testament to, again, the strategy that we've embarked on in recent years where we've really worked to invest in our teams and invest in our guests. And what I mean by that is not raising menu prices nearly at the rate of CPI or what the average restaurant company has raised in recent years. So we've underpriced CPI by over 10%. We've taken less than half the price increases of the average restaurant company. And in 2026, we only took a 1.5% menu price adjustment at the beginning of the year with no further plans to increase price. And that's less than half of what we're currently running at over 3% on CPI. And so that's created more relative value for our guests each and every year where we can welcome more people to our table and they're getting more bang for the buck no matter where they're eating their combo.
As Brooke mentioned, you maintained your guidance for the year. I believe the upper end of that for comps is 6.5%, right? We're coming up a couple quarters that we're above that. So why didn't you guys raise support? And what does that tell us about the second half of the year?
Yeah, we tried to be prudent with our guidance. We wanted to incorporate that near-term impact we saw exiting Q2 with the broader concerns around cyclospora, as well as the fluidity of the macroeconomic and geopolitical situations and some potential persistence in inflationary pressures on consumers. So we just wanted to take a prudent approach for the end of the year.
You're also changing around the way you do prepare some things. You have a pre-marinated chicken that's now going to be made at a central location as opposed to the store. So what's behind that trade?
And we're always looking as we scale, how do we set our team members up for success? How do we deliver more consistent food quality and flavor to our guests and free our team members up to deliver exceptional hospitality? So this is very manual work that they do, prep work in the restaurants that we're now able to work with our chicken suppliers to pre-marinate. So the chickens are actually marinating longer, better, more consistent flavor, and then frees up that labor in our restaurants so those team members can deliver great, exceptional hospitality. So it is, probably the number one thing we've tested with our team members from a feedback standpoint. They're very excited. My partner and co-founder, Ted Zino-Christos, when we were at our GM all hands conference, when he announced that we were rolling this out, he got a standing ovation.
Oh, wow. So let's be there. When you think about the opportunity around innovation, the cadence of that, you rolled out this salmon. One, will it stay on to the end of the year? What do we know about braised beef and garlic shrimp? Are these going to be seasonal items? Is that the cadence you're moving toward?
Yeah, we always look at evolutionary rather than, say, an LTO type construct where we bring newness to our guests. And if our guests tell us that they want it every day on the menu, it can move into the everyday set. And so salmon's been great. We've seen really great performance with it. We do plan to keep it to the end of the year. And it's our first entree into seafood, which is a core aspect of the Mediterranean diet. So our customers are very excited to have that component on our menu. And roasted garlic shrimp that we just completed our market test that we're very excited about is another way for us to deliver a seafood option to our guests.
In addition to the regular expansions you're doing, talking about airports, what's going on with airports? Am I going to be able to go to Newark and get a Cava Bowl while I'm there?
That's maybe someday, but we did just open in Atlanta. Airport, as well as Logan Airport up in Boston. So we've got a small group of airport locations and our guests love it.
I don't trust airport food. No way I trust airport
so we're
food.
looking at opportunities to, again, bring our cuisine where people are looking for it.
Does that mean that we have to add a breakfast option?
No breakfast in the plans. Now, we may do a breakfast program just for our airport locations because they do look for that given the needs of the travelers, but no plans in our street locations to breakfast.
If we're talking Mediterranean breakfast, that would be my choice. Well, tell the people. Thank you so much. Good to see you. Coming up, we'll take a look at today's trending tickers. You are watching Market Caps.
It's time to get a little spicy, like fiery mayo and habanero onion spicy, all wrapped in spice. Still
New Tiki Torture at the Tropical Smoothie Cafe. Eat some good.
They say there are no deals, just ways to combine success. The genius is in the mix. What happens if we bring these two together?
Sipping gin juice, laying back. No,
Money on my mind. The explain cocktail shaker. Together, stale gin. Stick the cookie. Ready? Please.
They found the perfect apartment.
Intel still pushing a bit higher. S&P at the high of the day.
The same day.
Q's.
Exactly what we needed.
Q's looking for more follow through. IWM doing the best. IWM is still going. Mondo bought some IWM earlier this morning. Still going.
Good times. As one big happy family.
Okay, IWM looking really strong. Breaking out to new all-time highs. New all-time highs. IWM new all-time highs. Looking good. IWM a little profit taking. It is 2:30. I'll be leaving here around 3:30, leaving the stream running.
Yes. Well, we're going to talk about the future. I'm looking at forward PEs here. So I have a chart. This goes back to about 2011, 2012, and I have the tech forward PE versus the S&P 500, the broad market forward PE. And let me break that down. So forward PE is just it's what we call a multiple. It's how expensive a stock is, how much money is an investor today going to pay for $1 of earnings tomorrow. So if I'm willing to pay $10 today for $1 of earnings tomorrow, that gives me a multiple of 10. And in fact, right now, the tech and S&P 500 multiples are pretty close. They're about 19 to 21. But this chart shows that they have not always been close together. In fact, they've been pretty wide. And for most of the team, they were going up pretty close to each other. Then around 2018, the tech landscape changed, and we had a lot of recurring revenue, SaaS companies like Microsoft. That kind of changed a lot of things. And so we saw the tech multiple explode higher
versus the S&P 500. So that by the in the early pandemic, there was a pretty big gap in there. And that was due to the work from home trade and also a lot of industries just prioritizing cloud usage over everything else. And so that is
Apple just not getting much of a bid, huh? NVIDIA looking better. NVIDIA signing a deal for $500 billion in financing.
So this is only showing one line. This is the tech multiple minus the S&P multiple. Here it was 35% premium a year ago. That was pretty expensive versus only 10% today. What's really interesting to me is that remember off of those March 30 lows, we had that huge explosion rally, especially in semiconductor stocks. Well, the gap between those multiples did not go up that much. And you can see they came down. We did have a semiconductor bear market, and now they're up a little bit here, but only 10% premium. Now, I want to show you a much longer term chart. This is only the rate of change of that tech multiple. This goes back to the end of the last century. So we have the dot-com boom and bust in there. And when this collapses rapidly,
All right, futures looking good. Hedge flows rising and rolling over now.
2001, and we saw kind of an echo of it in 2003. Then the global financial crisis hit. We saw that tech multiple crash, and that was in 2008. And guess what? We just saw it crash again. But critical distinction here: there was no bear market, there was no recession. So what's going on? We had, if you take a look at the underlying ratio, price divided by earnings, we had the price go up by about 40% in the tech market. So tech stocks went up 40%, but the earnings went up 80%. So that caused the multiple to shrink. So that's where we are right now. And that's where I got this headline. The tech industry got a bear market reset without the bear market. And so for all the people saying, well, AI is in a bubble and this can't continue, there might be certain pockets of that, but the market has just gone through a giant reset without a recession and without all the damage that a bear market causes. So this gives me a lot of optimism for the future here. This reset is something that future rallies are built on. And since we didn't have a market crash, that just means the bull market can probably go on to the upper right. Back to you, Julie.
We shall see. As always, thanks a lot, Jared.
All right, S&P going here. Hedge flow line's moving lower, but the prices are moving higher, so that'd be interesting. Having a good little run here. NVIDIA breaking out.
23 cents, by the way, it's 88 cents yearly, obviously huge growth.
NVIDIA's breaking out. David.
Adjusted gross margin at 50.4%. Bloomberg Intelligence saying that the numbers were better than expected, but they would have even done better if they hadn't been affected by supply constraints. So momentum among the optical components makers that's been benefiting from the demand that we've seen within an AI build-out complex. The shares have already more than doubled this year. Looking at tax preparation company H&R Block is next up. Those shares are surging today after the company gave a forecast that was better than expected after its fiscal fourth quarter beat estimates. The shares at the highest in more than a year, by the way. The company said for the full year, it expects revenue of at least $4.11 billion, $4.08 billion is what analysts have been estimating. Those shares are up 20% thus far this year. And finally, taking a look at Gap, getting its latest downgrade here, the shares down 2.5%. Today was Corey Tarlow, our friend over at Jefferies, saying he is concerned about demand at Old Navy in particular. The Gap shares, by the way, have fallen basically since the company reported its last numbers. They have their next earnings report on August 22nd. And Tarlow said he was concerned about Old Navy after seeing more sales that are happening there, and also weakening survey numbers that they've done through their own research there. So I'll be watching that Old Navy brand to see how it does compared to the rest of the company. The shares off by about 3%. Coming up, how one drone manufacturer is using AI to transform development.
Fixes his hair. know why he picked such an ugly shirt, but knows he can do more. Ryan opens his Fidelity app, sees his opportunity, and takes it. Ryan sets his investments to automatic. That was easier than I thought. It's a good shirt. Like flowers, but also a cow.
Sure. Start investing with no account minimums. Talk about easier investing.
Whenever we are making a decision, we go to Square first. It's like the mothership for how we run a restaurant. I'm getting information I've never gotten.
Square supports the business in its entirety.
Yes, Square.
This is what your best era looks like. Every room is yours to own. Elevated fashion for women who know exactly who they are. Boston Prop. Defy all expectations.
People always ask if I cook the same way at home as I do at my restaurants. The answer, yes. A Michelin-starred chef Nancy Silverton. To make truly delicious food, you need the right tools. With Hex-Class hybrid cooking, unbeatable searing power, easy cleanup, but durable enough for both my kitchens. People think I'm cooking for the crowd, but I'm just cooking for one person, the one taking the next bite. Performance, no matter the kitchen.
Hi, my name is Krista. I'm very last week there were many issues that our toilet did something really gross. Then I'm glad that I came and he fixed everything. My mom is super happy and my dad loves the Oxford Press. Thank you, Mark. You're kind of like superheroes. Yeah, super.
Altair becoming a defining capability on the battlefield. Lawrence Meyer, Arterion CEO and founder, spoke to Yahoo Finance about how these innovations are changing drones and other defense tech.
So it's like any operating system like Windows or Android, it's the full solution you need, including the core applications. So it makes the drone fly, it allows it to lock on targets. And I would say the two most popular applications for the warfighters we work with, one is terminal guidance, which allows you to tap on the target on the screen and then launch a drone firing for that into the target. And the other one is swarming. We were the first company worldwide, in fact, to run a live fire swarm strike mission where you have 4 drones like being guided by a single operator.
So that software is telling the drone how to fly, to navigate, to communicate the lens. There is still a human involved though in context.
Yes, and I think that's important because what we're doing is we're automating the whole process from the point where the target was selected, but we're not taking away the target selection from the human operator, from accountability, from the established rules.
So breaking news crossing the wire is first reported by ESPN. Former Disney CEO Bob Iger and Fred Josh Kushner are going to buy the LA Lakers for $12 billion. Joining us from work, Kevin O'Connor, the senior NBA analyst for Yahoo Sports. Kevin, there's a lot to dig into here, from who's buying it to the price to who they're buying it from. What surprised you most about this news?
I mean, just the fact that we have a sale happening within a year.
Yeah.
Involving Mark Walter. The fact that we've seen these trickles of the news coming out recently about him being under federal investigation by the SEC for $16 billion in undisclosed report loans. And so there must be possibly something to that, or he's just trying to sell high. But the fact we had 2 sales involving one of the most valuable franchises in the world is utterly shocking.
Yeah, and that we are getting this list of 12.
Okay, looks good. IWM. IWM is going vertical. All-time highs.
Considering how storied a franchise is.
I mean, the way sports valuations have risen over the last 10 to 15 years, it's not overly surprising. He bought the Lakers for a $10 billion valuation last October 2025. So selling it for $2 billion more, he is making some type of profit here. We'll see what happens with that federal investigation. But I do think for a franchise like the Los Angeles Lakers, you know, with the Buss family for decades, this was a family-owned team. And I think with Mark Walter coming in last year, they changed a lot. They started bringing in analytics staff, and now with Bob Iger, former Disney CEO, and Kushner as well, I think we'll see some of those changes, making this go from a family-run operation to a full-on corporation. So I think we saw those changes happen over the last year already, and we'll continue to with the new ownership once again.
Well, and how did those changes that have already happened, how did they hit with the fans, with the existing staff, with the team members themselves? I mean, did they welcome those changes? And do you think that they're going to welcome in Iger and Kushner with open arms?
I would imagine so. I think the far majority of sports fans are more concerned with, does this lead to winning on the court? I think for people paying close attention from a business perspective, there's plenty of fans that were disappointed by the layoffs that happened within the Lakers front office. There was a lot of changes, including getting rid of some members of the Buss family that worked under Jeannie Buss, the former owner, as well. And so I think across the board, there was some disappointment, but ultimately sports fans at the end of the day, they care about, does it lead to results on the floor? And this Lakers team did make a lot of changes on the court this offseason. LeBron James, of course, left for the Philadelphia 76ers, but they did make other acquisitions to build the team around their other franchise, face of the franchise, Luka Doncic. So if that leads to wins, I don't think the owner is going to matter to the far majority of Lakers fans as much.
Yeah, I mean, and obviously Bob Iger, well-known quantity in Hollywood, right, and known as somebody who knows how to make money for his, for the corporation that he ran for a long time. So I guess the hope would be that he would bring some of that know-how to the Lakers as well. On the flip side of it, and I know you're an NBA guy, but Mark Walter owns other sports teams as well, right? He owns the Dodgers. He owns. He's a co-owner of the WNBA franchise there. So as well as some other teams. So I guess the next question is this it, or are we going to see him trying to sell some of his other holdings?
I mean, we'll see. I mean, so far today, there's been no word about him selling the Los Angeles Dodgers. And of course, they could have a chance to win 3 straight World Series led by Shohei Ohtani. And I think ultimately with Walter, that there's been those little trickles in recent weeks. I think it was late July where it came up about that federal investigation with the $16 billion red flag and private credit investments that were made. And so I think if there's more to that, I mean, we'll see how this plays out. But ultimately, the timing's suspicious. Late July, that happens, and a couple weeks later, it's August 12th. Today, this happens. We'll see about the Dodgers and his other holdings next. But for now, the word is that it's just the Los Angeles Lakers.
Yeah, I mean, and what does this also say about valuations of teams across the league? My producer, who's a big Knicks fan, pointed out to me that shares of Madison Square Garden Sports 4% after this news cross. I don't know that there's any murmurings that the Dolan family is going to be doing it and making any moves anytime soon. Who knows? But one would imagine that this raises valuation of profit.
I would think so. With the NBA possibly expanding from 30 to 32 formally as well, that this Kushner and Iger were interested in having a team in Las Vegas. Those valuations are projected around $7 to $10 billion for both Vegas and for Seattle, bringing back the Supersonics to Seattle possibly when the NBA expands, also for $7 to $10 billion. Does that mean the Lakers moving from 10 to 12 in less than a year? Does that move that price up from 7 to 10 to 8 to 11 possibly for Seattle and for Las Vegas? It remains to be seen, but ultimately it's also possible that the Lakers are just a one of one. They are one of the most well-known franchises across the world, across all different sports. And so maybe there isn't as much pain, especially with that Vegas team expanding in the NBA, that valuation will move up.
Yeah, I would think so. Kevin, really appreciate you hopping on here quickly to cover this breaking news for us. I love these stories that intersect like your world, our world here in finance, so that there's something for everyone in this one.
Absolutely. Lots to discuss. We'll see how the Lakers do in the court this season. That's what fans are going to care about.
Yeah, most definitely. Thanks a lot. Appreciate it.
Okay, New York Fangs are looking much better.
Saturation presents a problem for the markets. That is next in our ETF report.
People always ask if I cook the same way at home as I do at my restaurants. The answer, yes. I'm Michelin-starred chef Nancy Silverton. To make truly delicious food, you need the right food. The Tex Class Hybrid I get unbeatable staring power. But durable enough for both of my kitchens. People think I'm cooking for the crowd, but I'm just cooking for one person. I'm taking the next.
Gonna be leaving here in about 30 to 45 minutes. Go take my son to his first orientation. He's pretty excited. I'm excited for him. It's a STEM school. Smart kids.
Beginning show Benign show. Todas las emociones en un solo canal. 24 horas de películas. Tiempo en punto. Un cine selecto. Disponible ya.
Yep.
The annual volume of ETF launches is already nearing the record levels from last year, over 900 funds have come to the market so far. Let's discuss if this ETF saturation presents a problem for the markets at all. Joining me is Tom Stone, Chief ETF Strategist. This week's ETF is brought to you by PIMCO. Man, it is just fast and furious. Does it? I mean, it's interesting for you from a product perspective. Is it indeed? Are there implications from a market perspective?
So the context here is there are still more mutual funds than ETFs in both number and estimate. So while it feels like saturation, we're not quite there on the other level. The key part though is due diligence of ETFs become more because they're getting far more complicated. It used to be very simple types of exposure, right? Tracking 500, emerging markets, whatever. Now we're in this derivatives era, feeling much more complex, complement solutions. Doing your homework can become ever more important now.
Well, and on that front, we got.
All right, S&P looks like it's going to keep going. All right, market's looking really good here. Market's looking really good.
they have a lot of strategy.
Qs moving back up to the highs. Trying to break out. Qs are trying to break out over here.
They're doing very tax efficient. It's also not a very strong marketing distribution. You don't get to 2 billion.
Okay, we're trying to take this level out.
And it looks like what, $2.3 billion is the sale price. It's also interesting what Goldman is building, right? Because they bought ETFs.
Intel's trying to take the high of the day. Okay, SK Hynix trying to break out.
What's interesting is, okay, so we have income funds, the Indians. Innovator is much more structured outcome offers. Both of those cater to the aging demographics of the United States, right? $1 trillion of whatever generation you want to call it, heading to retirement. Maybe they still want income and market exposure, or maybe they want the safety net of a structured outcome. So I think this is more geared towards the older generation than the younger generation, which is much more interested in thematics. Just building core exposure, which Goldman does offer too.
SK Hynix looking for more. Okay, SK Hynix looks like it wants to go here. SKHY.
I know that factor.
All right, looks really good. Nice bullish day. S&P 500, nice bullish day. SPY. Okay, so we've been leaning on this 20 EMA and just keep pushing off of it. That's a good sign. Qs bouncing off of the 20 EMA. 20 EMA is starting to turn up again. And IWM, which is outperforming. IWM.
We've seen 401ks switch in more size to ETF.
They lose their tax match. The ETFs are very tax efficient vehicles because of the in-kind mechanism that's built into it. When you put it in a non-taxable account, they kind of lose that power. Yeah, the fees are lower, but it's just not necessarily needed. So mutual funds, you can get an index fund with value blend for pretty cheap in 401k, especially if it's one of the low-cost issuers. It's very difficult to then nudge that away for an ETF. You know, it will get there, but it's just not as much value.
Coming back to what you were saying about leveraged ETFs, that is where a lot of the growth is coming from, and so you have to look under the hood a little bit more carefully. You know, are people taking too much risk at this point?
I think what's interesting is July we had this reset for leveraged position over Korea. I see that market. But the levered long exposure went down about 25%. In prior corrections over the last few years, that number went up to 40 or 50%. So as much as it may have felt painful, like wash out, I don't think we're fully there yet. So as much as these semiconductor names, cloud names, and photonic names, they continue to rebound. That levered exposure should go right back to the high. So do I think there's a lot of risk there? Yes. And that's why we continue to look elsewhere beyond tech. Yeah, I don't like tech. Look at all these other smaller, less influential sectors in the S&P bank. But I suspect we'll be back in this levered episode again pretty soon.
Interesting. Okay, well, we've talked about this before, that like levered funds aren't a high percentage of the overall holdings. There was a Bloomberg story though recently that pointed out there are a lot of the trading volume now. So what does that mean about, does it mean every subsequent blow will be worse? Does it, do we not know? What's sort of how much are they pouring gasoline on the risk fire?
So that all the majority of assets are focused on tech, semiconductors, individual single stocks, right? They're about 1 to 1.5% of ETF assets, but it can be upward of 30 some odd percent of the value. So the usage rate is really high. People can be getting that. The issue will be that the space continues to get bigger, stocks will decline. The reset becomes more painful. We'll have to read about another fund going up somewhere, someone using too much leverage. Does that knock the whole market fall? You see globally, not necessarily, but it does cause you're playing with fire.
And as you said, it's interesting. You're not recommending necessarily people add to those holdings right now. So there is definitely, a defensive impulse, I guess, that is now happening. Not just for you guys, but we're seeing that play out in the market.
Yeah, I wonder. maybe the earnings have been pretty good, especially for some of these semi-derivative that is
Yeah, I mean, CoreWeave and Nebius both reported today and did very well.
So that could be off to the races there. That's a little bit more of a niche ETF exposure, but if you want to put in momentum thematics, that's a route to go. I just think don't ignore what else is going on besides technology. High beta momentum. Look at other quarters. There's some great deals out there, especially in financials or industrial space too.
Okay, look at financials and industrials. Thanks for being here. It's good to see you. And that is it for Market Catalyst. I'm Julie Hyman. Thank you for watching. We're Yahoo Markets.
They say there are no ideas, just ways to combine what already exists. The genius is in the middles. So what happens if we bring these two together?
Sipping gin juice, lay back. No, 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 I don't want money on my mind.
The explain cocktail share, the veritable stale gin.
Stay the cookie. Ready? Please.
With Vistaprint, you can turn your ideas into custom apparel you can't wait to wear and share. So you can introduce your brand before you even say hi. Give your whole team a glow up in professional polos and outerwear. And upload your logo and poof, you've got apparel with prints so clear, your brand jumps right off the fabric. Just think it, click it, and print it with Vistaprint. Because with all the colors, sizes, and styles you need, anything's possible. Print your possible with 20% off your first order at Vistaprint.com.
Everyone's coming over and they want different NFL games. We're going to be the worst hosts if we can't pull this off.
We're good. Watch up to 4 NFL games at once so you don't miss the action. An NFL Sunday ticket, now 8 payments at just $30 a month for new users.
What? That was a place. That was so special.
Respect goes a long way.
Just not the kid.
And so on. That's the good stuff.
Wow. This is incredible.
So just gorgeous. Oh my word. Look at that.
Okay, what time is it? 3 o'clock? All right, so let me set an alarm so I don't forget. Gotta take my son to school. He's all excited. 3 o'clock. I'm gonna go 2:55. All right, starting to fade off a little bit.
Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. It was just now going down until the closing bell. Thoughts are higher here. Investors assess easing inflation data. Yahoo Finance's Jared Lickery is standing by with the very latest. Jared.
Thank you, Josh. We're back in rally mode today, although the Dow is only up about 42 points, 8 basis points. So pretty choppy day here. You can see we've been in the red a little bit, but nothing to write home about either way. Now, the NASDAQ, we got a nice chip rally underway. You can see NASDAQ is up about 2/3 of 1%, 175 points. S&P 500, about half of that, similar looking chart. And I want to show you what's going on with small caps because they are up 2/3 of a percent at the highs of the day. And just going down the cap scale, might as well check out micro caps because they were leading yesterday. They were up about 2/3 of a percent today. Well, if we take a look at the largest stocks, the Mag 7, they were underwater by about 1%. But I want to show you that semiconductor trade. These are up 3% now, 12,500. We're getting pretty close to big levels. 13,000 is one of my make or break. So another 500 points, and we would get there. Meanwhile, software not doing so well, and we will check out some of those heat maps in a minute. First, I want to show you what's going on with the VIX. It is down to, this has got to be the low.
All right.
You can see, I haven't seen anything like this since early January. So that just means volatility or expectations of volatility get sucked out of the market. That is a positive thing. That is a push thing. You want to see the bull market. Let's take a look at the 30-year it's up 1 basis point to 5.25%. This is the year-to-date chart, so we're getting closer to that high that we've seen, but we're just been chopping around in here. And
Netflix turning back up. Google's starting to turn, so is Amazon. Amazon, maybe we'll get a bounce out of Amazon.
Play here because the chip stock rally is fueling XLK to the #1 spot. It is up 150 or 1.5%, followed by real estate and industrials. Those are your 3 outperformers over the S&P 500. To the downside, we got consumer discretionary down almost 1%, materials close behind, and communication services, where you find Meta and Alphabet, close behind materials. Now, looking at the NASDAQ 100, I mentioned the Mag 7 or mega caps under pressure. Here you can see Meta down 3%, Amazon and Apple down 1%, Microsoft down 2%. We do have some winners. NVIDIA up almost 3%, and not a Mag 7 name, but guess what? SpaceX having, I think it's its 3rd best day ever. Let's just get that chart from its IPO day, and you can see almost back up to...
Okay, Intel back to the high of the day. Intel back to high of the day. Let's see what Intel looks like. Intel moving back up. Okay. Where's the opening range high? Oh, that's overhead. Okay, so we didn't make it back to the opening range high. That's okay. We're getting close. Headed back to opening range high.
DRAM, the memory ETFs up 7%, Micron up 6%. List goes on. A few in the red here, but this is a very strong looking trade for the day. Meanwhile, software, once again, really can't get off the dime. Cisco and Oracle are exceptions here, but you can see SAP down 3%, Workday down 4%, and Twilio down 3%, Josh.
And Jared, for your chart of the day, my friend, I know you're watching the rotation out of fast food restaurants and into good old-fashioned sit-down restaurants. What can you tell us there?
Yeah, so I brought along the heat map, and I've got a chart I'll show you in a minute. This is what's happening with restaurants today, and you can see aside from Domino's, things are looking pretty good here. Let me show you over the last 6 months, because I thought this was really interesting. You have a clear case of winners and losers, and as you said, there are the sit-down restaurants. Some of those more established names are doing the best. I'll sort by performance so you can see it better. There's Cheesecake Factory, which has doubled in price, up 100% almost over the last 6 months. Then you got Bloomin', that would be your Outback trade, that Outback restaurant, that's up 75%. BJ is close behind. Eat, that is Chili's up 50%. Texas Roadhouse up 17%. But then things trail off, and at the bottom, you got some big losers there. Wingstop down 50%, Shake Shack down 18%, Portillo's down 13%. So what's going on here? I look at the fundamentals, and it looks like a lot of these high growth names that investors were paying up for before, just not doing it for investors. They want to see more traffic over some of those expansion designs. And let me just show you a couple charts here. Here's Cheesecake Factory. I will show you over 3 years. There we go. By far and away, this is one of its best prices over the year. You can see it's exploded since about mid-year here. And I can show you what's happening with Outback, that's booming. And this doesn't look that great, but if that changes to over the last year, you can see over that time period, right? Over that time period, it is just broken out. So that's part of this new trade here. Then compare that with Shake Shack, and this is a 1-year chart, pretty close to the lows there, down 34%. And not to give the wing stop too much here, that is also at the lows of that chart, down about 67%. When you put them all together, these two groups of the sit downs and those high growth names, and then you compare the spread between the two, going back all the way 10 years, you can see we've had one point in the past which was kind of comparable to now. That was just before the pandemic. That was November 18th, 2019. The spread was 50 points, and now we're at 66 points. So we really have never seen anything like this over the last 10 years. That's why it caught my eye. And I guess the bottom line for investors is they want to see that traffic right now, and not just those high ambitions. Back to you, Josh.
Thank you, Gary. Investors parsing through the data on the latest inflation report and what this means for the Federal Reserve. Interest rates, the full inflation Fed may bolster the Fed's case. It's on hold in September. This has also come alongside the weaker July jobs report. Jennifer Schonberger following all again.
Hey there, Josh. Remember you and I were just talking about this in the studio on Monday, that if we were to get 2 straight months of cooler inflation readings coupled with that weaker jobs report, how could the Fed go ahead and hike in September? And indeed, here we are. That scenario is the scenario we got, and it bolsters the case for Fed officials to wait further. The building inflation pressures that we had seen in the first half of the year appear to be easing in this inflation report, which is reassuring. But we're still going to need to get the Fed's preferred inflation gauge, which is the fiscal consumption expenditures index on a core basis for the month of July. Tomorrow we'll get producer prices, which we could use in conjunction with today's CPI report to back into that. And multiple analysts are already estimating that core PCE month over month is going to be very similar to what we saw in today's inflation report, which is up 0.2 percentage point. And this is important because it matches New York Fed President John Williams' test for inflation to come back down on its own. Williams made the point in a speech earlier this year that if we were to see monthly inflation prints on core PCE of 0.2 percentage point or lower in the second half of the year, that would give him confidence that inflation is coming back down on its own, and implying that the Fed would not need to hike rates. Of course, we're very much in the beginning stages of easing right now, so we would need to see much more progress on inflation coming down before we could say, hey, you know what, hikes are off the table for this year altogether. I think for September, they can wait at this point, but we're going to
SK Hynix breaking out.
Confirmation that inflation is going to continue to come down.
All right, great stuff as always. Thank you, Jen. And while Wall Street continues to juggle developments in economic data, geopolitics, and earnings, our next guest says
SK Hynix is breaking out. SKHY breaking out.
Chief Investment Officer, Chief.
I got the 170s getting close. March 170s, that's doing well.
One of the most significant rotations in the current bull market. Start there. Just explain what we do.
Sure, I'm always great to be with you, Justin. And we were
SpaceX at the highs.
You went on summer vacation and came back at the end of July with the XP, and the change for the month was 0.06, so essentially unchanged. But beneath the surface, we just saw a monster rotation out of things that were very hot early in the year. Think of things like semiconductors, which had risen 90% from late March to the June peak, had a correction of about 20%. And we saw a lot of the AI-related places that come back hard at the same time. You saw equal weight index, financial value really do well. And out here, the bigger point, the important point there is that money wasn't liquidating, it wasn't leaving the market, it was rotating. And that's a healthy sign to us that it allowed the areas that got overheated to take a step back and let those laggards catch up, which now sets us up for, I think, a better action in some of the technology names after this reset.
So is the broad point there, Keith, that when you see this kind of rotation, that is the sign of a very healthy tape?
It is obvious because as an investor, you can choose to leave the market because you're really nervous and money's leaving and there's liquidation. That's for a negative side. A healthy bull market tends to have internal rotations. And if you think about it, for the S&P 500, we had about a 20% rally over about 2 months. And then for the last 2 months, you just trade sideways, digesting those gains, internally rotating, let the leaders kind of take a bit of a pause. Now the baton in some ways is going back to
Cerebros.
the news is we also still have that boarding trade, but that health
SK Hynix.
also doing well. So I think it is a healthy sign that we have more participation, but also it allowed things to reset as far as valuations for the for some of these bigger mega cap companies as well.
Talking about the baton going back to those former leaders, Keith, I'm just interested to get your take on what you've heard from big tech, from the hyperscalers, who showed, listen, AI can drive cloud growth. You just looked at the numbers, AWS, Azure, Google Cloud. What did you make of those reports, Keith?
Yeah, so I think it was actually constructive, couple of weeks. And, we talked about in one of our recent notes, kind of the, what I call the love-hate relationship that investors have with tech, because we just underwent the 5th double-digit pullback on this bull market, even though tech gets up more than 200%. And one of the major concerns was, when people have in tech, median of these was under 20%. The cloud business was more than double that. So what is that message? The message is saying that we are seeing signs of spending leading to earnings. Let me get clear. If you really know when they're going to use it, we are seeing the credit markets or rent spread move up. So it's not like it's all clear per se, but I think the underlying message is that AI and tech remain dominant themes of this bull market, and that is also still where the strongest earning trends remain.
In terms of opportunities, Keith, are you telling your clients right now, stay overweight, financials, industrials, healthcare?
Well, so the way we think about it is we kept this long-term short position in tech because we still think AI and tech is the dominant secular theme of this bull market. Every bull market has that dominant theme. But alongside that, as we continue to have probably more of these kind of short rotations that sometimes come out of almost nowhere, we think other areas of the market are been balanced with portfolio. So, healthcare and financial, something they have in common is they have love valuations got to be set. Then some more of these IPOs coming along as well. So that combination that will stick with that long. All that. This actually coming into the year ago back to these rotation trades, we were saying, hey, stick with that. We can have these short rotations and a good way to offset that is small caps. And all in all, small caps well, we have to remember, even though the small caps had a really good year this year, if you kind of zoom out a bit, the relative price of small caps to the broader market is coming off of a 20-year low. So back late last year, we hit a 20-year low in price.
Risk for the market. With bypass you, do you say AI monetization? Do you say higher yields, elections? What's on your radar?
I mean, and part of my job is to worry. I mean, I laid out a case where we're still positive, but we always want to keep an open mind and follow the way of the evidence. The way of the evidence framework, one suggests we start with history as a guide. When we've seen strong gains early in the year, like that really strong momentum move that we saw early in the year, It tends to be good as you look forward. The economy growing helps us, say, hey, that should support earnings. And what's also notable at this point is that this year valuations have actually contracted. It's been all earnings. So you asked about the native risk. It goes back to earnings being the key factor, the AI side. Obviously, a lot of uncertainty with inflation and interest rates continue to creep up. And the old saying is that the market likes to test a new Fed chairperson. And I think you put that all together with the midterm elections. It's probably a bit of a choppier market and not enough to change our view. At least at this point, all the way the evidence that suggests the bull trend is still intact and that bull market still deserves the benefit of the doubt.
Keith, as always, great to have you on the show. Thank you.
Thanks so much, Josh.
Coming up, the DRC's heavy hold-off restrictions could impact the EV, electronics, and aerospace segments. That's next.
Options. Download the Zygon today. The purpose of engineering is to unlock performance. This is a hex lamper with hybrid technology that perfectly balances durability, steering power, and non-stick cooking performance. Its purpose is to help F1 driver Yuki Tsunoda pursue his dream of cooking a steak for me, right here.
Thanks for letting me borrow your pen.
Thanks for letting me borrow your car.
Wait, what?
Our daughter just bought her first house.
All by herself.
We went to go see it.
She knew exactly how she wanted everything.
But then he pointed out the gutters.
You think you've raised them right? Then
He didn't know. You have to call leak filter.
leak filters have that filter technology keeps debris out of your gutters for good. Very good. It's such a wild ride.
All right.
What is Spectrum Internet? It's the most reliable internet.
It's connecting with my followers out there. And in here.
It's the pure internet for you and your family. Keeping kids like us safe online. It's Wi-Fi that stays on even when the power doesn't.
Staying connected no matter what.
So what's Spectrum Internet? It's everything you want it to be. Switch today at spectrum.com.
Four breaks people down. Look back. Only on Samsung TV.
Geopolitical tensions are weighing on supplies for critical metals, cobalt. The U.S. has become more active in cobalt mining, a market dominated by Chinese operators. For cobalt growing in its use across EVs, aerospace, and AI build-out, economy, and traction, all of the forces. Okay, so let's start here. Cobalt, that's not something I'm going to spend a ton of time. Start there. Why is this now so?
So cobalt's really a battery story. It's kind of the critical metal that's for a long time. That's shifting a bit toward lithium now, but cobalt is still a really dominant factor here. So think EVs, think your phone, think any portable electronic. This is all a cobalt story. It's very strategically important. But it's not only for batteries, it's also used in natural gas turbines, defense weaponry, jet engines for the aerospace sector. So there are a lot of really strategically important industries that depend on it.
Now we're just going to speak about the DRC.
So the DRC historically has controlled about 70% of the world's cobalt mining output. For a long time, they flooded the market. Prices went low. Back in 2025, the DRC decided to cut that down. Overnight, essentially, they suspended all cobalt exports from the country and sent prices skyrocketing. That really tightened down. The market took much of the world's supply. Now, back in October 2025, a few months later, they switched out that ban with an export system, a full list system, so the government can control how much the market. Essentially, the government is saying, look, we've got this very critical mineral, make some money off of it, control the supply. And what's happening now is that they've actually done enough tightening to flip the market for a surplus index.
So DRC is basically restricting exports to support prices. And then there's another ripple, which is Indonesia.
That's right. So you have two countries not affected. So you have the DRC, which is the historical dominant player. Indonesia is catching up, not because they're specifically going for cobalt, but Indonesia is one of the world's largest nickel producers. And when you refine nickel, you turn it into other, from raw nickel into an actual nickel alloy, part of the byproduct is cobalt. So they've been just incidentally with their nickel industry producing a lot more cobalt and taking more market share. So you have DRC on one side trying to control supply. You have Indonesia on the other market, but that's not a perfect system. Indonesia's not a guarantee because they face the same problem. What if they decide nickel prices are too cheap? So they cut down on nickel production. And that's also going to cut down the cobalt production. So there are now two countries really controlling the world's supply.
Bring it back home. What's the U.S.'s role?
So a few years ago, the U.S. said, look, we need to change our approach here. For a long time, the U.S. had watched prices plummet. Supply was over healthy, that there was no Western investment. We stepped in instead of the Western governments. China stepped in. They now control the majority of the world's cobalt refining. They also have a hand in most of the cobalt mining activities in the DRC. The U.S. has been trying to negotiate with the DRC government to say, look, we're not a little bit late to the game, so now we're buying into some of these strategic success deals with companies like Glencore, Syria, some of the world's largest commodities houses, making deals to up the U.S. access to supply. The U.S. is not a real cobalt mining player, but they are now trying to negotiate access because of the aerospace needs, because of the natural gas needs, because of the defense needs, the EV needs. There's suddenly a need for cobalt. The U.S. is trying to get in on that with the DRC.
Well, that's what I'm going to ask you just finally. I mean, bottom line, this all means potentially what for smartphones, battery, aerospace, and things.
So I wouldn't expect your phone prices to go up because cobalt supply is getting cut down. There's enough in the world that it's not going to have a one-to-one correlation there. But where this will matter is in the strategic applications, defense, aerospace. It's actually kind of the same story we saw with critical minerals last year when Trump and Xi Jinping in Beijing were negotiating trade deals. We saw China cut off supply of critical minerals as a negotiating chip. Cobalt could go the same way and be used as a negotiating chip because of its defense applications. Certainly something to watch for American investors.
Great story. Thank you. Thanks, Dr. Wendy's is reportedly catching the eye of Nelson Peltz's Triumph Fund management for a takeover bid. Now, Francis Brooke DePalma joins here to discuss right before we go.
Well, this is exactly when we know that following this bid, we did see a massive jump in Wendy's share. That stock jumping almost 16.5%. I actually want to pull up Alpha Space for this because this momentum today, I put in a comparison chart of Wendy's where it was today compared to Restaurant Brands International, of course, that's behind Burger King, who's been taking the lead here. And you can see right there, jumping as much as 16.5%, nearly 17% today. That's Wendy's, that line right there. And this comes after taking a look over the past 5 years. We have seen Burger King significantly take market share. So this did not come as a surprise that this company or this management firm is looking to take Wendy's private.
All right, we've got earnings tonight, CBRS.
Straight quarters of declines. Their most recent quarter out just last week. Six straight quarters.
That'd be a hoot if they dumped it.
Just last week, down 6.3% for same-store sales growth yet again. And this is also leading a significant turnaround. On the call, we've heard from executives. So keep in mind, these are new executives. We have Bob right now at the helm, who oversaw Potbelly, which, keep in mind, is now a privately held company. He is going to introduce to investors a turnaround plan in the third quarter call in November. And that certainly has investors optimistic. But at the same time, Potbelly is now a private company. And so this really not coming as too much surprise and definitely causing some investor optimism here.
Yeah, Pepsi has a long history of Wendy's, by the way.
Yeah.
Back decades.
Absolutely. And so this is not something that's been on the back burner, so to say, for Wendy's, but especially now in this vulnerable position, we have Burger King overtaking market share from them. It seems like that turnaround Burger King worked.
Maybe Nelson just left the chocolate frosting.
Maybe so.
It's delicious.
Is it still 99 cents? Because if not, maybe
I don't get the decline in sales. I'm there like every weekend.
It's not really good.
Delicious. Switching gears, let's hit this is in your wheelhouse too. Home Depot news. Ted Decker taking a temporary medical leave is expected to last the next few months and tends to return. But what did you make of that story?
Yeah, well, we have their CFO stepping into that position. Her name is Anne-Marie Campbell, and we also have their CFO, Richard McPhail. They're going to sort of be the co-CEOs while Ted Decker is gone. Certainly, though, investors not as excited about this. The share is falling today. I was looking at Alpha Space just before we got on. That stock down about 2.8% to nearly 3%, falling even lower during today's trade to fall below that down 3% mark earlier today. But keep in mind, both of these executives are not going to get paid for taking on this role. You also have this other type.
Let's see, Microsoft turning. Microsoft starting to turn.
Come out, next August.
Short covering.
And so this is a moment in time where not the best timing here. Of course, they're also supposed to see just the same store sales increase of about 1%. The last time they did post that 1% gain, though, was the second quarter of 2025. And so it is expected to be a jump. This will be their best quarterly performance since then. But at the same time, 1% same store sales growth, not really what investors are looking for.
If I was an investor, I think I would want to know is anything operationally changing. And if the answer seems to be no, your point, the bigger issue is the housing market, how you navigate.
Yeah, and also because of this, heading into support, keep in mind that Placer.ai, that's a data analytics platform. They said the foot traffic has really been low to flat, so that we could see transaction growth lower. That's what economists are forecasting as well. But ticket growth has been higher. So they retail sales when it comes to things like building materials, garden equipment, supplier retailers. All those have taken on price increases, and that's what really could drive up ticket growth for Home Depot this quarter. But once again, a mortgage rate environment at 6.7%. That's the highest that we've seen since July of 2025. Yeah. We also have home sales falling last month.
All right, Brooke, thank you. Appreciate it. Coming up, egg prices are finally cracking, but is it enough for grocery shoppers? Find out next on Market Domination.
People always ask if I cook the same way at home as I do at my restaurant. The answer, yes. I'm Michelin-starred chef Nancy Silverton. To make truly delicious food, you need the right tools. With HexCloud's hybrid cookware, I get unbeatable searing power, easy cleanup, and equipment durable enough for both my kitchens. People think I'm cooking for the crowd, but I'm just cooking for one person, for one taking the next life. Performance, no matter the kitchen.
Vistaprint helps bring your ideas to life exactly as you imagined them. Turn what if into wow with design tools that are as easy as drag, drop, and run. Get real human support when and where you want it.
and find all the products, sizes, and finishes for your business at prices you can feel good about. Just think it, click it, and print it with Vistaprint. Because no matter what you're dreaming of, we're here to make it possible. Print your possible with 20% off your first order at Vistaprint.com.
Te quieren un show, vemos un show. Todas las emociones en un solo canal. Vienes a 24 películas. Tiempo en punto. Lifetime Cine Selecto. Disponible ya.
I'll be leaving here shortly with my son. Do, 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 do. I'll just leave the stream going. All right, SK Hynix looking good. Micron.
Egg prices are falling sharply. The latest consumer price index showing eggs down nearly 26% from a year ago. Supply recovers from last year's bird flu-driven shortages during that. Tom Flacco, CEO of Pizza and Jerry's. Tom, it's great to see you. Let's start right there, Tom. Egg prices are now down about 25% from a year ago. Why are they down, Tom? And do you expect them to fall more from here?
Well, good afternoon, Josh. Thanks for having me on. So what you're seeing right now in egg prices that drop is I like to remind people that they're really
Okay, Cerebrus for earnings.
and they're premium eggs. Our brands, Pete and Jerry's and Nellie's, are premium. They're the birds that outperform.
Okay, I'm going to keep this a little bit more
The commodity players, it's
condensed so that I can see after hours.
you have fewer birds.
CBRS. All right, I'm going to take my son to school here shortly.
Supply, which is what they've been doing over the course of the past year, you're going to have increased supply and prices will come down. That's what you're seeing with that 25% reduction year over year.
He's worse than a girl.
Consumers, it's sometimes a little bit tough on those farmers that are farming those eggs, but the consumer certainly has lots of options right now in the store.
Would you expect, Tom, I mean, look at this near intermediate term, with those prices keep heading lower?
I don't think they're going to go any lower, Josh. It's what the market will do is it will eventually correct. There's a balance. There's a point where you have the right amount of birds producing the eggs, that's in line with consumption. Total egg consumption only goes up about 1 or 2% per year. Now, premium eggs have been going up double digits, 15 to 20% per year. Commodity eggs, especially caged eggs, where the birds have no outdoor access, they've been declining year over year. But balance is out to 1 to 2%, and population growth is about the same pace. So you shouldn't see a big surge on the demand side. As supply evens out, you'll start to probably see in the local.
All right.
And you'll start to see those prices keep back up again. You're not going to see, I don't think you're going to see what we saw last year. Heaven forbid, we have another see that again. You want to see that. But that said, as blocks get repopulated and they'll populate fewer birds, which is how it comes back in balance. So that's what you're going to see, I think, over the course of the next couple, 3 months, maybe towards the end of the year. Everything that happens in this industry, it's actually more seasonal than you might think. We're at the low point of consumption right now in summer.
Okay.
June, July.
All right, he's yelling at me.
As people get back to school, people get back to their regular work or life patterns.
All right, I'll be back, folks.
That's increased demand, and you'll see that start to the supply as well as the year goes on.
Tom, when commodity egg prices fall like that, does that pose any kind of challenge for you all? You know, in that you're selling that more, premium option.
Sure, it does. But what we end up doing is we do what, eggs are a promotional item. The consumers want to come to the store. 3/4 of decisions are made at the shelf. Consumers have some idea of what kind of an egg they want, but they don't really decide until they get to the shelf and see what the prices look like. So promotional prices is how we meet that. We don't take our list price down, but we will promote in given periods, 1 week, 2 week periods, where we'll meet the consumer where they are. We give them a break. It's good for them. It keeps our business in balance with our supply chain. And it's the way the industry ebbs and flows. So we realize consumers have choices. We also realize that consumers are under significant economic stress right now when they go to the grocery store or the gas pump or anywhere else. And so we have to give them those choices to meet them where they are. And we're happy to do that.
We're also, Tom, coming off another salmonella tied to shell eggs. The FDA says Midwest Poultry Services recalled something like 1.5 million eggs. What kind of impact, if at all, Tom, does something like that have on consumer confidence in the category?
Yeah, look, we take food safety very seriously. The FDA, the USDA, they have to do what they do, and they do a great job at it. But we take food safety up and down our supply chain very seriously. From the farms that we contract with, we have 350 farms around the country. In a lot of those farms, we own the birds, we own the feed, which gives us not only a more stable economic model, but allows us to control quality a lot better. But we have 4 processing facilities. They're all SQF certified, so Safe Quality Food certified. And we work that up and down our supply chain to make sure that consumers are safe when they're consuming our products. In some cases, that for other suppliers, that doesn't always work. We saw it with in the iceberg lettuce issues that we've had with jalapeno peppers. I mean, it's a common, becoming increasingly common occurrance as consumers are getting more and more fresh food. It's something that we have to all be aware of and be on guard for.
Finally, Tom, I've seen you talk about how eggs, I think you put it like this, that they're nature's perfect protein. Of course, consumers are very focused on protein. Tom, it's a powerful trend. Are you actually seeing that trend, drive higher egg consumption?
What we're seeing, Josh, is again, consumers want better protein. They want more protein. We just completed a survey. About 40% of consumers think more about protein today than they thought about it a year ago or 2 years ago. A lot of consumers, they count protein grams more than they count calories these days. But what also matters is the quality of the protein. And so consumers want biodigestible protein. Eggs are absolutely the simplest, best form of protein, most affordable. most sustainable, best for the planet. I mean, there's a lot of good things about an egg, but it also, the body digests it very easily. And so as consumers are more and more focused, GLP-1s become increasingly used. And we saw something today, 22% of households today are using GLP-1s. So it's about 16% of people, but as a household becomes a GLP-1 user, that affects actually how the whole household changes their eating patterns to a cleaner, more sustainable source of protein. But we also found that consumers don't want ultra-processed protein when they can get it simply with an egg. And there's nothing simpler than the ingredient list on an egg. It's an egg. It's 3 letters. So it's what consumers are looking for today. It's 2 eggs. There's 12 grams of protein. There's 72 grams of protein in a dozen. That's an 8-ounce piece of steak. And you look at the carbon footprint that leaves to produce that steak versus our eggs that are much more sustainable. It's just a win-win-win for consumers to continue to focus on eggs as their source of protein. So what we're seeing is consumers want better protein, more biodigestible protein, but also that outdoor access for the birds is an important part of their decision-making as well. So if they can have something that's better, more humane for the bird, better for the planet, and better for their bodies, then premium eggs end up ticking all those boxes, and that's what our Pete and Jerry's and Nellie's brands are setting out to do.
Tom, so good to have you on the show today. Thanks for your time. Appreciate it.
Appreciate it. Thank you.
Kava shares getting a boost today as strong customer traffic and same restaurant sales help maintain growth momentum, even as the company navigated industry-wide food safety concerns and macro uncertainty. Finally, Joe Hyman and Kava sat down with Kava CEO Brett Schulman to discuss the latest results. And
so now you have these strong numbers against the backdrop of the Cyclospora outbreak that was affecting a lot of chains that serve greens. You talked on the call that you don't directly source the greens that seem to have been affected. Talk to me about how, if it had any effect in the quarter because of the sort of concerns generally.
We noted that as we exited the second quarter, we did see the broader concerns around leafy green and produce consumption start to impact the trajectory of our same restaurant sales, which we have since seen begin to rebound.
And when you think about it, sourcing from Taylor Farms, you don't source directly from where this outbreak had happened, and you don't source these ingredients or anywhere near that. But at the same time, you do source some ingredients from Taylor Farms based on what I heard you say in another report or another interview. So are you reconsidering your relationship with Taylor Farms right now?
We're always looking at our relationships with our suppliers, with third-party audits. We visit them on site to make sure they're adhering to our food safety standards, and we always review those decisions on an annual basis to understand are they the right partner moving forward. And we will look at fact-based and data-driven decision-making on whether it's Taylor Farms or one of our other over 100 suppliers that we source from.
And you guys do have an outside food safety advisory board, right? So you said you look at it annually, but was there anything in particular about this particular outbreak, because it was so severe and fairly widespread, that made you look at any of your other processes and say, maybe we need to tweak some things?
So the industry is always learning from every outbreak, what we can do better, what as technology evolves, we have food tracing software that helps us identify these much more quickly than we used to be able to identify. And our industry advisory council of industry experts, Dr. David Atchison, James Marsden, Scott Brooks, they help guide us as we grow what else we can be putting in place to ensure proactively that we are doing everything we can to make sure we have a food safe environment, because that is foundational to our guest relationship. And so that's our commitment at Kava, to make sure that we're working with our suppliers and our governmental agency partners. I think in this situation, there was a lot of incomplete and inconsistent communication up front that exacerbated some of the consumer confusion as to what was the root cause and what was exactly.
So what do you think that's from the food safety agencies, the federal agencies, you're saying?
I think in general, the communication, in a world where we have 24/7 news and social media, that there wasn't a clear understanding for consumers exactly what was happening, versus the more recent outbreak where there was a very quick understanding and tracing and clear communication on what the issue was. And that
talking about the more recent salmonella.
At the same time, you did reiterate your guidance for this year, and you are still expecting somewhat of an increase in same-store sales growth. And what was interesting was that you actually saw growth from lower income consumers. So walk us through that dynamic.
Yeah, I think it's a testament to, again, the strategy that we've embarked on in recent years, where we've really worked to invest in our teams and invest in our guests. And what I mean by that is not raising menu prices nearly at the rate of CPI or what the average restaurant company has raised in recent years. So we've underpriced CPI by over 10%. We've taken less than half the price increases of the average restaurant company. And in 2026, we only took a 1.5% menu price adjustment at the beginning of the year with no further plans to increase price. And that's less than half of what we're currently running at over 3% on CPI. And so that's created more relative value for our guests each and every year, where we can welcome more people to our table and they're getting more bang for the buck no matter where they're eating.
As Brooke mentioned, you maintained your guidance for the year. I believe the upper end of that for comps is 6.5%, right? We're coming off a couple quarters that were above that. So why didn't you guys raise more? And what does that tell us about the second half of the year?
Yeah, we tried to be prudent with our guidance. We wanted to incorporate that near-term impact we saw exiting Q2 with the broader concerns around cyclospora, as well as the fluidity of the macroeconomic and geopolitical situations and some potential persistence in inflationary pressures on consumers. So we just wanted to take a prudent approach for the remainder of the year.
You're also changing around the way you do prepare some things. You have a pre-marinated chicken that's now going to be made at a central location as opposed to the store. So what's behind that choice?
We're always looking as we scale, how do we set our team members up for success? How do we deliver more consistent food quality and flavor to our guests and free our team members up to deliver exceptional hospitality? So this is very manual work that they do, prep work in the restaurants that we're now able to work with our chicken suppliers to pre-marinate. So the chickens are actually marinating longer, better, more consistent flavor, and then frees up that labor in our restaurants so those team members can deliver great, exceptional hospitality. So it is, probably the number one thing we've tested with our team members from a feedback standpoint. They're very excited. My partner and co-founder, Tenzino Christos, when we were at our GM all hands conference, when he announced that we were rolling this out, he got a standing ovation.
So there. When you think about the opportunity around innovation, the cadence of that, you rolled out this salmon. One, will it stay on to the end of the year? What do we know about braised beef and garlic shrimp? Are these going to be seasonal items? Is that the cadence you're moving toward?
Yeah, we always look at evolutionary rather than, say, an LTO type construct where we bring newness to our guests. And if our guests tell us that they want it every day on the menu, it can move into the everyday set. And so salmon's been great. We've seen really great performance with it. We do plan to keep it to the end of the year. And it's our first entree into seafood, which is a core aspect of the Mediterranean diet. So our customers are very excited to have that component on our menu. And roasted garlic shrimp that we just completed our market test that we're very excited about is another way for us to deliver a seafood option to our guests.
In addition to the regular expansions you're doing, talking about airports, what's going on with airports? Am I going to be able to go to Newark and get a kava bowl while I'm there?
Not today, maybe someday, but we did just open it at Atlanta Hartsfield International Airport, as well as Logan Airport up in Boston. So we've got a small group of airport locations, and our guests love it. We say it's a healthy oasis in a food desert. And so we're looking at opportunities to, again, bring our kava cuisine where people are looking for it.
Does that mean that we have to add a breakfast option?
No breakfast in the plans. Now, we may do a breakfast program just for our airport locations because they do look for that, given the the needs of the travelers. But no plans in our street locations to have breakfast.
I'm putting in a shakshuka. We're talking Mediterranean breakfast. That would be my choice. Well, tell the people. Thank you so much. Good to see you.
Coming up, I speak to Hylian CEO about the company's latest results and huge Navy contract. That's next by Mark.
People always ask if I cook the same way at home as I do at my restaurants. The answer, yes. I'm Michelin-starred chef Nancy Silverton. To make truly delicious food, you need the right tools. With HexCloud's hybrid cookware, I get unbeatable searing power, easy cleanup, and equipment durable enough for both of my kitchens. People think I'm cooking for the crowd, but I'm just cooking for one person who wants taking the next bite. Performance, no matter the kitchen.
At Ferguson Home, we understand that home is a feeling. It's
where everything that matters unfolds. Warmth of shared moments. Simple joy of everyday tasks. These are the memories that define a life well lived. Celebrate home in your style. Visit FergusonHome.com.
Wow, this is incredible.
It's gorgeously gorgeous.
Oh my word.
Gaining momentum as demand for new power solutions grows, raising its full-year revenue outlook by 50%, landing a nearly $42 million Navy contract. For bringing out Thomas Healy, high-end CEO. Thomas, and it's good to see you. Maybe let's just start right there with that earnings print, Thomas, because revenue looks like more than triples. You did raise your full-year revenue outlook by 50%. What is driving that momentum, Thomas? Is that a few large contracts, or no? Is the demand broader?
This has really been driven by the work we're doing with the Navy. So last time I was on, I spoke about the fully unmanned autonomous ship that we're working with the Navy on. We're actually working towards delivering that system, delivering that power module. And then as you already highlighted, we now just won another $42 million contract with the Navy that is not only for larger ships, but it's also to now power bases as well.
If the Navy trusts you, Thomas, does that make it easier for you to sell into the enterprise, to sell to corporate customers? Does that make them more comfortable with you?
It does. In good news, a lot of customers have trust in the Navy, and if it's passing the Navy testing, then it should work for us as well. So we're excited about the data center market. That's honestly where we're seeing the most interest out of the commercial space. We're working with hyperscalers. We're working with companies that are building data centers for the hyperscalers, and they're being pushed to this concept of they need to make their own power on site at the facility. The grid's telling them, or the utility's telling them, we don't have capacity. There's not enough electricity available. You have to bring your own power, which now means they're looking for technologies like ours, which are these small modular systems, go right on site, and in many instances can make electricity for less than what you could buy it from the grid.
For viewers who aren't familiar, Thomas, just explain in simple terms what exactly you are building and selling. I mean, is it fair to think of it as almost kind of a portable, compact power plant? Is that fair?
It is. Now, this is designed for commercial customers. So our smallest box is a 200 kilowatt system. To try to express the size of it, think of like a king size mattress turned on its side. That's about the size of the 200 kilowatt system. For reference, one of those would power a full Home Depot. Two of those would power a full Walmart that has refrigeration. So it's a lot of power in a very small box. We then have a multi-megawatt solution, more of the size of like a 40-foot shipping container. And that's more designed for the industrial customers, or the data centers, or as we highlighted with this contract, the military as well. Now, the great thing for us, it's the same technology inside these boxes. So the same assets that we're using to power Navy ships can be used to power the military, or can be used to power data centers.
I wonder if some viewers may think, Thomas, okay, well, what's the difference between what Thomas is selling and your sort of traditional diesel generator? How would you describe those? I mean, is it differences in, is it the efficiency, the fuel flexibility? Is it operating costs?
So we're going after the same customers, but it's a totally different technology. So there's a few different ways you can make electricity. You could use turbines, you could use internal combustion engines, fuel cells. we're a new bucket. We are a Sterling engine technology. Sterlings have been around for a couple hundred years, but they haven't been able to really be brought to market because they've been so difficult to manufacture. But even when they were invented 200 years ago, it was thought that this is the euphoria of power gen. All the points you started talking about, it's efficiency, it's low maintenance, low noise, low operating costs, all the things that you really want for on-site power, this solution is able to deliver. But the problem it hasn't been, why it hasn't been brought forward before is because of manufacturing. So what we did is, you can see behind me here, we actually have these 3D printers. They're metal 3D printers. They actually make the parts that build up our engine. So each part's about the size of a basketball. And that sits in that machine is able to print that part and run 24/7, 365 and make parts that could have never been made before.
In terms of your business model, Thomas, is it, when a customer buys one of your systems, is it kind of a one-time equipment sale, or no, it's more like recurring revenue, maintenance and servicing and software?
So our goal is we are selling the asset to the customer. So we are not doing the, unless for just like early deployments, we're not doing like a power purchase agreement or a structure like that. The goal is sell them the asset. Then we do have the ability for us to do the maintenance on the system, which would offer a recurring revenue model. But the end goal for the customer is this product is able to deliver them a low cost of electricity. We just did a study with one of the box retailers, and we looked at, in New York, grid prices were around 22 cents per kilowatt hour. We looked at the Carnot power module, and even when you incorporate the upfront capital costs, the fuel costs, the maintenance costs, we're looking at about 17 cents per kilowatt hour. So a good savings from 22 to 17 cents.
What are the biggest bottlenecks for your business, Thomas, kind of looking ahead right now? Would you say, is it capital? Is it manufacturing? Is it finding talent, finding engineers?
I'll start with what the bottleneck isn't, is finding demand. So there is so much demand for more power, whether it be the military data centers. So where we're working towards is we need to be able to produce these at a higher volume, at a higher scale. So we are starting customer deployments right now. We started deployments to the military last year, and we're starting to ramp that up as we go into the years ahead. So production, scaling, manufacturing, that's what we're focused on. And a lot of that comes back to the 3D printers that are behind me, which then to scale that, it's a capital equation.
Thomas, it's always great to have you on the show. Thank you.
Thank you.
Coming up, we have to cover from the closing bell on Wall Street. Don't go anywhere.
They say there are no new ideas, just ways to combine what already exists. The genius is in the mix. So what happens if we bring these two together?
Sipping gin juice, laid back. No, we're not doing that. I got my money on my money. Money on my mind.
The explain cocktail shaker, develop still gin.
Stick it with me. Ready? Please.
Hey guys, what do you usually do when you're waiting for the bus, waiting for the subway, or just killing time while the kids are asleep? Me? I play this game. And it's not just any game, it's one that actually lets you receive real money straight to your bank account. I bought $100 to my own account. Plus, there's a daily free bonus you can claim. And guess what? I actually won that money using the bonus. Cyber Casino is a legit casual game where you can real cash and redeem fast. I've tried it, and you should give it a shot right now.
Just makes it worse getting up early in the morning. The deal's not free. I want. Let's make a deal. You're in the zone. Getting this piece with you like I'm icing on the cake. I don't know if I should be scared or excited.
This is like a nonstop roller coaster that you are.
Stocks in the day mixed here. One has been a relatively quiet week in market so far. Now, for instance, Jared Blippery joining in with the Jared.
Thank you, Josh. Dow just slipped into the red in the final minutes, so we're looking at a small loss there, whopping 21 points, and we can see it's a very choppy day. NASDAQ Composite managed to lock in some gains, about 0.5% there. They didn't really deviate from that opening print too much throughout the entire day. S&P 500 up about half of the NASDAQ. And let's do the Russell 2000, which is our leader today, was one of the leaders yesterday, up 0.7%, closing pretty close to those highs. So small caps have led 2 days in a row. Meanwhile, at the opposite end of the spectrum, we got the Magnificent 7 ETF that was down 1%. So let's check out some of the sector action. And it was tech all again today in the leadership spot, up 1.5%. Real estate up almost 1%. Utilities, staples, those round out your outperformers. Then to the downside, we got materials and consumer discretionary, each of those down more than 1%. We got communication services, refined Meta and Alphabet, those down about 0.9%. NASDAQ 100 showing a win for NVIDIA, up nicely, 3%. And guess what? It was another great day for semiconductors. We'll take a look at that in a second. SpaceX having one of its best days ever. I think it's third, but don't quote me there, up almost 10% there. Meanwhile, we got Microsoft trading 2% to the downside, Amazon a bit less, Apple less than 1%, and then Alphabet and Broadcom just kind of break even there. And then Meta down about 3%, while Tesla slipped about 1.5%. But as I said, the day's winners were mostly concentrated in the semiconductor sector. Intel up 3%, Applied Materials up 4%, but some of these names up quite a bit more. Super Micro, which we're now kind of throwing in the chips bucket here, that was at 19%. Lumentum up 13%. SM2C6, DRAM memory ETF, that was up 7.5%. So some nice gains there, a few losers, but nothing to write home about. And we'll move on to software, where we see Cisco and Oracle managed to eke out some green here along with a few others. But for the most part, a lot of these names trading to the downside. HubSpot down 5%, Twilio down 3%, along with Workday and Unity as well. I'm going to close off here with the Dow. And aside from the mega caps, which we just talked about, we got Walmart up 2%, Cisco up almost 3%, Caterpillar 1.5%, and Merck was up 2%, Josh.
Thank you, Jared. Join me here for more on the markets and wealth creation. Let's get to Benefit Capital Advisors Chief Executive Officer and Chief Investment Officer, Andrew Stayoff. Andrew, it is great to have you on set. Let's look at the big picture. I'm interested to get your take on the market. Some market watchers I know, and these are guys who've been in investment markets for decades. I've heard them say this is one of the healthiest tapes they've seen in their careers. And I think what they're getting at is just the rotation, meaning they kind of watch how the semis taking on the chin or the Mag 7 get banged up, but the baton just gets immediately handed off. Right? Like here comes the financials, here comes the industrials. A very healthy tape, y'all. Would you agree with that?
I do. And again, despite the volatility that we've seen this year, to your point, the market continues to grind higher. Again, I think today's print on CPI, for example, just I think provides enough cover for worse in the Fed to maintain rates where they are.
They're holding steady.
Exactly. Yeah. Which again, never want to fight the Fed for rates. You think rates are going to hang out there now, obviously that's going to be possible for the equity markets.
When you think about risks for the stock market, what would be top of mind? Would it be AI monetization? Would it be the elections? What's on your radar?
Yeah, again, I'm still paying close attention to inflation because any major spike there can disrupt markets. Obviously, the elections, the midterm elections, are important too. So really, it's anything that disrupts kind of the status quo and spikes of volatility. I think those are some of the things that we should be thinking about as we work with the rest of the year.
Should I just keep it simple though? As long as it remains this strong and this impressive, and margins are this impressive, do I just stay around the equity market?
I think so. And again, as long as you are consistent with your investment philosophy, obviously the market is kind of rigged for you to win over a very long period of time. So we just encourage folks to hang in there. And despite the volatility, if you're in the right businesses, you tend to do well.
Let's talk about being in the right businesses. You recently launched this new ETF, the Billionaires Club ETF. It sounds like, is the idea generally invest in companies that are founded, controlled, built by billionaires? Is that the idea?
Yeah. So everything we do at Benign starts with data science, regardless of if it's our US large cap ETF or Billionaires Club ETF. It's rooted in data science. So what we figured out was there's a really powerful data signal for wealth creation. And what I mean by that is if you looked at the wealthiest families and individuals that either started or ran a very large publicly traded company, and all you did was systematically invest in its businesses, we're talking global businesses, you performed quite well over time. And so we wanted to bring this to the market because we think this is kind of a unique way to think about long-term content.
What do you think explains that?
Well, I think if you really think about it, these businesses, it's really another signal for structural advantage business models. And you're just seeing it through this wealth creation. Right? So obviously, if you have like a fast retailing in Japan, the Benign family, they created this amazing business Uniqlo in theory. And over time, they've scaled the business and it's generated a lot of wealth for the family, but also business has this structural advantage. And so I think what you're seeing is that the strategy is really just highlighting these businesses that maybe monopolies or duopolies or have something pricing power or some supply chain dominance that allows them to compound capital.
What are some of the names of this ETF? Give us some examples.
Yeah, so I mentioned fast retailing. Another retail company would be Inditex, so the Ortega family in Spain. You might look into the US and see Interactive Brokers with Thomas Petterfy. So, it's a broad range of companies. I think we're roughly 40% international, 60% US. But even amongst, in the US, yes, we do have some of the mega cap tech companies because obviously they've all done very well. But that, tech is really only around 30% of the fund. So there you get a really nice diversified basket.
Now, what if the billionaire steps away, Andrew? Does that mean the name gets yanked out of the vehicle?
So yeah, so if the billionaire no longer owns any of the security, then yes, it wouldn't be.
And when you're screening for names, you're screening for the billionaire, but just walk me through, what are the other variables you're looking for?
Yeah, so there's a lot of really great data out there just in terms of figuring out the net worth and individuals and families that have done well, but also we bring in our data science to work through certain volatility metrics, certain fundamental metrics that just support that, hey, this is going to be interesting investment for our shareholders.
Now, did you ever get any pushback? Some folks saying, well, this is the thesis. Just stick with big tech. Just stick with Mag 7. A lot of those things will fit the bill, right?
Yeah. I think the most interesting thing is the idea for everything we do is finding these advantage business models, right? But that means you also should be flexible with what is a structurally advantaged business. That can change, like go back 40, 50 years, and it was probably publishing companies, maybe car manufacturers or consumer staples. And then as you make your way forward, it might be healthcare companies or application software. Now you're seeing more tech companies and just industrial companies that are benefiting from the AI infrastructure build out. So I think the idea is to be adaptive towards what is a structurally advantaged.
Super interesting idea. Andrew, thanks for being here on set.
Thank you so much, Josh.
Coming up, we get a look at Google's new Pixel 11 smartphone. Plus, we dive into Bob Iger's deal to buy the Lakers. That's next on Market Domination.
Grind catches up with everyone, even me. That's why I trust QNL Ultra High Absorption Turmeric to support my joint health. It's the #1 doctor recommended form of turmeric. It helps you keep coming to things you love at every age. QNL, the brand I trust.
¿Quieres sacarle el máximo provecho a una sola hoja? Usa Bounty. Bounty está hecho para ser más resistente y más absorbente. Así que mientras las marcas corrientes no aguantan, una sola hoja de Bounty sigue absorbiendo, aún mojada. Eso sí que es valor. Bounty, el quick protector rubber.
They say there are no new ideas, just ways to combine what already exists. The genius is in the mix. So what happens if we bring these two together?
Sipping on gin and juice?
Laid?
No, no. No, we're not doing that. I got my mind on my money. Money on my mind.
The X-Plan cocktail shaker, developed steel G.
Stick to cooking. Ready? Please.
Okay, lots to take care of today. Maybe I'll just get Publix delivered through Instacart. Yeah, genius idea. All right, where to begin? Closet? Right after I research mattresses. Can't forget to walk the dog. Or pressure wash the driveway. Should I learn guitar? Kelly's birthday. Close one. Okay. Wait, what was I doing again? I'll attack the list tomorrow.
Well, I can sort of lost it. Like, what is in this way?
You see, it's happening now.
Save as many as you can.
Google debuts its new Pixel smartphones as rival Apple prepares to unveil its iPhone 18 lineup next month. 50 Yahoo finds its tech editor Dan Howie for a closer look. All right, Dan. So Google unveils new Pixel phones. What do we need to? What's the biggest upgrade in your opinion?
Probably, honestly, the inclusion of their Gemini AI. Basically, this is their kind of big push that they're making in the consumer space when it comes to AI. They allow their Gemini AI models to be used on Samsung phones, also the new Apple Siri AI. That is also going to be powered by some aspects of Gemini. But I think that's really the biggest upgrade here. The idea is that you'll be able to tell your phone to order me dinner or get me a cab, and it'll be able to go out and do that for you. That's really where these smartphones are going, and I think that's a genuinely helpful way of doing things. So many times you're wondering where at least I am. Let me get somewhere. So I'm gonna just yell at my phone to do that. Fantastic. I also have a little kind of LED ring on the back of some of them that shows when Gemini is actually thinking. So it's just a visual representation of what's going on. And then obviously there's 4 different phones in this lineup. You have the Pixel Pro, the Pixel Pro XL, and then the Pixel Pro Full, Pixel 11. And yeah, I mean, to me, the standout here is Gemini, just overall, because these phones, they look very similar to last year's models. There's some upgrades with as regards to the cameras, just here and there, but it does come down to the AI, and that's kind of what Google wants. They want to make AI front and center for consumers now.
Do you think that Gemini, is that enough in and of itself to drive material upgrades, Stephen, for Pixel?
For Pixel, no. I mean, I think for Google fans, they're going to hold on probably for a little bit longer. The install base for Google is also really small. I mean, it's nothing compared to what Samsung and Apple can do. So this isn't going to be a huge volume seller for them overall. I think, when it comes to the upgrade cycle, it comes, it's, at least as far as anecdotally for me, for people that I know that are Pixel phones, it's more on the battery's down. I gotta go get it. And it's similar to iPhone. It's just, I feel like when it comes to Pixel, their longevity is there, and that they're more customizable. And that's what a lot of people who like Pixel want. You can fully customize them in ways that you feel as though you may want to a degree that you can't with the iPhone. I think that'll probably allow them to stay on for a little.
When you mentioned the foldable too, when you think about that category, Dan, that form factor, do you think of it as sort of, low volume, high margin? Is that anything about it?
Yeah, I mean, that's the big thing here. And with Samsung, they have their foldables, which they said are some like hotcakes compared to the prior year. They said that last year as well. So we're seeing an uptick in these, but that's the idea, is low volume, high ASP. That's what they're going to go for when Apple launches. That's what Google is going for here. This phone is $18.99, the base model for the full. It's not unheard of. Samsung offers charges similar pricing. I want to point out, though, the number of foldables that are expected to ship. So in 2025, they shipped 19.6 million units globally, this is according to Counterpoint Research. They're expecting 38.6 million units by 2029. Now, okay, it sounds like a lot, but then compare that with the global smartphone market in total, and this is a fall of 13.9%. So keep that in mind. It would be 1.08 billion units shipped. So foldables are a small portion of the market, but to your point, they cost so much more that it makes sense for these companies. They don't want the foldables to be the go-to phone for everyone. They want those high priced or high target consumers to point at these phones.
We showed the prices there, Dan, a moment ago. Did that represent a bump from last year?
Yeah, so $100 across the board for these prices. I mean, this is what you're going to see with everything now. This is just the latest example of price increases. $7.99, $9.99, $17.99. There's some nuance here, though. When you look at the Pixel 11 and the Pixel 11 Pro, they start now with 256 gigabytes of storage. Last year they were 128, so you can say, okay, well, I'm really not paying more. I'm just paying for the higher amount of storage, but that's just the starting price now, so you are paying more. The other thing to point out is you get less RAM with the Pro and the Pro XL this time around at starting price. You get 16 before, now it's 12. So you can see how companies are trying to finagle with the issue with regard to the cost of memory and storage here. They're taking different routes. And so, for Google, they run everything from top to bottom. It's their processors, it's their software, it's their design. So, they have that full stack approach. They can make optimizations. Maybe they don't need that amount of memory necessarily to run what they want their users to run. And so, it's something worth considering, though, when you're looking at your new devices that you may be buying, whether that's a smartphone or a laptop or a tablet. There's going to be trade-offs as we continue to see this shortage go through the next 3 years or so, maybe even 4 years, we're getting 2030. And so we'll have to kind of contend with this and these price increases as well.
Final question. In your story, Dan, you point out Google only has 3% U.S. smartphone market share versus, it's about 58% for Apple. It's about 26% for Samsung. If Google isn't selling huge volumes, why do they keep investing in this hardware? What's the strategy?
It's similar to what Microsoft does with their Surface products. Those aren't volume sellers. They're great products, both the Pixel and the Surface line. Right? They kind of represent the pinnacle of what these companies believe their smartphones or laptops should be. So if you look at the Pixel, it's what Google said as well. This is what we think an Android phone should be. Now, is Samsung going to listen to that and design a phone that looks exactly like the Pixel? Absolutely not, because Samsung is a gigantic company and they make oodles of money selling Android phones already. But this is what they want the Pixel phone to look like, and it allows them to showcase software features that may not be available on other phones until later on. So it's basically a showpiece for Google to kind of just demonstrate what it's capable of and what its software is capable of. And as I said, you see the same thing with Microsoft and its Surface products. They're showcases for what they believe they're the best offering together would be both hardware and software.
All right, Dan, thank you, buddy. Appreciate it. Well, just 14 months after Mark Walter bought the Los Angeles Lakers at a record $10 billion valuation, the legendary franchise being sold again to former Disney CEO Bob Iger and Josh Kushner. We want to bring in Mike Morganov, national NBA and basketball business reporter and host of Business Decision. Mike, it is good to see you. Let's just dig right into this, Mike. So Lakers are valued at around $10 billion a year ago. Now we're talking about $12.5 billion for your reporting. How is a team appreciated by $2.5 billion, Mike, in a year? Walk us through that.
Well, I'm sure that there's some fundamentals of economics and all that are involved. I like to think of it as somebody really wanted it and they had the money to go pay for it and make Mark Walter sell it. When it comes to sports franchises, sometimes it's just simple as one person demand makes the number go up.
Bob Iger and Josh Kushner, Mike, these are very successful, very wealthy men. Forbes puts Kushner at like roughly $5 billion. That still is a long way to $12.5 billion. Do we have any line of sight there, Mike, about how exactly this is getting financed?
Yeah, so Thrive Eternal, which is an offshoot of Thrive Capital, Josh Kushner's private equity firm, is going to be a part of this deal. In addition to Kushner and Bob Iger being part of it, the NBA limits private equity to owning 20% of the team. So there are caps there. They also allow sovereign wealth funds, pension funds to get involved. And I'm sure there will be some other, high net worth individuals that want to get on the caps table for owning the Lakers. And it's worthwhile to say they're not buying 100% of the Lakers, right? So it's not the full $12.5 billion. There's not 100% of the equity to divide. Mark Walter, if I remember off the top of my head, owns somewhere around 60% of the team. So they won't have to produce the whole $12.5 billion to make the sale go through.
Is it unusual, Mike, to sell without an auction?
I think it differs from team to team and from occasion to occasion. The Lakers, the last time they were sold, were in a similar place. There wasn't a public auction. There was no notice that, hey, we're putting the team on the market. Come and make your best offer, like there was for the Boston Celtics, just 2 years before this. And so it differs from situation. And so we've seen kind of a different slice of variety for every team. And, if you look at, say, what the NBA is doing now, where they're exploring expansion in Vegas and Seattle, that's more of an auction situation. Here, it was just a very interested buyer making a great offer.
Broadly, Mike, is this, do you see this as a good news headline for the NBA, for the league? Very wealthy owners, higher franchise values. Is that how you see it?
Listen, I'm sure the NBA is one, stunned, and two, elated at this. One, you're talking about this team got sold, almost less than a year later, and it's gone up 25% in value in that time. Like, I'm sure they love those numbers at the league office and how quickly their teams appreciate it. I'm sure that's a great selling point for all other teams out there. And two, they get to bring in Bob Iger, who's the longtime Disney CEO. Disney has a long-term relationship with the league, and they're rights partners for about a quarter of a century there. And so these are people they know. Josh Kushner already owns a minority stake in an NBA team. So they get to bring people in at control level that I'm sure they want to be associated with. So the NBA gets to win on multiple levels here.
Mike, if I'm a Lakers fan, I'm watching this right now. Should I expect anything to change because of this? Would there be changes in front office or spending or culture?
That's a great question. Mark Walter, when he took over, he had so much success with the Dodgers, and it seemed like he was on his way to replicating what they did as a front office with the Dodgers, with the Lakers, being more analytics oriented, more process oriented, all the things that the Dodgers have had success with, right? They're probably the best organization in sports. We don't know anything about how Josh Kushner and Bob Iger want to run a team. And we also don't know if they want to continue down the road that Mark Walter and that ownership group have started down. So it really is a very big question about what the Lakers' future looks like, because they were just at the starting point of kind of one culture setting moment for them, one organizational build for them. And so does that continue? Do they pivot? It's a very important question for the future of the league.
Finally, Mike, you do report how Mark Walter's insurance companies, they are under investigation, you point out, by federal prosecutors, the SEC. Any indication that's related in any way to this sale, Mike, or no, unrelated?
Yeah, that's hard to answer at this point. You know, Bloomberg has done great reporting on it in the last few weeks, just how federal prosecutors are looking into several Mark Walter-led companies and Guggenheim Partners too. And so the timing obviously is curious. We don't know yet definitively if there's any relationship there between those investigations or whether this was, you know, just an instance where, you know, Kushner and Iger, who are looking at a Vegas expansion team, decided to pivot to LA and just made him an offer that, you know, he couldn't refuse.
Mike, great to have you on the show today. Appreciate your time. Thank you.
Thanks.
Coming up now, one meal delivery startup grew to nearly $200 million in annual revenue. That's next on After.
They say there are no new ideas, just ways to combine what already exists. The genius is in the mix. So what happens if we bring these two together?
Sipping gin juice, laid back. No, no, I got my mind on my mind. Money on my mind.
The next plan, cocktail shaker, the devil, steel G.
Stick the cookie. Ready? Please.
I have been obsessed with this natural self tanner from Beauty by Her. It is safe, effective, strain-free, and smells unbelievable. First, exfoliate your entire body and apply lotion and wait for it to completely dry before applying the scent tanner. This will give you the perfect sun-kissed glow with a harmful UV rays.
Hey fans, looking for more live baseball? We've got you covered. Catch top minor league games live every day on the MILB channel, Valley Sports Live. Follow up-and-coming prospects and see the next generation of major league stars and big names looking to rehab and rebound. Don't miss any of the great moments this season. Watch MILB channel, Valley Sports Live today, streaming free only on Samsung TV Plus.
Hello and welcome to Asking for a Trend. Well, as prices for both groceries and restaurants remain bloated, many Americans are turning to meal delivery services to save them time and money. Benefiting from this trend is Tovala, a smart countertop oven and meal delivery service that works together. The company announcing that it surpassed 50 million meals delivered and is approaching $200 million in annual revenue. Joining now is Tovala's founder and CEO, David Raby. David, it is good to see you. I thought maybe, David, start kind of big picture and explain the company a bit, because I'm sure, David, there's viewers watching right now. They've heard of DoorDash and Blue Apron and HelloFresh, but how do you all sort of fit in?
Yeah, so the best way to think about us is on the one hand, we take the best elements of meal kits, and on the other hand, the best elements of fully prepared food. So you get our countertop oven, we send you food that is ready to cook, but the ingredients are mostly raw. But instead of asking you to chop and prep and do all the cooking and cleaning, we ask you to spend 1 minute preparing the meal. Add some spices, maybe add a little water. Then you scan a QR code on the oven. The oven downloads the cooking instructions from the cloud, so it cooks it exactly the way our chefs intend, using dry heat, wet heat, broiling, different temperatures. Then you get a push notification 20 minutes later, and you get an absolutely perfectly home-cooked meal for 1 to 4 people, but with no work. So think of it as like high quality, high convenience.
When somebody buys a Tovala oven today, David, how much are they eating Tovala meals versus grocery food? Like, is it a 50-50 split?
People order about 6 meals per week on average, but they use the oven for their own food also. So you can use it as a air fryer, as a toaster oven, to make cookies, to make broccoli, to do a whole bunch of different things. So on average, people are using their ovens only about 30 times per month. And every week, that's about 6 Tovala meals.
You have now, I was reading, Dave, you delivered 50 million meals. You're profitable. You're approaching 200 million annual revenue. Looks like you're growing roughly 20% year. I mean, meal delivery that's a tough business. It's a tough market, Dave. I'm curious, what do you think you sort of figured out about the market, the industry, that maybe eluded others?
Yeah, having the hardware is such a huge advantage in the way it is for Nespresso or Keurig. Those are kind of the best comps for us, because it allows us to deliver just a way better product experience in the home. And what that translates to for our business is a much more retentive customer. So most of the meal kits of the last decade or so struggled with really high churn. People would try it for a week, they would bargain hunt and discount shop and switch to some of the other ones, but rarely would they stick around. It's very different with Tovala. Once someone buys the oven, puts it on their countertop, we own that real estate. People stick around for a long time. That's how we've been able to get to profitability. Been profitable now for almost 3 years, and hit the revenue numbers that we have.
Who is your typical customer, David? Like, I'm curious, is it singles? Is it couples, families? And how, if at all, have you seen it evolve over time?
Yeah, it definitely, we appeal to a really wide spectrum of people. So the kind of target customer is a young, busy professional that lives in cities and wants to eat really great food, but is maybe tired of doing DoorDash every night and has turned through the meal kits. But we also serve them as they age up. So as they have kids, as they become empty nesters, we're a great solution for them through multiple different life stages for different reasons. The biggest change in our customer base probably has been more recent, as we've launched a family product. So you can cook a meal for 4 people in the oven all at once, usually in 20 to 25 minutes. And so we're now serving families of 4 to 5 much better than we were for the first 6-7 years of our company history.
And walk me through the business model, David. Like, how much does the oven cost me? And then I assume it's a subscription model.
Yeah, so we have 2 different ovens. One retails for $69. The other is $119. We do promote lower than that sometimes. In order to get that price, though, you have to order from our meal service 6 times. and that allows you to get this, really expensive oven, really great oven for a much lower price. And then the meal's base price is $13.99, but they go as low as $8.99, $7.99 even for a family meal. Or if you get a meal with filet mignon, that might get you to 18, 19 bucks.
We're always looking for lines of sight into the consumer, David. You have that. How healthy, how strong does the consumer look, just based on what you see in your business?
Yeah, super strong. Retention looks better than it really has in a very, very long time. So we haven't seen a slowdown in purchasing of meals from current customers or demand for new customers. We did raise price about a month ago on our meals, so it's the first time we've raised price in many years, and really didn't see much of a hit to our customer base. So what we're seeing is a resilient customer. I think certainly part of that is that our meals are well priced as compared to many of the alternative convenient options, but nevertheless, the consumer seems pretty strong in our eyes.
Final question, Dave. We talk a lot about AI on this show, and I'm curious, how do you see AI over time impacting your business, your product?
Yeah, I think the biggest thing for us is moving towards a world of hyper-personalization. So we'd love to get to a point where you come to the Claw website, we learn a little bit about you, and we can give you a meal that's really perfect for you, or even meals that are perfect for everyone in your household. And to do that requires a whole bunch of infrastructure behind the scenes, of which AI will certainly power a lot of that, especially as it pertains to where the right selections for each individual.
David, great to have you on the show today. Thanks for your time.
Thank you so much.
Coming up, we'll hear from quantum computing giant Quantium about its new deal with Oracle. That's next on Asking for a Trip.
Spending ad dollars on more reach, not the right reach, that's like blowing budget on Office Next, then dazzle, then disappoint. Find the right buyers when you target by company, job title, and more. Full spend. Advertise on LinkedIn.
People always ask if I cook the same way at home as I do at my restaurants. The answer? Yes. I'm Michelin-starred chef Nancy Silverton. To make truly delicious food, you need the right tools. With HexCloud's hybrid cookware, I get unbeatable searing power, easy cleanup, and equipment durable enough for both of my kitchens. People think I'm cooking for the crowd, but I'm just cooking for one person, the one taking the next bite. Performance, no matter the kitchen.
Vistaprint helps bring your ideas to life with easy-to-use design tools, real human support, and all the products you need at prices you can feel good about. Just think it, click it, and print it with Vistaprint. Print your possible with 20% off your first order at Vistaprint.com.
Afternoon movie favorites. When you're home on the edge.
We're so glad you're here.
With movies as unpredictable as life itself. There's something about it. It's different. So stay in. Get a kind of relaxing evening yummy and stay out of breath. You already have to mind. Around the clock. Stay as long as you want. Lifetime movie favorites. Available 24/7. Watch now on Samsung TV Plus.
Shares of quantum computing company Quantinuum surging after announcing a strategic partnership with Oracle to bring quantum computing to Oracle's AI data centers. We also released strong second quarter results and issued upbeat guidance. Now, Francis Julie Hyman spoke to Quantinuum CEO.
Let's talk about this Oracle partnership first, which is a big deal for you guys. A lot of the stock reaction that we're seeing has to do with that. So walk me through what the partnership means and what Oracle's customers are going to have access to through what you're offering through Quantinuum.
Sure. We're excited about this deal because it's an industry first deal that validates that all of the important use cases that we're seeing around quantum computing happens in close conjunction with classical computing and AI. In this deal with Oracle, we will be placing Helios, the world's most accurate quantum computer, into the Oracle data center. Now, this is just not a statement of physical location. It's also a statement of how that integration is going to allow Oracle customers to deploy these hybrid workloads, as we say, AI and then quantum training, AI together, and do so in a seamless environment where the customers don't have to worry about yet another piece or type of computing hardware in the infrastructure. This will make it seamless for them. The Helios, our quantum stack, will integrate into the Oracle compute infrastructure, will be offered as a service, and it will make the most powerful quantum computing, along with some of the world's most advanced AI computing, available in a seamless, easy to use manner for Oracle and our customers.
Now, as you and I talked about before, and I talked about with other leaders within the quantum industry, there's still a lot of space ahead of us in terms of development of quantum. So what's the timeline on this particular project and when Oracle customers will have access to this quantum computing?
Great. So I'll answer the question in two parts. One is, when is it going to be real in Oracle? As Oracle and us have declared and disclosed, that the OCI service is going to be up in a few months. And it'll only get better as increasing levels of integration, more libraries, and more capability gets put into that center. So it's not years from now. It is very much in the now. In general, as you talk about capability roadmaps, what we described yesterday is our confidence in the roadmap that we had said gets us to highly accurate or fully fault-tolerant quantum computers at scale before the end of this decade. For us, that machine is called Apollo, targeted for 2029. And we are well on track to building that. Not just the hardware, not just the supply chain, getting it in place, but also building the error correction capabilities in order to be able to hit some of those high value workloads around chemistry, life sciences, optimization. So for us, that future is, while there's still a distance to 2029, there are steps in between, like Seoul in 27, and the work we're doing with customers building these applications that gives that space tremendous definition.
The last time we spoke, we also talked about in what is a more crowded quantum computing landscape, how you all see yourselves standing apart. Is the real sort of race here in quantum to get to the higher degree of accuracy? Is that really, do you think, what's going to be an important differentiator?
That is one important differentiator. Clearly being able to provide performance at scale. And performance, this is really reliable, accurate performance, is absolutely essential. But it is not the only thing. You can prove that in a lab. How do you manage the supply chain? How do you build these things at scale? How do you get it out to tens or hundreds of customers? is very important. And that doesn't happen simply because you build one of these in the lab. It takes years of careful curation of a supply chain, manufacturing capabilities, and then being able to industrialize the design to be able to have that high throughput manufacturing to meet demand. Second is to take advantage of that performance, you have to build a software stack and a full stack of capability. This is where you build developers, you allow other developers, not just yourselves, to build applications. These become development and deployment platforms that drive that software spiral. And lastly, you innovate on algorithms. How do we get these breakthrough applications to be real? You really invent new algorithms like we have done in how we train AI or LLMs to actually use quantum simulations to, for the first time, understand chemistry deeply at chemical accuracy levels.
And Raj, I mentioned in the beginning that you all had numbers that beat estimates. And the numbers, as we talked about before, are still relatively small. You had 8 million in revenue in the quarter, which is a near quadrupling in revenue. But you know, again, a lot of the ramp is ahead of you here. At the same time, you guys do have a good amount of cash on hand because of your IPO. I believe around $2 billion in cash. So how do you think about deploying that cash as you ramp up towards the revenue picture and eventually the earnings picture?
That's right. So for us, as we disclose, we see the business accelerating. And the business is accelerating because we are accelerating capability in the hardware, software, and our ecosystem engagements. That is the fundamental portion of the strategy. The cash we have, our balance sheet, allows us to very strategically invest, for instance, in the supply chain area, for instance, in partnerships with other companies that give us adjacent capability to hit market value creation sooner. So cash gives us the ability, our balance sheet gives us the ability to accelerate the business, fortify the business in a way that we wouldn't have been able to if we didn't have this balance sheet. So it's all about the cash serving the strategy serving the objective to build value bigger and sooner.
Raj, one of the other developments that's been interesting in quantum has been the U.S. government getting more involved with sort of lending support, executive orders, et cetera. How do you think about that, and what does it mean for a company like Quantinuum and for the industry more broadly as well?
We see this as a very positive trend. And this is a validation of quantum, because the quantum is accepted as a critical technology, and it's not just for the purpose of cryptography or how it got its kind of initial fame. It is a broad use in discovery and science, as the US Genesis program talks about AI and quantum for discovery in science. So what we see is this is the necessary role for a government in order to incentivize not only the innovation, but also the supply chain, and then provide an early market like the executive order does for these systems to be actually deployed. This is great news for us. We are deeply participating, as you're aware, with the CHIPS R&D program, with the DARPA QBI program, and deeply engaged with the national labs in algorithmic research through the Genesis program. So this is really what we think as the necessary tailwinds, and the more the better.
Raj, thank you so much. Really appreciate your time today.
Thank you again. Thanks for having me.
Thanks.
Stick around. More Ask for a Trend.
People always ask if I cook the same way at home as I do at my restaurants. The answer? Yes. I'm Michelin-starred chef Nancy Silverton. To make truly delicious food, you need the right tools. With Hexclad's hybrid cookware, I get unbeatable searing power, easy cleanup, and equipment durable enough for both of my kitchens. People think I'm cooking for the crowd, but I'm just cooking for one person, the one taking the next bite. Performance, no matter the kitchen.
I should hold it for now. What should we do?
I know what to do.
You do?
I'm going to cashnetUSA.com. I can apply in minutes, and if approved, we can have the money in our account as soon as the same business day.
You're my hero.
Saving the day is easy with CashNet USA.
When you need money fast, you need a hero.
Go to cashnetUSA.com to apply for the money you need now.
Wow, this is incredible.
It's gorgeously gorgeous.
Oh my word. Look at that.
Time out what to watch Thursday, August 13th. Applied Materials reported quarter results after the markets closed. AI chip demand once again in focus. Analysts expecting sales grow both from a year ago and from the prior quarter, driven by continued spending on equipment used to produce high bandwidth memory chips. On the economic front, another important read on inflation coming out Thursday with July's producer price index. Economists forecasting headline PPI to rise in July, rebounded from a decline in June. Core PPI, which trips out food and energy, is expected to accelerate on a month-over-month basis. We're also getting the latest look at the labor market, with weekly initial jobless claims expected to tick up slightly compared to the week prior. Both the inflation and labor data coming in addition to more Federal Reserve commentary. Fed Presidents Beth Hammack and Tom Barton both speaking on Thursday. Markets will be looking closely for what they say about inflation, the job market, and the path forward for interest rates. That's a wrap on today's show. Thanks for watching.
People always ask if I cook the same way at home as I do at my restaurants. The answer? Yes. I'm Michelin-starred chef Nancy Silverton. To make truly delicious food, you need the right foods. With HexCloud's hybrid cookware, I get unbeatable searing power, easy cleanup, and equipment durable enough for both of my kitchens. People think I'm cooking for the crowd, but I'm just cooking for one person, the one taking the next bite. Performance, no matter the kitchen.
This makes it worse. Getting up early in the morning. The deal with gluten free, I want. Let's make a deal. You're in the zone. Getting this piece would be like a cake. All your favorite deal makers all in one place. I don't know if I should be scared or excited. This is like a nonstop roller coaster that you want for hours and hours. Deals, the History Channel.
Inflation was moderate in July, coming in along expectations, and markets basically shrugged it off. But behind the surface, we have a few huge stories that are impacting crypto markets and, of course, the rest of markets in general. We're going to unpack all of those right now. Let's go. Happy Wednesday, everybody, and welcome to the Daily Wolf on Yahoo Finance. I am your host, Scott Melker, also known as the Wolf of Wall Street. You can find me at Scott Melker on X and on YouTube and anywhere else that you may have social media or want to watch my content. I highly, highly, highly recommend that you do check out my 9 a.m. show each day on YouTube. Today, I have an incredible guest, Jordan Visser, one of my favorite conversations that I've had in a very long time. And I guarantee it will make you quite bullish on the future of Bitcoin and crypto, especially in the context of AI and CapEx growth. So listen, it's not a crypto story today, but as usual, we had a CPI inflation print, the most important CPI inflation print since the last one and until the next one. I don't think anybody really is paying attention to these anymore, but they do inform how prediction markets are viewing the likelihood of a Fed interest rate hike or cut. I mean, here's the news. 5 updates. Inflation was moderate in July, but energy prices remain elevated. So headline CPI rose 0.1% monthly and 3.4% annually. Core CPI rose 0.2% monthly and 2.5% annually. Importantly, all 4 numbers matched expectations. Remember, it doesn't matter if we have inflation or not. It just matters what Wall Street is betting inflation will be, right? It just matters what we expect and what happens versus that. Of course, energy declined slightly, but still 14.7% more expensive than 1 year ago. As I like to do, just take a look at prediction markets. Kalshi, like I said, what does this mean for Kevin Warsh and what does this mean for the Fed? I think that it's more confusion, but as you can see, people were kind of handicapping the idea that there would be a rate hike more seriously than they are now. Yesterday, 41% chance of a hike, now down to 33% after the news came in. If you believe that Kevin Warsh is going to hike rates in September, which was as high as a 50-50 bet recently, I think that you're smoking crack. I think that I would take the other side of that bet. Actually, I'm interested in doing it. Kevin Warsh has one job and one job only. He's the soft puppet who's going to do what Donald Trump, that finger's on this side, what Donald Trump tells him to do. And Donald Trump wants this guy to cut rates. There is, I would say, a 0%, 0.000% chance, as my friend Dave Weisberger alluded to the movie Animal House, Blucharski's GPA, 0.000% chance that we are going to see a rate hike that would massively put us into a horrible situation, especially considering we're at almost $40 trillion in debt and need to refinance that. It ain't happening. Let's move on because markets shrugged it off just like we should. CPI. Doesn't matter. Nobody cares. What people do seem to care about is prediction markets. We have a big story right here. CFTC exercises emergency authority to ensure market stability. If you want to know how important prediction markets have become, or at least how important the battle for power over prediction markets between the federal government and the states has become, just look at that. That is an official CFTC release invoking emergency authority to ensure market stability. So a couple of weeks ago, New York went after Kalshi once again. Now we know that many states have been suing prediction markets, but they were seeking a nationwide order blocking Kalshi's event contracts and more than $35 billion in damages. New York obviously continues to argue alongside many states that Kalshi markets are illegal gambling products. The CFTC here invoking emergency authority and ordering Kalshi to continue operating under federal derivatives laws. The federal government thinks these are derivatives contracts. State governments tend to think that these are gambling contracts. What do you do here if you're Kalshi? Right? You have the states like Minnesota and New York, I told you about in the past, multiple other states telling you to cease operation. Then you have the CFTC of one, Mike Seelig, coming over the top rope and telling you that you have to continue offering these services to customers in those states, even though those states are telling you that you cannot do it. So this order keeps constantly operating in New York, but it certainly does not resolve the underlying lawsuit or the underlying turf battle we've been having constantly. No, this is not a crypto story, but I think it is a huge story about how the states and federal government will behave when it comes to regulation, which informs what we may see in a world with no clarity act, where the regulators are effectively in charge of what happens with crypto. I mean, this is just the states versus the federal government in a level we haven't seen in a long time. And it's about new control of an entire new category of financial markets. Now, moving on to the next story, which it just makes me shake my head because the own goals in crypto are seemingly endless. Harmony's won 37% after attack minutes 4 billion tokens. Now, what might be interesting to you is that the entire market cap of this right now after the drop is probably, I'm guessing, fully diluted value. The market cap of one token is probably like $11 million. So 4 billion tokens, only a couple million bucks. 4 billion tokens, but it equals roughly 1/4 of the legitimate pre-attack supply. So the token obviously dropped 35 to 40%. Now, independent investigators say that about 97% of those counterfeit tokens have already reached exchanges or been sold. So now, okay, so we're a clown show. We know this side of crypto is a joke. We know that AI, as it continues to become more powerful, we're going to see hacks increasing and the amount of money from these hacks increasing. And on these older blockchains where probably there's like one guy in the closet working, it's like the stapler guy from Office Space. There's nobody working here, nobody really protecting these. These things are going to continue to happen. Now Harmony has the unenviable position of deciding what to do about it. Right? They haven't disclosed what the technical causes, but they've said they want you to prepare a patch. Last I checked, for patch for just meaning they can't mint any more tokens, but the 4 billion that have already been minted will still remain out there, whatever. Or rolling back the blockchain. Nothing says decentralized, immutable ledger, like rolling back the blockchain and pretending that they didn't happen. So we go back in time, like Marty McFly, sweet DeLorean, and we can pretend that this never happened. The problem is that doesn't actually change anything for the 7 people on planet Earth who may use this blockchain for some legitimate purpose, maybe the real transactions. So those people would be affected. I'll be generous, but it also it does not going to roll back the sale of these 4 billion fake tokens. So the damage there largely already done. I mean, this blockchain was supposed to be, as I said, an immutable decentralized ledger, but it basically just became like a Google Doc with a version history. Go back to a few days ago and see what the document says. This is like, man, it seems like every day. I mean, I think we had read or reported that, there's a hack in crypto every 2 days this year, basically. And the numbers are not necessarily huge. It's not billions of dollars a day, but it just really informs your investment decisions moving forward. I think that a lot of the old stuff is dead or dying or will be exploited. And it's really time to just focus on quality and teams that are building and actually care about security. There's like 6 of them. We're going to find them for you. All right, the next story right here, it's a continuation of yesterday. I told you how Riot Platforms yesterday did a $9 billion plus deal with Anthropic and how miners are all now effectively just becoming AI data center providers. Well, one overlooked group is at 1.78 billion of selling pressure to Bitcoin market. Did I spoil it? It's Bitcoin miners. They've sold 28,000 Bitcoin already this year. That the value of that right now about 1.78 billion at current prices, but obviously they sold a lot of that probably higher. This is the publicly traded miners that began the year holding 127,000 Bitcoin, now holding 99,000 Bitcoin. And there's a lot of reasons for this. So one is obviously the pivot to AI, which makes a lot of sense. You make a lot more money there. There's less risk. You're not exposed to Bitcoin price. You're not exposed to crashing hash rate. And right now, on average, apparently it costs about $74,300 to produce one Bitcoin. And the price is not $74,300. Last time I checked, at 63, 64, 65, they're losing money every time they produce a Bitcoin. So of course they're going to pivot to brighter pastures. This is something that has happened in every bear market. I mean, they have to sell it, right? This is forced selling because they need to be able to pay their bills. You know, like the electric bill comes and you're like, I would like to hold my Bitcoin, but also I need to pay my electric bill. And the only way to do that for them is to sell Bitcoin. So maybe this is one of the less hyped and untold stories of why we've remained in a bear market, because of this minor transition to AI and they're forced selling directly into the market now. You know, we can call it forced selling, but as we look at what they're doing with AI and the money needed to build out that infrastructure, maybe it's actually just a pivot in their business model, and this is going to become more permanent until they're no longer Bitcoin miners at all. The next story that we have today, Crypto.com rolls out tokenized stock derivatives as crypto exchanges push into equities. So the real story here is not that they're offering tokenized stocks. We know that that's coming everywhere and that all of these platforms are competing to be the everything app, right? But what they launched here is round-the-clock exposure to approximately 1,500 American stocks. But they are derivatives available to people outside the United States because we hate fun here and aren't allowed to do anything that's cool. But this gives you exposure to the price of stocks, but no voting rights or rights that would come with actually owning one of these stocks. It's very important. We have this battle in tokenization for the way that people will be able to gain exposure to stocks. On the one side, you know, you actually tokenize the asset, it's held in custody by somebody, and you have all the rights that come with actually owning a share. It's a tokenized version of that actual share. On the other side, you just get the price exposure, kind of like we've seen with pre-IPO stocks, where you can bet on it and trade it, but you don't actually own anything. That is what they are launching here. Legal ownership, beneficial ownership, voting rights, or direct claim against the underlying company. But these are not tokenized stocks. They are stock price exposure wearing a fancy crypto costume. Still cool, but important to know what you own and what you're trading. Now, speaking of people wanting to offer everything, we have our friends over at Kraken now offering 20x Bitcoin margin. So I'm old enough to remember when exchange in the United States could only offer 5x perpetual offerings. Now, I didn't know, I looked this up, that in May, Kraken announced 100x leverage on Bitcoin and Ethereum perpetuals. So on perps, on Kraken, you can get 100x leverage, meaning that if Bitcoin moves 1%, you get it, which is a good time because that happened probably since I started saying that sentence, right? And it's even worse on ETH and altcoins, obviously. So I didn't know that they were able to actually do that. So this 20x on Kraken Pro is actually for spot Bitcoin USD exposure, meaning that you margin on a stock account and get 20x leverage. So, you get $5,000, you can now control a $100,000 position. But listen, this is that same thing. That means at 20x, a 5% move on Bitcoin gets you liquidated. You're gone. Your money is gone, right? An unlevered investor can survive a large decline. You can just wait until price comes back. But if you are using leverage, 20x leverage, specifically in this case, you can be liquidated during a normal intraday move, even if you're right and Bitcoin ends up going the way of your bet. Leverage is very, very dangerous. Now, there are reasons to use leverage because it reduces counterparty risk. You can basically, gamble with 20x or invest or hedge or whatever you want to call it with more money, leaving less money on the actual exchange. And then you don't have the counterparty risk of your money or your coins being on exchanges, which is very important. I would just say that these are instruments that should be solely used by professionals, and retail probably should not be using 100x leverage on perps and 20x leverage on their spot trading accounts. It's going to get ugly. I'm all here for it. People should have the freedom to do whatever they want. I love that Kraken is innovating and improving, but I just don't think the average person needs this. So listen, the market continues to shrug off any news that's coming from the Fed. Once again, I think that you might actually be on drugs if you think that we are going to raise rates, but maybe I'll be wrong and I'll be blowing on drugs. Never know. definitely possible. But meanwhile, the industry keeps chugging along with good news after good news and people building left and right. That's all I got for you today. I will see you tomorrow. Next Daily Wolf. Deuces.
Wine is definitely our enemy after trying this. It's only been about 15 minutes and we're feeling good. So I definitely recommend Willie's Remedy.
4 days of incredible RV savings. The Great American RV Show is at Myrtle Beach Mall, August 13th through the 16th. Every unit is priced to sell before we tear down Sunday night. Grand Design, Brinkley, Venture, and America's top towable models. Shop exclusive show offers you won't see again this year. Get top dollar for your trade with financing specials that fit your budget. When the show is over, the deals are over. Join us August 13th through the 16th at the Great American RV Show next to Bass Pro Shops in North Myrtle Beach.
They say there are no new ideas, just ways to combine what already exists. The genius is in the mix. But what happens if we bring these two together?
Sipping on gin and juice.
Laid back. No, Eli. No, we're not doing that. I got my mind on my money. No. Money on my mind.
The Hex-Plant cocktail shaker, developed still genius.
Stick to cooking. Ready? Please.
I took a chance and bought a house, and it's been a lot of work to make it feel like me. This is my Instacart story. When I start a project, I love to have a plan of attack. So with Instacart, I can get what I need from Lowe's, and it shows up really quick. It's like having a second set of hands, which is awesome. The kitchen wasn't really my vibe, so I started changing little things up here and there. I take pride in being self-sufficient, and I enjoy patting myself on the back when I'm all done.
It goes down.
This Ford breaks people down. And anyhow, and did. Look at that right there. You were ready. Sorry, it's on 24/7. No way, man. What did you ask for? Only on Samsung TV.
You're seeing double-digit traffic increases?
Yes,
Wow.
which led us to open 20 stores in the last 18 months. And I think, social media and social commerce have certainly created a halo. We had a particular gene, the Casey gene and the Astrid wash, where on the Open Creator platform, we had a single customer qualify with 5,000 people in her audience. She bought a pair of our low-rise Casey Astrid jeans at our local Nashville store. She went home, made a TikTok video, put it on the open platform. She sold 11,000 pairs of jeans. Remember, she has 5,000 people in her audience within the first 36 hours. So you see this type of, virality, and I think it speaks to the overall focus of also, as a company, being willing to relinquish some control to your people and really allowing to engage with them in meaningful ways. Because this generation, both Gen Z and Gen Alpha, consider themselves the greatest storytellers. And so they want to be a part of a brand. They don't want to have a brand pitching to them. So I think that shift has created, a lot of changes internally for us and also externally of how do we really incorporate this into our operating system. Co-creation is not a tagline. It's not a marketing tactic. It really is how we are operating differently.
It sounds like a more resilient business is being created. Like, usually, like we're in the summer right now, and when I was in Atlas, we always think about
back to school starts in mid to late July or back to college, and how that goes will determine how the holiday season goes. I don't think that applies anymore. Just listening to you, like you have the ability to tap into major trends happening in real time on social media. It's almost like the complete retail playbook is being.
Absolutely. And that was really the impetus for why I chose to write the book, Co-Created Now, because we're at this very interesting point of inflection where the old playbook for retail is no longer valid. And the longevity of your brand depends more on the strength of your community than your ability to chase any individual trend.
For those leaders that are watching this and they're interested in the book and what we've done at PAXA, what's the one step they can take today to start turning around the company if it's not operating at the level they would like to see?
I would say two things, really. The first is the power of co-creation, which means no longer treating your customer like an audience, but treating them as a partner to build with. And that fundamental shift will shift internally all of your processes. And it will also shift your marketing and how you go to market with your product. The second, I would say, is insatiable curiosity of really continuing to dig as the customer continues to evolve. As there's so much advancements with technology and AI, I think curiosity around your consumer, really having and building relationships with them is more important than any data dashboard that you can see.
Around February last year, I said there's more lights in the Mag 7.
Right.
And I had this theme also in back